unfortunately now one of the greatest quarterbacks of all time in Patrick Mahomes going against Mr. Irrelevant. Remember, Brock Purdy was the last guy picked in the 2022 draft. You look at the salary difference between the two guys this year, Andrew. Patrick Mahomes making $59 million, and Brock Purdy not even making $1 million. But the NFL should be absolutely thrilled for their showcase in Vegas.
Okay, what about the ratings? If you were gonna make a prediction, how is this gonna rank?
I think that this will probably rank in the top 10. We have seen a decline over time with ratings, just a slight decline in ratings. What we haven't seen a decline of, Andrew, is the increase in the 30-second price of a commercial, which is going to be $7 million this year. But yeah, absolutely. I think that you're going to see a top 10 Super Bowl. And again, why wouldn't you? I think, Andrew, the other interesting piece of this is going to be the impact that Allegiant Airlines is going to see in terms of brand boost. You know, obviously, when you host a Super Bowl, Hive Enterprises in Los Angeles, they've done studies on this. 2 to 5 minutes of exposure during the Super Bowl is what the brand name partner of the stadium usually gets, but they're going to get probably over 500 minutes of exposure in the week leading up to the Super Bowl because of all the pre-game coverage on the ESPNs, the NFL networks, and the like.
Patrick, NFL must love this because of the Taylor Swift factor, but there have been a lot of questions as to whether or not she could make the game because she has a concert in Tokyo on February 10th, the day before the big game in Vegas. What are the odds, or how does that affect or impact ratings, whether she's there or not?
I doubt it's going to affect it, Becky, but you know, we're talking about sports betting, and so people will bet on anything. So I can just imagine that some odds makers are now going to have a betting line, will Taylor Swift make it to the Super Bowl? So I would love to see that betting line somewhere.
Okay, so can you tell us about, there's some new rules. Obviously, this is happening in Vegas this year. Some new rules about sports gambling, about gambling even, among other players, unrelated even to the game itself. What's happening?
Well, I mean, look, Andrew, ultimately, even though there's been more engagement, more company, or more, everyone's gambling more, but you still have to be concerned about the integrity of the sport. So every league is cracking down on what the players can and can't do, and they obviously want to be very restrictive, because you don't want to give this impression that, okay, if everyone else and more states are legalizing gambling and the engagement is greater, that can't seep into what the players are doing, because the last thing that any of these leagues want, including Roger Goodell, is compromising the integrity of these games. So I am all for being extremely strict in penalizing players that cross that line.
So they can't even play the slots, though, apparently.
Well, you know, again, you've got to crack down, and so I have no problem with the NFL and other leagues doing this.
What do you think the implications of this Keyshawn story are going to be, by the way? And he, of course, has been arrested for effectively gambling, potentially on his own games. This is when he was in college, though.
Well, again, you think that when this is brought to light, you would expect that this would have a stick effect on other players to make sure that there are penalties, there are consequences. It reminds me, Andrew, a little bit of name, image, and likeness. It seemed to be the wild, wild west the first few years. We're starting to see some schools get penalized and their collectives penalized for being too aggressive. So perhaps that's going to calm things down there. Hopefully, this is going to have a positive effect on curbing players' behavior.
Okay, betting line. Here's you have two bets you got to make. It's really a yes or no question. Bill Belichick, will he be coaching in 25?
No.
No, he does not return.
No, you know, I think he wants to return, but I think this last hiring cycle was extremely fascinating. So no, I don't think he's going to return.
Okay, and then my other one is going to be Netflix. For years and years and years, Netflix said never sports, never sports, never sports. And they've slowly crept closer and closer to sports, most recently last week getting into World Wrestling Entertainment, which of course they say is entertainment, not sports. When does Netflix actually get into real sports? And given the scale that Netflix has, it's the only one that actually can compete with linear. When do they get the Super Bowl?
I don't know if they get the Super Bowl anytime soon, but if Apple's getting in with Major League Soccer, once this wave of TV deals expires, expect Netflix to be involved in the bidding on the next wave of these contracts when they're up.
Okay, we'll save the tape. Patrick, thank you. Appreciate it.
Thanks, Andrew.
All right, when we come back this morning, we've got two big interviews in the next hour. First, GOP presidential candidate Nikki Haley will join us right here on the Squawk Set. And then FTC Chair Lena Khan will join us on her agency's new probe into AI investments by big tech firms. Squawk Box will be right back. Good morning. Wall Street awaiting earnings from big tech names and a decision by the Fed on interest rates. What investors need to know ahead of the big news. GOP presidential candidate Nikki Haley is vowing to stay in the Republican presidential primary race at least through Super Tuesday. She will join us live with her plan to beat former President Trump. Plus, an exclusive interview with FTC Chair Lena Khan on the inquiry of deals between big tech firms and AI companies. Yeah, you can think of a few that come to mind. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Becky Quick. Joe is off this morning. I want to show you futures. We're down on the Dow, about 21 points. We opened up right about now, but the S&P 500 up just marginally, a little over a point. NASDAQ up about 30 points this morning. Let's also show you treasuries, show you where the 10-year and the 2-year stand. Looking at the 10-year right now at 4.105. The 2-year sitting just at about 4.330. We've got a developing story this morning. 3 U.S. troops were killed in an attack by an unmanned aerial drone attack near the Syrian border over the weekend. At least 34 were wounded when the drone struck near their barracks early in the morning. President Biden blaming Iran-backed groups for that attack. U.S. forces have come under attack more than 150 times since the Hamas attack on Israel that took place on October 7th. You're looking at oil prices this morning higher after that attack. WTI crude sitting at just about 78.06, but the markets have been remarkably sanguine given just how much you think the risks in all of this have escalated.
Yeah, on the energy front and on the equities front, I think. Right now, let's talk a little bit more about those markets. They're going to be getting a healthy dose of earnings this week. Plus, they'll be paying close attention to what the Fed might say about a timeline for rate cuts at its policy meeting this week. Joining us right now is Joe Amato. He is Chief Investment Officer at Neuberger Berman, which has more than $460 billion in assets under management. Joe, speak to that point.
Right.
Energy markets have been incredibly calm. Equity markets have been incredibly calm, and yet the worries about escalation are pretty real if you talk to anybody who follows
I think the
policy.
resilience of markets were remarkable. You know, both last year in the face of a lot of tightening of financial conditions, and this year so far, because this weekend's events remind us the world's still a dangerous place. You've got two hot wars going on. You got a building Cold War. And at all the same time, we're trying to sort through things like earnings this week and a Fed meeting and a jobs report that come out later this week. So there's certainly lots going on. It's going to be an eventful week.
The idea of cash on the sidelines, you say that there's a record amount of that too, and that's kind of hard to believe given the run we've seen with the markets.
Particularly on the individual investor side, I think there seems to be still a big chunk of cash, and our advice to clients is to start putting that to work, because you're going to see a decline in rates at some point.
So
we can debate whether it's March.
There's going to be a better entry point.
We think that you should gradually put your money in as the Fed has now shifted gears significantly. I think that's very, very important in the context of keeping cash where you could have earned or were earning 5+%, and that's going to come down at some point, right? What the timing of that is, right? Still 50-50 for a March reduction, but at some point over the course of 24, we do expect rates to come down, and that's a reason to start putting that cash to work.
We had Roger Ferguson on, the former vice chair of the Fed, in the last hour, and his expectation is that you're going to hear Jay Powell really trying to walk a tightrope, which is to acknowledge the idea that inflation has come down pretty steadily, but to hold off the market's expectations for a rate cut as early as March.
I think it's sensible for him to do that. He can't deny the data, right? If you look at the 6-month average of PCE, it's less than 2%. So if you start looking at an inflation level there and policy rates at 5.5%, you've got real rates that are quite restricted. So it's going to be hard for him to fend it off too much, but I think he wants to maintain optionality, as I think any of us would if we were in that position.
If he's able to do that and kind of try and convince the markets, I guess that's the question. No matter what he says, will he be able to convince the markets that rate cuts aren't coming in March?
Well, I think the market's certainly going to listen to what Chair Powell has to say, but they're also going to look at the data points that are coming through. And the data is not one-sided. There's plenty of data points that are on both sides of an argument of a slowing. I mean, our own view is that we do expect the economy to slow in 24 off of a pretty robust level in 23. So, you're going to see some positive data points, you're going to see some challenging data points, and I think that allows him to balance that tight walk a bit more, right, given it's not necessarily a clear indication.
So do you think that's the big issue this week, or do you think the bigger issue is going to be the earnings front, especially with the 5 of the biggest technology names reporting this week?
Well, no one expects any movement in rates for the Fed meeting this week. I think the jobs report and earnings. So we've got a number of the mega cap technology stocks reporting this week.
Apple, Alphabet.
And as we know, they've held up the market, right?
Yeah.
The expectation first quarter earnings, or I should say fourth quarter earnings for those companies is they're going to be upwards to 50% in aggregate. The rest of the market, the other 490 whatever stocks, are down essentially 10% in the fourth quarter. So you blend it and you have flattish earnings. So the earnings of these companies are very important in keeping the market where it is.
Each of these companies has its own issues that the street's going to want to hear about. You've got Microsoft, Apple, Alphabet, Amazon, and Meta. And some of them are going to tell us a little bit more about the online advertising market, and that'll be something to be kind of behold. You've got questions about the cloud. You've got questions about AI and what kind of growth you can see from some of these companies. What are you kind of keying in on?
Well, I think there's a whole host of factors and idiosyncratic factors for each of those companies, so it's hard to make a general comment, but I think the The bottom line is you want to see continued strong earnings growth in those companies. That I think is necessary for the market to continue the rally we've seen so far. And the rally, what we've seen so far this year is really a bit of reverting back to where we were pre-strong year-end rally, because you've seen the tech sector up 6%, the market's overall up about 2.5%, but you've got small cap down 2.5%. So you've got, once again, a very narrow performance in the market. So strong earnings by these companies, I think, is going to be critical.
So where are you telling investors to put their money right now? Are you looking at areas like small cap where they're still down? Or are you looking at some of the indexes where we're at all-time highs?
Yeah, I think across the spectrum of assets, we think the fixed income story in 24 is frankly a bit simpler than the equity story. I think in the equity story, you've got slowing nominal growth. So last year you had, call it 7.5% nominal growth, and you had essentially flat earnings. This year you've got probably 4 to 5 nominal growth, probably more closer to 4, and you expect 12% earnings growth. So I think earnings are a little bit more complex this year, whereas taking cash and moving up the duration curve to start capturing some of the higher rates, I think is an important first step in putting more risk on, as we've seen the shift from the Fed jamming on the brake, keeping their foot on the brake, to now lessening up, which I think is an important segue for clients.
So the Fed really is driving all of this. It's what the Fed's doing that's going to...
Certainly, given where policy has been over the last number of years, the Fed is in the driver's seat for sure.
Joe, I want to thank you for coming in today.
Thank you. Thanks for having me.
Nice to see you.
Yeah.
Coming up after this, a lot more on squash. The Biden administration hitting pause on approving new LNG export facilities. The CEO of American Petroleum Institute is going to join us with his thoughts on what the move means for the industry and global competitors. And then presidential hopeful Nikki Haley is going to join us to talk about the state of the GOP, China policy, and so much more. We're coming right back.
www.educator.com/TV.
Welcome back to Squawk Box Live Shot of the White House this morning. We spoke to Energy Secretary Jennifer Granholm on Friday about the administration's plan to pause LNG export approvals.
Nothing will change in terms of what is currently being exported or what is currently under construction. This is just a pause so that we can have an assessment that is rationally based and then apply that assessment to those projects that are in the queue.
Our next guest says that move is a win for Russia and a loss for American allies, jobs, and climate progress. Joining us right now is the president and CEO of the American Petroleum Institute, Mike Summers. Good morning to you. We spoke to her last week, as you saw, about this issue. A lot of folks in the industry have been critical of this decision and have suggested that this does very little and, in fact, may ultimately make things turn around. Have you had conversations with her about this?
We've had multiple conversations with the administration about this, and we're very concerned about this announcement. As you know, investment goes where it's welcome. And unfortunately, the administration's decision, I think, is going to push investment away from the United States into other countries. This is a decision that's bad for consumers, it's bad for American national security, and it's certainly bad for American allies.
Let me ask you something, which is, and Brian Sullivan said this on Friday, if you just look at how much LNG we've begun to export and produce, frankly, in the United States, it is a remarkable accomplishment. I mean, I think beyond anybody's expectation in terms of how successful we have been at this. And we have done it at a remarkable accelerated speed. I think you'd agree with that. Is there any argument that you could come up with that says, you know what, we should figure out how we're doing this, what's the right strategic approach to this, how we should think about exports, all of that? I mean, is there any part of you that says this has gone so fast, so quickly, that a pause of some sort would be necessary? Or do you believe a study is even necessary?
Well, let's put some numbers on it, Andrew. The fact of the matter is that the United States exported more LNG than it has in the history of time in 2023, and natural gas prices actually went down 63%. So the fact that the administration is putting this in economic terms, when we all know that this was a political decision to appease a part of their political party's base in an election year, that is the real reason why they're doing this. The benefits to American LNG are great. From an environmental perspective, we're exporting American environmental progress to the rest of the world. From a national security perspective, it allows America to present American soft power to the rest of the world, to provide them with the energy that they need during times of need. And finally, it's good for American consumers, because when we have more markets, that means there's lower prices for American consumers as well, because we have more production. So the implications of this, I think, could be far and wide. And unfortunately, I don't think the administration is thinking about them right now.
Can I ask you a somewhat maybe political question? Because I can see two sides of everything you just said. One side, you could say, is actually that this administration, or at least under this administration, to the extent that there's a perception that there has been a difficulty in the energy markets, and that the administration has actually made it harder to produce gas and oil and energy and the sort, has actually been the opposite. Given the numbers you just suggested being at record highs, that's a remarkable thing. You'd think that's a good thing. On the critical side, you'd say now here they are trying to slow it down. How do you look at that? Both of those two ideas.
The United States is now producing 13.3 million barrels of oil every single day. That's the highest level we've ever been at. But unfortunately, that's despite Biden administration policies, not because of Biden administration policies. We're going to go through a year, for example, this year in 2024, where we will have zero lease sales in the Gulf of Mexico. We're down in terms of leasing on federal lands by 96%. They've taken over 500,000 acres offline in the state of Alaska at the National Petroleum Refuge. Most of this new development is actually on private lands, not on public lands. And unfortunately, we still get 25% of American production on public lands and in public waters. So this administration continues to try to tap the brakes on American energy production.
So let me just ask you though, where would we be though? Let's just say that you're 100% right. Where would we be if you said this is in spite of the administration. Where would we be if the administration went along with your goals? What would the market look like? How different would it be, given that you just said that we're at historical highs in terms of what we've been able to do?
Well, as you know, there's quite a lag in terms of production on federal lands and in federal waters in particular. And in fact, there's some, at least in the Gulf of Mexico, that's been operating since the Reagan administration. But those investments aren't being made today, which means that we're sowing the seeds for an energy crisis in the future because we're not making those investments here in the United States. And it's not that those investments aren't being made. It's just that they're not being made here. We're going to see continued production throughout the world because world energy demands are going to continue to grow. In fact, IEA suggests that energy demands are going to go up by 50% by 2050 because we're going to have 2 billion more people. And our kids are going to be using a lot more electricity than we use. So we need to get it from the United States, where it's produced safest and in the most environmentally responsible manner. I'm here in Europe today. Europeans who have depended on American LNG over the course of the last few years because of the Russian invasion are scared to death about what the future holds if this administration decision on LNG goes forward.
Mike, final question for you. One of the questions I asked Jennifer Granholm was the idea of can you walk and chew gum at the same time, which is to say, could you conduct this study, if you will, at the same time that you leave some of these things open, so you don't take a pause per se, but then at the end of the study, perhaps you do make some decisions, and maybe those would be hard decisions. Would you support that?
Well, we certainly think they can walk and chew gum at the same time. There's almost as much natural gas waiting approval at the Department of Energy as the country of India uses on a yearly basis. That's how much natural gas is being blocked for development at the Department of Energy. So yeah, we would welcome the opportunity to continue studying this with the Department of Energy, but we can't stand in the way of this important permitting process that has to get done in a timely manner if you want these investment decisions to actually be made in the Gulf Coast, in Louisiana and Texas, and in other places that want liquefied natural gas infrastructure built.
We're over time, but let me just ask you one last climate question. Is there any part of you, given what you do for a living, that says, you know what, maybe you'd say it in a perfect world, and the world's not perfect, but in a perfect world, that you'd like to have less fossil fuels out there? You agree with that, or you don't agree with that?
As you know, we're going to need a lot more oil and gas into the future under all climate scenarios. In fact, we expect it to be the source of 50% of the world's energy in 2050, even if every country were to meet its Paris climate goals. So we're going to need more oil and natural gas, not less. And we think it should come from the United States of America, where we produce it in the cleanest way possible, and in a way that is safest in the world as well.
Mike, appreciate your perspective on all this. Thank you. When we come back, Don Chu with a look at this morning's top movers. We're coming right back.
CNBC.
Well, let's get right over to Dom Chu. He's got a look at this morning's pre-market movers. Dom, how you doing?
I'm doing okay. Monday morning, it was
After
a
last night.
it was a late night
Sorry.
for me. I was so amped up, I
was
couldn't
thinking
get to
about
sleep.
you. I was thinking about you.
And I don't know if you stayed up to watch the whole thing, but it was.
I did, because I couldn't put it down. I tried to walk away, and it turned out to be right to the very end for that game. And I was thinking of you the whole time, the Niners. Sorry.
Becky, listen, I think America really wanted, I think generally speaking, the story for the Detroit Lions to keep going. As a Niners fan, obviously I'm very happy about what happened, but I will say this, I'm a little bit worse for the wear, but hopefully, you know, the Super Bowl kind of off in the distance, we can kind of maybe calm things down for maybe a couple of weeks. But anyway, we'll start things off because I am trying to get back in the swing of things here with the friendly skies or otherwise. Across the Atlantic, we are seeing shares of European budget airline Ryanair, which are currently down fractionally right now off the kind of pre-market lows. The U.S. listed depository shares are just down about 0.75%. It reported profits that fell shy of analyst consensus estimates. It also lowered its full-year profit forecast due in part to some travel booking operators no longer selling some of their flights, which led the company to need to cut airfares to move ticket inventory. So Ryanair, at least for now, down fractionally for those, again, U.S.-listed shares. Also in the skies, on the more domestic and friendlier front, American Airlines is up roughly 1.5%, just around 150,000 shares of volume. Getting some help from analysts at Citigroup, they've upgraded the shares to a buy from a prior neutral. They've also upped the target price to $20 from 14. They cited things like a continued focus on paying down debt and an ability to capitalize on trends in demand for premium service cabin offerings, that sort of thing. So American Airlines up 1.5%. And we'll cap things off with a check on the media business and shares of Warner Brothers Discovery, which are currently down about 1.75%, over 50,000 shares of volume. The media conglomerate behind key properties like its namesake movie studio, also network, also other brands like HBO, CNN, and streaming service Max, is getting downgraded by analysts at Wells Fargo to an equal weight from overweight. The target price gets cut to $12 from 16. They cited things like tougher earnings growth trends, limited multiple expansion opportunities, and less likely M&A opportunities as well. So Warner Brothers Discovery, Andrew, down 1.75%. I'm going to go recover a little bit more, and I'll send things back over to you.
Thank you, sir. Good luck getting over it all. Not getting over it all. You should be so excited.
Lack of sleep.
Exactly. GOP presidential nominee Nikki Haley is going to join us right after the break. And then FTC Chair Lena Khan. It's a big morning. She's going to join us for a wide-ranging interview as well. Squawk Box returning right after this. Welcome back to Squawk Box this morning. Take a look at the futures. Dow off just marginally. It's gotten a little bit better this morning, off about 6 points right now. NASDAQ up about 36 points. The S&P 500 up about 3 points.
She has lost to former President Trump in both the Iowa and the New Hampshire primaries, the Iowa caucuses and the New Hampshire primary. But former South Carolina Governor Nikki Haley vowing to keep going in the race to become the Republican presidential candidate. Joining us right now is Nikki Haley herself. Thank you for being here.
Of course.
Governor, Ambassador. I guess the first question is, how do you do it? Because the path to get there has become a lot more difficult.
You know, it's interesting because you say that I lost in New Hampshire. It's not really good for an incumbent not to get 43% of the vote.
Fair.
You know, you look at the fact that the delegate count, he has 32, I have 17. It takes 1,215 to get it. And so, you know, a lot of the reason that I am for term limits is the same reason that I will say kind of to the media class and the political class is they're so cynical. You know, they've forgotten what it's like to have good things happen and to be hopeful and to be optimistic. This is not over. It's far from over. And what I'll tell you is, look, he has been literally unhinged ever since I got 43% of the vote in New Hampshire. And so I know what we're doing is working.
Yeah,
but I
the
also
attacks
know
have
that we
gotten
had
much
hundreds of
more-
people. I'm sorry?
The attacks have gotten much more directed and much tougher coming at you.
Yeah, but that means I'm doing well. I
No,
mean, I don't.
From him, I mean.
Yeah, no, I mean, I know him well. And I know that when he feels vulnerable, when he feels threatened, he lashes out. And you saw the night of the New Hampshire election, he literally had a temper tantrum on stage. And it's because he knew that he had told everybody we were going to be 30 points down, and we weren't. And we came in at 43%, and he just lost his mind over it.
But in order to win, you have to win some states. Right now, the polls have you down sharply in your own home state. So what states do you win, and how do you kind of take back the narrative?
Well, I think you look at, we gained 25 points in the last 3 weeks of New Hampshire. So we've got a month until South Carolina. So we're going to keep building. There haven't been any current polls, but we're going to keep doing it. We had 1,500 people in the upstate of South Carolina. We had 1,000 people in Charleston. Last night we had several hundred in the PD. People are out there excited. They know what my record is, but more than that, they don't want the chaos anymore. They see how President Trump acted. Just think in the last 48 hours what he did. He has a temper tantrum and talks about revenge. Then the next day, he goes and says, anybody that supports her is not going to be part of my MAGA group. So literally everybody that votes for me and everybody that donates for me can't be part of his club. You can't win a presidency like that. And then he goes and pushes the RNC to name him the nominee. All of that happened. I appreciate it because we raised $4 million in the process, but it goes to show this is who he is. This is what he does.
Can I ask you about, and maybe it's threading a needle, I don't know, maybe there's no needle to thread anymore, which is to say he's been much more critical of you, but you arguably have now, and maybe it's because you have to push back, have had to be more critical of him, and how you think about sort of how, you know, tonally even talking about him, because at the same time you look at the Chris Christies of the world who made their campaign about going after him, whereas you, I would argue, up until maybe even a couple of weeks ago, were trying to avoid that part of the conversation. I don't, maybe you'll disagree with my assessment.
Well, there were 14 people in the race.
Right.
And so my job is to get one fella out at a time. And
Right.
so then we got 12 fellas out, and now it's a two-person race. So now, of course, I'm going to be going against him. When there were 14 in, it didn't make sense for me to do that. I had others I had to get out of the way. So now you look at it, and now I'm telling the truth about him. I mean, the truth of the fact is we have to seriously look. This is a man that put us $8 trillion in debt in just 4 years. Think about that. This is a man who praised China's President Xi a dozen times after China gave us COVID. This is a man who now wants to go and put 10% tariffs across the board, raising taxes on every single American. Think about that for a second. That's what we're talking about. This is a man who continues to go and talk about himself and distracted with all the other things. But he, that night in New Hampshire, after the court case, he's never once talked about the American people. He's never once talked about how we're going to get the country back on track.
What would you do differently in terms of the spending? Because Donald Trump didn't really spend like a Republican. He did things that gave money to a lot of places. And what would you do differently? Which of those programs would you pare back?
You know, he didn't do anything that much different than Biden. He paid off people to get votes. You know, we saw it when he gave out the COVID stimulus checks, the same way we see Biden going and throwing out all this money. What I would do different is everything you do with the economy is it should be how to get people less dependent on government. You look at the economy under Trump. Yes, it was good, but at what cost? Look at the economy now under Biden. Everybody's talking about how good it is, but look at how government's grown. That's what you don't want.
He did those things to buy votes, and it was effective.
Absolutely. But look, it's dangerous too. I'm not going to do things to buy votes. I'm going to be honest with the American people. We've got to let the American people know that what Donald Trump's about to do to you is going to raise every household expense by $2,600 a year. They're going to raise the cost of anything from baby strollers to appliances under Donald Trump. Middle-class families can't afford that.
Let me ask you two policy questions that are in the news right now. One is immigration and what's happening at the border. There was a sense, maybe, that there could be some kind of deal made on the border. It sounds like Mitch McConnell is now saying that he's hearing effectively from President Trump, don't make a deal. It is better politically not to make a deal because it would better effectively the chances of President Trump. By the way, it might better your chances as well. I don't know. So where do you stand on that?
Secure that border. I don't care what political chances it does. Do the right thing. This is not the time to sit there and wait until November when you've got people coming through. The thing is, when you look at the border deal, and I'm not sure of all the details because it's been drip, drip, the one thing that causes me pause is that they don't have the Remain in Mexico policy. You should not want any illegal immigrant to step foot on U.S. soil, period. That has got to stop.
Would you do nothing rather than the perfect? Because that's been the argument.
I think that Republicans and Democrats are to blame on this. They need to get in a room and figure this out and not come out until they finish this. That's the problem, is they can do better.
But do you think a deal is worse for whoever actually becomes the Republican nominee, which is to say that right now there's a lot of criticism against this administration given what's happening at the border. If a deal is reached, does Biden, get the credit for that?
I mean, it's a shame because I don't think anybody should get credit. They should be embarrassed. What has Congress done? What has the president done on the border? You haven't seen anything. So now that you do this, you want us to praise you for doing the right thing that you should have done years ago? Like, why are we even talking about that? The problem in D.C., the problem with politics is they all want to know who's going to get the credit and who's going to get the blame. And the American people fall to the wayside because of it. Start calling things like they are. That's why I've always spoken in hard truths. You may not like what I say, but I'm always going to tell you the truth. I think that's
But just
important.
back to the Senate bill, would you take it even if it doesn't have the Remain in Mexico policy? Because that's been the argument, is don't let the perfect be the enemy of the good. And that's an age-old conversation.
But you know what that means. If they pass this, they'll leave it alone and they won't try and fix it more. We can't allow people to come across the border, period. You've got people on the terrorist watch list. These are not people getting vetted. We can't be okay with that. So I know people are saying, oh, but you've got a little something. Yeah. No. This is a national security threat. America's acting like it's September 10th. We've got to remember what September 12th felt like.
Talking about national security threats, 3 troops killed over the weekend and possibly 25 or 30 others injured on the border of Jordan and Syria. What would you be doing right about now in terms of what's happening in the Middle East? Would we be going to war? I mean,
No, the goal is always to prevent war. What makes me angry is my husband's serving overseas. Military families want to know their loved ones are protected. Biden didn't protect them. And there have been 160 strikes. There shouldn't have been 1. There shouldn't have been 2. And you've got 160 and you've got dozens injured. We lost 3 heroes because Biden was scared of his own shadow. That's a truth.
What would that mean in practice? When you say you said Biden didn't do something, what was that something that he should have been doing?
The very first strike that hit, you punch and you punch back hard. What they should be doing is going after every ounce of production of those missiles. Wherever those missiles are, you take that out. You keep doing. You take out the training sites. You go and you.
But does that risk escalating a war?
Does that mean striking Iran directly?
It means striking the resources that are allowing them to hurt our troops. That's what you're doing. It's not going after
But they're backed by Iran. Iran says that they're not declaring the shots, but Iran's training them. They're providing intelligence. They're providing weapons.
And this goes
there would be no Hamas without Iran, Hezbollah without Iran, or Houthis without Iran.
But
yes,
striking Iran is a really big escalation. And
You go after wherever those missiles are, the production, wherever it is in Iraq and Syria, you take that out. Wherever it is in Lebanon that they're doing that, you take that out. You go after the leaders making the decisions. It's not after Iran, the country. It's after the people who are making these decisions. When Soleimani was assassinated, it sent a chill up their spine. They literally, it took their breath out. You have to be strategic. It's not starting war. It's actually preventing war.
But do you think we can accomplish that without escalating to the point of war? I mean, there are some people who look at your candidacy and say, she's very hawkish. She's very hawkish, and she could bring us to a war.
And why would I do that when my husband would be fighting in one? That's what you don't want. You actually prevent war. It's not being hawkish. What it is it's being smart. The problem that we've had is that everybody waits for it to get bad before they do something about it. Where did this all start? None of this would have started had Biden not lifted the sanctions on Iran. You allowed billions of dollars to go in from China importing their oil. And what did that do? That gave money to the proxies to get these missiles, to do these things, to do the training, to invade Israel. All of that happened because they got money. And Biden still to this second hasn't increased sanctions on Iran. That's lunacy, because you're just continuing to pay them for trying to now kill our soldiers. There are things we can do that are not war. But not having common sense, there's no excuse for that. And this is something where we've seen him do it with Iran. We saw him do it with Afghanistan. We're seeing him do it with Russia and Ukraine. You have to be tough. That doesn't mean starting a war. That actually means preventing war. But when countries see that you're tough and you're serious, they back off. By nature, they back off. Iran knows they can't beat America. They've always known that. But as long as they smell blood in the water, they're going to keep doing this.
Governor Haley, want to thank you for coming by today.
Thanks so much. Go to NikkiHaley.com. We're going to finish this.
It's great to see you. Appreciate it very, very much. When we come back, a lot more right here on Squawk Box. We've got an exclusive interview with FTC Chair Melina Khan, where you can get her thoughts on big tech and some of the deals made with AI companies. She just announced a big study, effort that some people are describing as an investigation. We'll talk about that as we head to a break. A look at futures this morning ahead of what is going to be a very busy week for earnings. We got the Dow off about 13 points, NASDAQ up about 22 points, the S&P 500 up about a point. Squawk Box rolls on after this.
Coming up, an exclusive interview with FTC Chair Lina Khan. She will join us right after this break. Right now, though, as we head to that break, let's take a look at oil prices after the Iranian-linked drone strike that killed 3 U.S. troops over the weekend. You're going to see right now, WTI still below $80 a barrel. This is happening as these tensions in the Middle East are rising. Squawk Box will be right back.
Welcome back to Squawk Box this morning. The Federal Trade Commission looking into recent deals made between big tech giants Microsoft, Alphabet, Amazon with artificial intelligence companies like OpenAI and Anthropic. The agency is saying it's going to scrutinize, quote, partnerships and investments to better understand their impact on the competitive landscape. Joining us right now in an exclusive interview is FTC Chair Lina Khan, and we're thrilled to have you at the table this morning. Nice to see you.
Good to see you. Thanks for having me.
So help us understand how you're looking at this. These deals, if you will, are not classic mergers, if you will. These are effectively investments, but maybe they look a little bit like mergers to you.
So we are looking closely at the strategic investments and partnerships between Microsoft and OpenAI, Alphabet, Amazon, and Anthropic. And the goal here is really to look under the hood and understand precisely what is the nature of the relationship here, what are the deal terms, is there exclusivity that's expected or required, is there going to be privileged access, are there rights to board seats or other mechanisms to be exerting control or influence over the business strategy? And just to step back, I want to explain why we're doing this. Right, at this moment, AI is a nascent technology that could catalyze enormous growth and innovation. There is enormous opportunity here for a vibrant market, but we also see risk. We see risk of consolidation. We see risk of monopolization. We're already hearing some of the classic national champion arguments, the idea that it's in somehow America's national interest to be protecting monopolies. And unfortunately, we've been down that road before. We see very clearly now with Boeing some of the dangers of that strategy, where you had United CEO Scott Kirby draw a straight line between the 1997 merger between Boeing and McDonnell Douglas and some of the problems we're seeing now with planes falling apart in the sky. So we need to be careful.
Part of the advance, and frankly, the advance that the U.S. companies, OpenAI, Anthropic, and the likes have had, is the scale of capital that they've been able to access. So one of the things that AI requires more than anything else is literally just server farms, and it is super expensive, billions and billions of dollars. And effectively, as you know, OpenAI was not for profit. It effectively needed the money ostensibly from Microsoft, but the question is, are there private markets or other money that you think that these companies could have accessed rather than doing it with the traditional folks that are probably most incentivized to provide those funds?
Look, I think you're absolutely right that these markets and some of these layers require enormous scale, be it at the compute level, be it at the data level. I think we just need to be very wary when you have some of the existing incumbents that are threatened by this moment of technological disruption, that they could be using this moment to try to protect their moats and protect their monopolies, rather than allow the opportunity that this technology presents to fully flourish.
Look, the weekend that Sam Altman left OpenAI and then came back in, and everything we heard from that, I mean, it did seem like a possibility that Microsoft was going to get basically a stealth takeover of Sam, his team, all of that information. That did make me look at it a little differently. Have you figured out what happened? Is that what kind of set things off for you?
So we've been watching this space quite closely. As a general matter, we launched an inquiry into cloud computing. That's another layer where you see significant amount of concentration. There was a lot of commentary in response to that incident, which I think really called into question, what is the relationship here? Is this really a passive investment, or is something more going on? And I think anytime you have control or influence being exercised through some of these partnerships, it's something that
seats on the board now.
Right, and we're a competition enforcer, and so it could have implications for competition, and so we want to understand what's going on.
Interestingly, you called this a study and not an inquiry or investigation. Why did you do that?
We have a particular authority that lets us do market-wide studies rather than a law enforcement investigation into a particular target. So we thought, given where we are right now, it was more appropriate to take a holistic look.
Does that change the dynamic, though, with which you have ability to subpoena or access internal emails and other types of information that you might want to get access to better understand what's really happening under the hood?
No, the information requests we sent have the force of law. We can enforce them in court if the companies defy them. So from that perspective, it's the same.
Do you use these services yourself?
I have used them in the past. They're pretty remarkable in a whole set of ways.
How do you use them? I mean, do you use them to send emails? I mean, what are you doing?
I used one to contest a medical bill. Typed in my general complaint, and it spat out back a response. So it was useful.
You have not used one yet to see whether you could produce a suit against one of these companies?
We haven't.
I thought about doing that this morning before you got here. I have not done that yet, but that's on my list.
I know some lawyers have gotten into trouble with courts and judges, fake citations and that sort of thing. So you got to be careful.
Ro Khanna was here, and he said that he might push for everyone around OpenAI and some of these other artificial intelligence companies and projects to try and find out what really happened that weekend of the OpenAI Sam Altman battle, might push to try and find out what the relationships were with some of these things. Which agency, is it Congress, you think will have more power to write laws and do some of these things? Do you think it's the FTC that will be able to dig deeper and break down some of these relationships? Who's going to have the authority and who's, frankly, is going to have the ability to get things done?
Yeah, I mean, as a general matter, this is really an all-hands-on-deck kind of moment, and we truly see interest across the federal government. The White House the other month put out an executive order on artificial intelligence, really, charging agencies across the board to bring all of their authorities to bear to make sure that we're guarding against some of the risks and dangers of this technology and really safeguarding the opportunities, including on the competition front. And so we're already seeing great intellectual leadership. now is the time for the policy follow-on.
I know you've said it's the kind of the standard playbook to say nationalistically we need to get ahead, and that's why you protect some of the monopolies. But they do have a point in that China is pushing so hard and so fast on AI. There is a concern that you don't want to get left behind as American. And as Andrew pointed out, this requires some really deep pockets, some deep spending. China's government is spending a lot of money on this. What happens if American enterprise is not doing the same?
It's a really good question, and we've heard these arguments before, right? I mean, go back several decades when the Antitrust Division was investigating AT&T. You heard a lot of arguments about how we shouldn't break up AT&T because we needed them to allow us to compete globally. We, at that moment, instead chose competition. We doubled down, we brought the suit, we required AT&T to open up its patent vault. We ended up breaking them up. That ended up feeding huge amounts of innovation. Countries at that moment that instead doubled down to protect their monopolies, unfortunately got left behind.
Talking about opening up moats or things like that, I wanted to ask you about something that took place last week. I don't know if you saw Apple announcing that it's going to change the way its App Store works in Europe to comply with the new EU rules, effectively allowing what they call side doors, so software that's not in the App Store. You can create your own App Store, all sorts of other things. However, they've created all sorts of other charges and things that folks like Daniel Ek, who runs Spotify, are now complaining about. I'm curious what you thought of what they announced, and also whether you think that you are going to be helping the EU in terms of how American companies comply with that law.
So look, it's a really interesting moment as we see some of these rules come into effect. I think we're going to see firsthand what about it works, what about it doesn't work. We're really focused on U.S. enforcement, U.S. policymaking. As you know, Congress has been considering some analogous rules and policies that haven't yet gone into effect. And so if we in fact see that European citizens are benefiting from competition in ways that American citizens and companies are not, I think that could create additional incentive to move forward here.
Other headline, I don't know if you saw, I'm sure you did, Microsoft Activision announcing that they're going to be firing 1,900 people. Elizabeth Warren came out and said, here's a reason why this deal should never have been approved in the first place. You obviously didn't want it to be approved in the first place. How much should your job be about protecting employees' jobs in terms of how you think about a merger? But second, maybe in this specific case, we're now seeing layoffs in all sorts of parts of the technology stack and to other companies in the industry. And so when you look at something like that, do you say to yourself, that's a function of the deal itself? Do you say that would have happened anyway? Do you say, well, maybe it wouldn't have been 1,900 people, it might have been 800 people? Tell me what you think when you read a headline like that.
Yeah, I mean, first of all, let me say my heart really goes out to the 1,900 employees that got a pink slip last week. Unfortunately, from where I sit, this is not all too uncommon. After these mega mergers, you often see layoffs. From our perspective, as an antitrust enforcer, we're supposed to protect competition in all markets. That includes labor markets. I think one of the things to think about is, these 1,900 employees that were laid off, there could be among them the next big game developer, right? What does the market now look like for their employment? I mean, over the last few years, through these waves of acquisitions, you've had a lot of the independent studios gobbled up. And just in terms of getting your idea to market, there are fewer and fewer pathways. And so that's bad for the workers, but it's ultimately also bad for consumers and
but
for
you don't
the
think
market
that one of
as a
those
whole.
people who gets laid off, hopefully, that you think is super talented to the extent that they have this sort of genius idea in their head, can't go find a venture capitalist or some other kind of capital, create their game, and then frankly get gobbled up all over again by somebody else, and that's a sort of fabulous version of capitalism if it works that way?
Maybe, but in order for that to happen, they have to get their video game to market, right? What are the pathways to doing that? You increasingly now have a very small number of walled gardens, and so the big question is going to be, is that independent gamer going to be able to get their game in front of players in the first instance, right? And so I think as you've seen the shift from a more independent model where you have multiple pathways to reach gamers to instead now increasingly these, two walled gardens, are you going to be able to get into the walled garden? Are they going to have an interest to let you in? I think these are some of the big questions.
Lena Khan, thank you for being here this morning. Went through a lot of stuff. This is very, very helpful. Thank you.
Thanks.
We're coming right back after this.
Educator.co.
Good morning. A big week for markets and the economy kicking off. It's the busiest stretch for corporate earnings, and Friday bringing the next jobs report, critical for the Fed and its calculations on interest rates. President Biden vowing to respond after 3 U.S. troops were killed in a drone strike over the weekend. We're going to speak with Senator Armed Services Committee member Senator Mark Wayne Mullen, and a key voice in the crypto community joins us live. Introducing Harvard's Chris Dixon will weigh in on everything from the new spot Bitcoin ETF to the downfall of some of the titans in this sector. The final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is off today. Let's take a quick look at what's been happening with U.S. equity futures. On Friday, you had the Dow closing at yet another high. S&P and the NASDAQ both pulled back. That was ending what had been a 6-day winning streak to that point. This morning, the S&P is flat, just about as flat as you can possibly get. Dow futures are down by about 21 points. NASDAQ futures indicated up by about 21 points. We've got a big Fed decision coming this week, and that's going to be very closely watched to hear what, not only what they decide, but what they say and what Jay Powell has to say afterwards. Treasury markets, in the meantime, ahead of all of that, have seen some yields pulling back a little bit. This has to do not only with awaiting the Fed, but also some of the geopolitical concerns that really heightened this weekend in the Middle East. The 10-year note right now yielding 4.1%. The 2-year is at 4.33%. And we will continue to watch. We've also got a lot of earnings this week, too.
Let's get you up to date on some of the top business stories that we're watching. A court in Hong Kong ordering the liquidation of China Evergrande. It's a Chinese property development giant that's gotten caught up in the country's debt crisis. Shows that Evergrande halted in Hong Kong after falling more than 20%. Evergrande facing more than $300 billion in liabilities. It defaulted in 2021, has had announced an offshore debt restructuring program last month, but lots of questions about what this means for the rest of the real estate business in China. Meantime, we're watching shares of Germany's Bayer. They're down after the company ordered to pay more than $2 billion in a case related to its weed killer Roundup. On Friday, a Philadelphia jury awarded that sum to a man who claimed he developed cancer from exposure to the product. That amount likely to come down in an appeal, which the company says it will pursue. Meantime, shares of SoFi moving higher after their fourth quarter report, earning of 2 cents a share. The street had been expecting break-even adjusted net revenue coming in at $594.2 million. That topped estimates of $571.8. SoFi expecting to be profitable on a GAAP basis, it says now in the first quarter. And for the full year, the company expects GAAP earnings of 7 to 8 cents. The street looking for 5 cents, so another beat there.
Let's get back to the broader markets and bring in Mike Santoli. He has been looking at whether investors have been overpaying for higher quality companies. I read your column over the weekend, Mike, and I thought it was the perfect analogy, just the idea of some of these high-quality names kind of being like beachfront property.
Yeah, exactly. I mean, it basically is, there's a scarcity value, always in demand, prone to getting overpriced. Sometimes you have to absorb the vulnerability to a storm. And it's a big theme running through this market for a while, the willingness to pay up for the best companies. Well, what defines quality? Well, it's great balance sheets, predictable earnings, high profit margins. We know the story. That's one of the big reasons that the S&P 500 has gotten to a 20 times forward earnings level, because their perception of the reliability of the biggest weights in the index. And in fact, the index itself has really become a higher quality index and less cyclical over time. I think the market's ability to embrace good economic news, the idea that the Fed is looking for a chance to ease, the idea that big tech earnings are going to substantiate the earnings path for this year, all of it is fed into this market. We'll see if it's culminating this week. It's going to get tested this week for sure. Now, take a look at an ETF that tracks the quality factor, QUAL. There's several of these. This is one of the benchmark ones, the iShare Quality ETF. Over the last year, exactly a 20 percentage point advantage over the equal weighted S&P. So clearly, this has been where the action is. Now, it's easy to say, well, that's just a magnificent Magnificent Seven. You know, Microsoft, Apple, they're all in there, Alphabet. But not only is it the big tech stocks, take a look at within other sectors, it's the quality representatives, the ones that are most reliable and therefore maybe the most overpriced, are also trading at a huge premium. So here you have Costco up about 40%. The XRT, that's the yellow line, basically flat over the last year. JP Morgan versus the other banks. So this has been a tendency within the markets. It can get overdone at times. The one thing I'll say, though, is it also reflects a bit of defensiveness in the market. If we had greater faith in the durability, the economic expansion, you would probably see less of a premium on quality. So it's, to me, not so much giddy, speculative, people thinking that, you know, the sky's the limit for these companies. It's also a little bit of not trusting the rest of the market, Becky.
Yeah, it's timing. I mean, beachfront property looks a lot more appealing in the spring as you head into the summer than it does in the middle of the winter. Mike, we had Joe Amato on earlier this morning, and one thing he pointed out that I keep kind of kicking around in my head is just this idea that there's a lot of cash on the sidelines now, still from individual. I mean, still a lot of it coming from individual investors, cash or cash equivalents. If you're looking at how much more you've been getting paid, if you're looking at treasuries and other places, if that starts to come down as the Fed cuts rates, that's going to be a lot of money moving out of those securities, maybe looking for better returns in the markets too. And that seems like a little bit of a tough flood or tide, I guess, if we want to stick with this analogy, to fight.
Yeah, I agree that if it somehow did make its way quickly into stocks, that you'd see overall, risk appetites rising. I'm a little bit reluctant to sort of put a lot of weight on the cash on the sidelines argument, to be honest with you. If you look at the 90s, cash levels went up along with the market. And all those, that cash there that's sitting there, $6 trillion in money markets, whatever it is, $2.5 trillion of retail directly. It just, a lot of it's replacing bank deposits. A lot of it's going to go into bonds. It's not going to go right to stocks. Also, we don't have to worry about it. As long as people don't sell their stocks because they're worried about the economy, the market can do fine without sort of tracking exactly where the dollars are coming from and going to. So I guess it's a sort of a psychological cushion, maybe a financial cushion, but I think there are other reasons to feel like the market can do okay instead of, hey, people are going to get scared out of cash.
Okay. Mike, thank you. We'll see you later.
Okay, let's talk more about the markets right now as we get set for a big week of earnings. Joining us right now is Ed Yardeni. He's the president of Yardeni Research. Good morning to you.
Good morning.
We've been debating what the Fed's going to do. We've also been debating how some of these earnings are going to turn out, though I think people are a little more optimistic than they had been 2 weeks ago. Where are you?
Well, I've been consistently optimistic, actually, about this bull market that started October 27th of 2022. So far, so good. I think we're getting a little bit stretched. Need to have some consolidation. But earnings, I think, are going to be fine, especially for the quality names that Mike just went through. And at the same time, we've got some other issues that are becoming maybe more relevant, and that's the ongoing conflict in the Middle East. And of course, the Fed has to deal with these issues just the way investors do.
So given your optimism, layer on the Middle East, it seems like the market is taking it all in stride. Should it be?
Yeah, I think that's absolutely correct. I keep watching the price of oil, and it has come up somewhat. But there must be a tremendous amount of oil out there available for all sorts of different channels. At the same time, it's important to realize that this notion that the U.S. had to have a recession to bring inflation down turns out to be incorrect. What really happened is China has had a recession, a property-led recession, and Europe's been in a recession, so the demand for oil has been weak. And so that's offset some of these Middle Eastern concerns.
When you think about what the Fed is going to do, how important is your optimistic take to the idea that the Fed is going to cut potentially in March? Is March too early?
Yeah, I think I'm a contrarian on this issue. The markets have been expecting 4, 5, 6, maybe 7 cuts this year, and sooner rather than later. I think the markets have backed off a bit on that. But I actually would like the Fed to hold off easing at all. I think the Fed has actually not only tightened, but actually normalized. Interest rates are back to where they were before the great financial crisis. Investors are finally getting an appropriate return in the money markets and in the bond market, and the economy has demonstrated that it's resilient and they can live with them. So I'd like to see, you discussed capital markets in a previous report here. I'd like to see the capital markets work more efficiently and let the bond market determine where capital should go.
So you think you just leave them as is, and the market will still go up at this point?
Well, I think if you leave them as is, and it's clear that one of the reasons for that is because the economy is doing well and earnings are coming in strong, then I think it's a good trade-off. But I don't think there's any rush for the Fed to ease right away here. They got the risk of the Middle East creating a 1970s scenario, two energy shocks. And then if they ease and become too dovish, they'll get a 1990 scenario, which is irrational exuberance. So I think the smartest course for them to avoid these kind of risks on the tail risks is to, in fact, do nothing.
I'm loath to ask it because it's just a cliche of a question at this point, but are the Magnificent Seven still magnificent?
Some yes, some not so much. It's starting to be a little bit of a more specific story for each individual stock. Tesla has obviously some issues right now, but maybe it's not 7 anymore.
So what is it, and what would you buy and what wouldn't you touch?
Well, we did see a nice rebound since late October of last year in the small cap and mid cap stocks, which made a great deal of sense to me because these are really cheap stocks compared to the S&P 500. And there are lots of good small and mid-sized companies that should do well in an environment where for the 3rd year in a row, we're not going to have a recession as has been widely anticipated. So I think that's a good area to be. I would stick with technology. I would stick with financials. I think energy has to be overweighted as a hedge against the Middle East craziness.
Ed, we want to thank you. We've got to leave it there. We'll talk to you
It was my pleasure.
very, very soon.
Thank you.
And thank you for the optimism on a Monday morning.
Still to come this morning, Oklahoma Senator Mark Wayne Mullen will join us to talk about the potential U.S. response to the weekend drone strike in Jordan that took the lives of 3 American troops and wounded dozens of others. Squawk Box will be right back after this break. Welcome back, everybody. President Biden vowing retaliation after 3 U.S. troops were killed and dozens more were injured in a drone strike in Jordan over the weekend. These are the first American fatalities since U.S. service members began being targeted by Iranian-backed militants after the Israel-Hamas war started. An Iranian news agency quoted the country's foreign ministry as saying it was not behind the drone strike directly. Joining us right now is Oklahoma Republican Senator Markwayne Mullin. He is a member of the Armed Services Committee, and sir, there are calls very directly coming for a much stronger response against this strike. What do you think is the appropriate response?
Well, we should have already been responding. Listen, there's been 153 attacks on American interests, American personnel since October 17th by Iranian-backed terrorist organizations, from the Houthis to actors working inside of Iraq and inside of Iran both. And we have only responded 9 times. 9 times with direct hits and delayed. We know every single time they're shooting a drone or they're shooting direct missiles at us. We know where they came from, we can track them, we could respond immediately. The only thing Iranians understand is strength. And by trying to think that you don't want to escalate it, plays right into their, as I would say, their propaganda. When you just look the other way, they use that as a messaging to the people saying, see, they're afraid of us. This is why we have strength. And it empowers them. When you go after them, they will stop.
But the question is, go after who? Are you suggesting direct strikes on the Iranians who are saying that they are not directly involved with this? Are you saying take out every one of these rebel groups where you know the drones are coming from, where you know the missiles are?
2. You got to go both ways. 1, you go directly with action, direct action at the individuals that's attacking you. And then 2, you go directly at Iranians and put the sanctions back in place and pull the money that you gave Qatar back out of the banks.
But you're not talking about directly attacking.
If they continue, you do.
Financial sanctions first.
I think you go after financial sanctions first. If it doesn't stop, then you got to go directly at them. You cannot kill the snake if you don't cut the head of it off.
And you don't fear, I mean, look, some people fear that something like that then escalates this into some other place that's much worse than where we are now. That's the
well, Andrew,
that's the pacifist version of it, right?
Sure, but you don't just appease a bully either. At some point, you got to punch a bully in the mouth. And what's happening with Iran is the bully. They are backing all the terrorist organizations around the Middle East, and everyone knows it. There's no question about it. They are doing that. So if you don't go after them, then they're going to get worse and worse and worse. And so you may escalate it, but look what happened. They've attacked us 153 times since October 17th, and now they're starting to kill American personnel. We've already lost 3. We're going to continue to lose.
Let me ask you about that specifically, which was Nikki Haley effectively put this at the feet of President Biden and the administration and said that they needed to have been doing more. Is more protecting those people in a different way than they were protected over the weekend, is more the punch them in the mouth idea, because then they wouldn't have been trying to escalate at all? I think if you believe that would have been the case.
First of all, let me understand. I don't want a war. I don't want to go back. I don't want to get into the Middle East and fighting again in Iran. Any one of us that's ever experienced that, and smelt it, heard it, and been around it, none of us want that want that to happen again, Andrew. Right. But at the same time, you cannot de-escalate something when they're escalating it. You have to respond. And so I get when people are saying that you don't want to get back into this fight. Nikki Haley, sometimes she gets a little more aggressive than what I would probably want to go to. But at the same time, you have to show it. If Trump was in office, I don't think for a second this would be taking place. You know why? Because we would have responded strong and with authority when it first started happening. 153 strikes later, and now you're just now starting to talk tough, you're just now taking serious, that they don't respond that way. It's not the way the Middle East works. They only understand one thing, and it's strength.
One of the complicating factors is the technology that's now being deployed. I mean, this was a drone. We have Tomahawk missiles that we can launch and try and protect and take some of these things out with, but people have raised the questions recently. how long can you continue to fight $1,000 drones with $1 million missiles? And
This is true.
it raises all kinds of questions and implications. What happens? What will you do from your position in Congress in terms of looking for finances that we dedicate towards this?
Well, the unfortunate thing what's happening right now in Ukraine is the war. The fortunate thing that's happening is we are getting used to this technology. Russia is using these drones that Iran is giving them, which is the same ones they're attacking us in the Middle East with. Ukrainians have figured out how to respond and defend against those in a very cheap and effective manner. We have been able to take some of that technology. So the technology has moved where we don't have to use $1 million missile to shoot down a $100,000 drone, or in some cases a $30,000 drone. And so we have responded with technology. We're a long ways from getting where we need to be, but we still know where it's coming from. It still leaves a footprint, as you would say. It's the same thing as you use your cell phone. You know where that cell phone went, where the ping was at, and where it was going to. We can respond the exact same thing with a drone. We may not be able to pick it up immediately when it was first shot, but we know where it originated from, and we don't always know the destination until it hits, though.
There aren't too many things that the two sides of the aisle can see eye to eye on right now. It's going to get less and less so as we get deeper into an election year. What is the unified approach that Congress could address at this and maybe send something to the White House?
I will say, sitting on the Senate Armed Services, Chairman Reed is our Democrat chairman. Out of all the committees I've sat on in over 11 years, I've never had a chairman work in a more bipartisan manner than Chairman Reed. He's very effective, and the entire committee works that way. And we have a very diverse committee. If you look on it, we have people that you would think would never get along. We actually really get along and we understand it. We spend a tremendous amount of time in classified briefings with our defense industry, plus with the chairman, or joint chairmen and the committee and on the staff. And one thing that we're working on is understanding where the industry has to move. The technology that we're using today, Andrew, is not what we were using 2 years ago on the war on terror. This is a conventional war that the Iranis have adapted, and we're trying to adapt to.
I was going to ask you separately, you mentioned that you thought if President Trump or former President Trump was president today, this wouldn't happen. Are you squarely in the camp that Nikki Haley, who was sitting in that seat literally in the past hour, should pack it in? Is that what you're saying?
Well, I think she has a right to run. I'm obviously a huge supporter of Donald Trump. I was one of the first senators, I think maybe the first senator to endorse him. I consider him a friend, not just a candidate. There's a long history with that, with when my son got real hurt and the reaction that Donald Trump took during that very tough time of the family. Nikki Haley can run if she wants to run. It's obvious, though, that there's no path for victory. I'm always up for a good fight if I feel like I can win. If there's no path there, then you're disrupting at some point. But if she chooses to run, let her go ahead and run until she gets embarrassed in her own state.
About victory or not, and the politics of victory, because there's a separate issue happening in the Senate we talked to Nikki Haley about, which is the fight at the border and over immigration. And this sense that maybe there's a deal to be had between the Democrats and the Republicans. I don't know if you think that's true, but if there is, there's also a sense that President Trump would prefer, frankly, that there isn't. Because if there is, there's a political view that the Biden administration would get credit for that.
Well, I don't think we're so late in the game now. Whatever the bill is, I don't think they would even have time to implement it to make a difference on the border today. We do need some type of bill. The problem is how far are we willing to be pushed before we say, listen, this bill is nothing more than shams to give anybody the idea of saying, well, look, we're doing something. The government moves so slow, Andrew, that if we passed a bill today, before the rules and the implementation and the money could even flow that way, we'd be way past the election.
But is that an argument to wait till the election?
No, because it doesn't matter when you start it. If you start it after the election, we're going to still the same time frame. The border is an absolute disaster. It's a disaster because Joe Biden's administration looking the other way, saying that we got it under control, the border is secure. We all know the border's not secure now. We knew it beforehand, but they're actually admitting it. So we have to do something now so we can eventually get to the point where we can make the changes. The changes aren't going to happen overnight.
Fair enough.
Senator Mullen, thank you.
Becky, thank you. Appreciate it. Andrew?
Thank you. Coming up when we return, Crypto in Focus. We've got a special interview ahead with Andreessen Horowitz partner Chris Dixon. But next, Watch this space. Competition brewing in a key corner of the luxury goods market. Robert Frank is live in Miami this morning covering a story. This is like a hardship job he's got. I mean, this is like really tough work. We're going to see him after the break. Robert, give us a preview, though, of just what a difficult assignment you've been working on.
Andrew, somebody's got to do it. You know, LVMH dominates almost every sector of the luxury market except for luxury watches. Today, they're going to take over Miami as part of their push into the $30 billion luxury watch market. We'll take you inside the LVMH mansion and marketing machine when Squawk Box comes back after the break.
Welcome back to Squawk Box. Competition heating up in the luxury watch space. A corporate giant about to take aim at that market. And Robert Frank joins us live from Miami. And yes, I am jealous, Robert.
Good morning, Andrew. Luxury giant is right. LVMH shares were up 13% on Friday. That was the best performance of that stock since in 15 years. That was after that great earnings report on Thursday. But the next big growth opportunity for LVMH is luxury watches. Global sales of luxury watches reaching $28 billion last year, expected to reach about $37 billion over the next decade. Now, LVMH already owns 10 watch brands, and they're here in Miami with 6 of those. Those include Tag Heuer, Zenith, Hublot, lots of others. They recently created, in fact, just a couple weeks ago, a new watch division, and they appointed Frederic Arnault. He is the 29-year-old son of chairman and CEO Bernard Arnault as the CEO of LVMH Watches. Now, the goal here is to get into that very top tier that includes Rolex, Patek Philippe, and Audemars Piguet. And as part of that, starting today, they are taking over Miami. They rented out this $50 million mansion on Star Island off Miami Beach. Flown in all the CEOs, marketing managers. They're launching models, they're launching marketing campaigns, and really showing the world what they can do as a watch company. To give you a sense of perspective, last year, watches and jewelry for LVMH topped $12 billion. And Andrew, that's a number they want to continue growing as this market and as the company grows.
Robert Frank, it's quite something. How much money do you think they're spending on all this week?
You know, LVMH, you look at the Pharrell Williams show in Paris last year, LVMH does everything big, and everything is top notch. From the displays, each room in this mansion, which is on the water, has its own marketing display, all the new models, all the CEOs have flown in. So it's a massive marketing budget. It just shows that the world of luxury is now on a scale, on a global scale, that you really have to be large to compete now with LVMH, which is why we're seeing so much consolidation, why we could see some independent watch brands sell to LVMH, just because it's harder to compete now against these giant budgets.
Can I ask you a terrible question? It just means to me that the margin on these products is extraordinary. What is the margin on most of these watches?
Well, you know, the gross margin at LVMH is one of the best in the sector. I don't know they don't break out the margins for each brand. They don't even break out the total watch sales for LVMH. It's probably somewhere around $2 billion, but at the very high end, you know, they put a lot of money into making these watches, an incredible amount of craftsmanship and materials, but it's a very profitable business, Andrew, which is why they want to grow that part of it, especially because the women's sector of watches is the fastest growing.
Robert Frank, I was watching a video of somebody who I guess was buying a Cartier watch that I don't know if it was for sale for $10,000 or $20,000 or something, but then they brought over, while they were deciding on what watch to buy, they brought over a $600 or $700 bottle of champagne for them to drink while this was happening.
How about I just get a $600 discount?
Just to see, and by the way, if you buy or not, I thought to myself, okay, there's some margin there. There's some pretty big margin there.
Friday night drinks for free.
Robert, nice to see you, sir. Good luck. I don't need to wish you luck. Just have a ball, and I'll try to live vicariously.
Up next, Andreessen Horowitz partner Chris Dixon will join us for a special conversation on crypto, where he's deploying his assets right now and what he makes of the new spot Bitcoin ETFs. We'll be right back.
FEMA.
Welcome back, everybody. Some news just out from Amazon and iRobot. They are terminating their pending acquisition. The deal faced opposition, not just from EU antitrust regulators, also here too. At the same time, iRobot announcing an operational restructuring plan that includes cutting about 350 jobs, or 31% of the workforce. iRobot's chairman and CEO is stepping down, and the chief legal officer was named interim CEO. You can see iRobot shares now down 20%. Amazon shares up slightly, but this is pretty big news, and I guess highlights the risks of mergers and acquisitions right now. If that deal doesn't go through, what does the acquiree do at that point? What kind of steps do they have to take, especially given the increased regulatory scrutiny taking place in Europe and the United States?
Meantime, our next guest is one of the most influential investors in the world of crypto. Chris Dixon is a general partner in Andreessen Horowitz. He leads the firm's crypto arm with $7.6 billion under management. Notable investments include Coinbase, Uniswap, Solana, which is up big now, and OpenSea. This week, he's out with a new book. It is titled, right here, Read, Write, Own, Building the Next Era of the Internet. Chris, I want to thank you.
Thank you for having me, Andrew. Thank you.
There's about 1 million questions I have, and I want to get to the book and talk about the book. But before we hit the book, I just want to understand. I think we're all trying to understand what's just happened with the SEC and this Bitcoin ETF, and what it means not just for Bitcoin, but potentially for the Solanas of the world and everything else.
Yeah. So I think crypto has been a technology that's controversial, and I think any institutional acceptance like the ETF is a good thing, is a net positive. That said, I'm very focused on, and our firm is very focused on investing in entrepreneurs building new utilities, new applications that are used by hundreds of millions and eventually billions of people. So less focused on financial instruments. But I think it's
that's what I was going to say. You separate the idea of crypto money crypto, versus like utility crypto, if you will.
Yeah.
And how much of a future you think money crypto really has?
Well, I think payments, DeFi, Bitcoin, these are all important applications. I view blockchains as an expansive technology. It's a new way to build internet services. Those services can be games, they can be social networks, they can be financial services. And so the financial part is important, but I think in a lot of ways it's been overplayed in the discussions. And so one of the things I try to do in my book is describe all of the different expansive use cases for the technology.
So Solana is one of those that actually has a big use case. It's like Ethereum.
Yeah.
A, I'm curious if you think that turns into its own ETF, but B, where you think it really goes.
Yeah, I mean, the specific ETFs, I think that'll play out for a long time. I think there's some discussion of the Ethereum ETF. I mean, I think this technology is inevitable. I think this is the future of the internet. So I think over time you will see greater and greater acceptance of ETFs and other kinds of financial instruments. So, but I think that will take time, and our focus is on investing in early stage entrepreneurs, and we see a lot of innovation.
ETF would never be something you'd look at. It's too far down the road.
For us, no, yeah, we're generally early stage investors, and so we're really looking. We're meeting with entrepreneurs. They have a lot of really interesting ideas. We think this is a really interesting new technology for building new internet services, and so that's kind of our focus. But
can I ask you, talking about investing in early entrepreneurs and different ideas that are coming out of crypto. One big idea, or seemed like a big idea, was NFTs. You own OpenSea.
Yeah.
It was the hottest thing in the world. Everybody wanted to get themselves a chimp, a monkey, if you remember. And now nobody wants a chimp or a monkey. Maybe you think that they do. What happens to that? This idea of tokenizing art?
Yeah. Well, I think that's been the sort of death of NFTs has been exaggerated. So last year there were $8.7 billion, 2023, $8.7 billion in sales of NFTs. And remember, this is a technology this was standardized and basically invented in 2020. So it's a very early technology. And I think like a lot of technologies, you go through these kind of boom bust cycles. And the other thing I would say is that a lot of people think about NFTs as sort of avatars. In fact, it's a very expansive technology. So for example, you can use NFTs. We see a lot of musicians using NFTs to sell digital merchandise to their audiences and create new income streams to supplement streaming, which doesn't pay them very well. We see people using NFTs for new social networks, and the advantage there is in existing social networks, you're locked in, and if you build an audience, you can't leave, and if they change the algorithm, you're stuck with it. With social networks built using NFTs, the users have the power to leave. So it's a very broad technology. I think we've only scratched the surface, and I think it's got a long way to go, and we're very excited about it.
I have a separate question on crypto, which is a lot of people look at crypto and think there's no regulation to all of this. And not only is there very little regulation, we still don't have meaningful regulation, that the venture capitalist community is not effectively properly regulating the business insofar as looking at the investments in the right way, doing diligence and the like. I've made the argument, I'm curious if you agree or disagree with this. I said to people, especially this is after the FTX of it all, which by the way, looks now, if you're a creditor of FTX, you're gonna get all your money and possibly more, which is so interesting. Partially on the back of Solana, something you invested in. But I said, look, most venture capitalists are buying, 10, 20, 30 investments. They expect, 10 or 20 of them to go to zero. How they get to zero is almost beside the point. And so the kind of diligence that somehow the public is expecting from the venture world is not matched with reality. Do you agree with that?
No, I mean, look, we take the regulatory and policy aspects of this area very seriously. We have a significant policy team. We've been publishing and articles on policy and calling for greater regulatory clarity for a long time. I personally go to DC a lot, so we take this up very seriously. We were not investors in FTX for those reasons. That we did see red flags, and we've been involved with Coinbase for many years. Coinbase is a very heavily regulated business. They Bank Secrecy Act, KYC, since the beginning. So look, we take this stuff very seriously. Yes, it's true that venture capital is risky, and we do lose money in a lot of investments. But we're based in the U.S. and we take U.S. regulation very, very seriously, and we're strong advocates for more guardrails around the technology.
We've been talking a lot about AI. You write in your book about AI and tokenization and the need for that, especially when it comes to this idea of deep fakes. We just saw this deep fake of Taylor Swift that was taken down, but after 50 some odd million people saw it last week. What does that mean long term?
Yeah, so I'm very excited about AI. Obviously, our firm invests in a lot of AI. It's a very powerful new technology. Take something like deepfakes, that's going to become very common. It's going to be increasingly common, and you're also going to see, very advanced phishing, very advanced counterfeit people. It's going to be very hard to tell on the internet what's real and what isn't. I believe, and I've read in the book, that blockchains are an important countermeasure to that. So, for example, a blockchain creates an immutable audit trail. So you can have an immutable audit trail of this video that says this video came from CNBC. It came from the New York Times.
Should that be required for any of the social media?
I think that's a policy approach that should really be looked at. So I think in the ideal world,
Meaning from the U.S. government?
yeah, I think it would probably have to come. I think it would have to be.
Nobody's going to voluntarily.
I think it's hard to get a lot of different parties to coordinate without some kind of government action. I think the right way to do that is to have some kind of provenance. You have a record of where did this video come from? Is it real? And then on social networks you have some enforcement, so they don't show those fake videos. This is going to become an increasingly important issue, and we need to think about it now, how to counter those things, because we don't want an internet awash with fake people and phishing and deepfakes. This is a real problem. we may already have it. Yeah.
Who's the winner of that? If we need to tokenize all of those images, all of those articles, and that's the other thing, will you be able to do that, and will people be able to fake some of this stuff?
One of the great features of a blockchain is that you have an immutable, cryptographically proven audit trail. And so it makes it mathematically impossible to fake it, and that's one of the virtues of this technology.
So that works for an image. Does it work for an article?
Yeah, it works. There's technologies called hashing where you take any piece of media and you prove that you have a digital audit trail for it. It can work for any kind of media.
And would that be an Ethereum-based token?
It could be, yeah. Ethereum would be an obvious choice. Solana, one of the kind of major blockchains like that, would work well for that.
How much do you fear or not the big tech companies? And one of the other things we're talking with Lena Khan about is just the partnerships that they've now developed with some of the big AI companies. In the future, do you see them running all of this, or do you really think it's all going to be so decentralized? I mean, this goes to the centralization versus decentralization of crypto.
Well, so the internet has gotten increasingly consolidated. So the top 5 tech companies, as I'm sure you talk about on the show, are now 50% of the NASDAQ 100 market cap, up from 25% 10 years ago. The top 1% of social networks and 95% of social networking traffic. Google and Apple have a duopoly on mobile phones. I am concerned the internet will become like kind of 70s broadcast TV, where you have 3 channels. And AI will accelerate that, right? Because AI favors companies with large, I'm pro-AI, our firm invests in it, but AI rewards companies with large stores of capital and data.
Does that mean Lena Khan is right or wrong to be concerned about that?
Well, look,
sounds like she's in your camp.
Look, I mean, a lot of what Lena, like the reason these companies are powerful are frankly acquisitions that happened 10 and 15 years ago, as YouTube and Instagram. I think the cow may have left the barn in that case.
Right.
I'm not sure if Figma and other kinds of things that are going on now are going to reverse the consolidation of the internet.
We never know. Like that's,
So, sorry.
We never know until too late.
Yeah, I mean, these things are hard to do. I think a lot of those kinds of, look, I think there's regulation that's proactive and reactive, and I see kind of a lot of the sort of M&A related stuff is more reactive. One of the reasons I'm here is I'm advocating for proactive regulation. I'm acting for, like, let's get ahead of this.
But doesn't that make it harder for you as a venture firm? Meaning, historically, one of the great models was we're going to invest in some of these great startups, in part because we think that a Meta or a Microsoft or an Apple is going to potentially overpay to acquire them. If you take them effectively out of the market, who is the buyer?
Well, then you have to IPO. I mean, you have to go all the way. But that's right. I think that a lot of times regulation can have unintended sort of secondary consequences, and one of the unintended consequences of reducing M&A potentially is that you also reduce the incentive for investors to create startups that do compete with those big companies.
Chris, I want to thank you. The book is called Read, Write, Own, Building the Next Era of the Internet. If you want a thoughtful piece on what's going on, take a look. Thanks.
Thank you, Bill.
When we come back, it is time for some big decisions in the JetBlue-Spirit Airlines merger that got thrown into doubt earlier this month. Philip O will join us with the latest on that story. And a reminder, as we head to a break, you can always watch or listen to us live using the CNBC app. Stay tuned. Squawk Box will be right back.
is.
Well, after 2 years and hundreds of millions of dollars spent, we are getting a lot closer to finding out whether JetBlue's merger with Spirit Airlines will actually happen. Phil LeBeau joins us. He's got the latest on that front. Phil, good morning.
We already know that a judge has agreed with the DOJ that this merger should not happen, blocking it. Now the question is whether or not JetBlue and Spirit appeal that decision. And on Friday, we had dueling 8Ks that were dropped by both airlines, starting first off with JetBlue saying that it was evaluating its merger options. Well, that probably spooked the people at Spirit a little bit more than they were caring to hear at that time. They put an 8K out saying that Spirit believes there is no basis for terminating the merger agreement. Spirit will continue to abide by all of the obligations under the merger agreement, and it expects JetBlue to do the same. Well, curious if JetBlue is going to see things that way. Remember, Spirit has 5.1% U.S. market share. Tomorrow, we get JetBlue's quarterly earnings. If there's a time where they say, look, we've renegotiated the deal, or we are out, we are done with this deal, that might be the time. Again, that's purely speculation. At this point, we know that this merger agreement continues, and they do plan to appeal, and they are going to appeal the decision to block this merger. One other airline note, take a look at shares of United. It came out over the weekend that United is in discussions with Airbus to see what it might be able to do in order to get A321s so that it could fill in some of the slots that it had planned for the Boeing 737 MAX 10. Remember, they told us last week, Scott Kirby told us, we're taking it off the schedule. We don't know when it's going to be certified. We can't plan our fleet over the next couple of years, not knowing when we might have a particular aircraft. So they're looking at the options with regard to Airbus. Remember, United took delivery of its first A321, and the A321 it would be the counterpart to the 737 MAX 10. So the question becomes, what can they do with Airbus in order to potentially get some of those A321s that they need, guys, because otherwise they're going to be going forward with a fleet plan that is going to be smaller than what they originally had laid out when they thought they were going to have the MAX 10s starting later this year, early next year.
We had the CFO of Ryanair on earlier this morning, Phil,
Yeah,
and it's a little rich, these guys saying what United says is silly, because these are the same guys who were calling for Dave Calhoun to be thrown out last year when they didn't have their jets that were going to be delivered on time. I think they're happier now because they've been moved up a little bit in the queue.
Sure.
When you hear all of this, do you think it's just negotiations? Do you think it's just kind of arguing and jockeying for position?
There is a little bit of that, but with regard to United, this is not just public negotiation. This is a company that had a fleet plan for 150 MAX 10s that they now have to sit there and say, okay, well, we don't have 150 planes on our schedule. We have pulled it off. We have no confidence when this plane will be certified. Remember, with everything with the FAA, most believe you're not going to see the MAX 10 certified this year, which was the original expectation. So I think there's a little bit of that, guys, but there is also, with regard to United, they've got to make some plans for the future, which is why they're having these discussions with Airbus.
Okay. Phil, thank you. Squawk Box will be right back.
today.
With just over 30 minutes to go before the opening bell, we want to bring in Megan Horniman. She is the CIO at Verdant's Capital Advisors. And Megan, we've got a lot of things happening this week. You've got the Fed, you've got what's happening with earnings. Why don't we start with the Fed? Because you say there's a really big difference between what the Fed should do and what you think they're likely to do. What is that?
So unfortunately, they took a bit more of a dovish tilt in their prior meetings and some of the speeches that we've heard. And we think that it's just a little bit too soon for them to be taking that dovish tilt. I think that they should actually get a little bit more hawkish and realign some of the expectations for interest rates this year. But there's just way too much optimism on multiple interest rate cuts this year, and we just don't see that on the horizon.
Okay, so that means the Fed will have to do what on Wednesday? If you have to acknowledge the data, and the data shows that inflation has come down pretty sharply, how do you do that and not signal to the market game on in terms of rate cuts come March?
Because I just don't see, yes, inflation has come down. It's improving quite a bit. It's coming in the right direction. It's getting towards that 2% target, but we're not at that 2% target yet. There still is room to go here, that they have to get inflation down. And the biggest concern that we see is that they could reignite inflation by getting too dovish and not realigning and setting expectations for what the rate cuts will be.
We've seen a pretty incredible continuation of the rally in January. It didn't stop after the Santa Claus rally, and there were a lot of people who thought maybe it would. Does this make you nervous at this point, especially if you think the Fed is not going to be able to cut rates as quickly as the market's anticipating?
Yeah, we think, again, January seasonally can still be a good month. It's up about 60% of the time, on average about 1%. So it's not significantly surprising, especially given the fact that there's been so much optimism about the economy and optimism about the Fed's going to come in and cut interest rates as quickly as March. We are concerned. We think that valuations are a little heavy here. We would be looking at some of the areas of the market, the large cap area, especially the growth side. Make sure that you're not overweight in portfolios, balanced portfolios, because it has run so far and so fast, and we do think it's at risk of some sort of a consolidation here.
Megan, thank you very much for joining us today. Let's take a very quick final check on the markets before we hand things over. The futures have been mixed today. The Dow is indicated off still by about 20 points. S&P is basically flat. The NASDAQ indicated up by about 10 points right now. Of course, we do have a lot of earnings that are coming this week, and we will be all over that. Make sure you're back here with us to join us tomorrow. We'll see you then. Right now it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. Futures mixed for now, but what a week we have in store between mega cap tech earnings, Fed decision, jobs number, all as we watch some ongoing geopolitical tensions. Our roadmap begins with records on a roll. Big tech fueling the rally. Apple, Microsoft, Alphabet, Amazon, AMD all on tap this week. China's real estate concern. The world's most indebted property developer, Evergrande, ordered to liquidate. And FanDuel's owner Flutter set for an NYSE debut. Four-time Super Bowl champion Rob Gronkowski will join us right here at Post 9 after what a weekend of football, Jim.
Yeah, I mean, look, we're not ESPN, but I think that these games are like what we do. I mean, you see these teams and they are companies, and you see the Kansas City Chiefs. And look, they're whatever you call them. You call them Alphabet, you call them Amazon. And then you see companies that fold in the second half, and that's, maybe the Lions are Tesla. I mean, Wade Goff, I was waiting for something to happen, except for their forecast, which was to expect the second half that's not that strong.
Yes.
Yeah, but these teams are all great, and they are, I find that this is kind of a universal.
Well, the overlap is obvious. Gronk here, you're on Sunday Night Football. There's so much that they have in common. And congrats, Jim, by the way, for calling another perfect weekend.
Yeah, I got that right. You had to, admittedly, I do it against the spread. I wish all the people on TV did, because we're all watching FanDuel, we're watching DraftKings. So what good does it do to say, well, I think that I will take the Niners? That's bad, because what you do is you take Detroit versus the spread. The spread is just the multiple. It's price earning multiple. Right. So if we want to do take Pepsi right now, Coca-Cola's got a higher multiple. You know, that's the Niners. So I just think that if you don't talk about the spread, then you are not doing what 20 million people are doing.
Yeah, it's going to be an active hour here on the floor as they ring the bell. Let's begin, though, with the markets. And as we said, big week on the earnings front. Jim, in terms of market cap.
Oh, this is it.
And earnings, this is the week.
Yeah, I mean, and I think that we've got so much going on. We've got by the way, the refunding schedule on Wednesday from Josh Frost at Treasury, and then the employment number is going to either verify or not verify the wisdom of the Fed. But there are days where, I mean, Apple and Meta, I mean, no, we don't want that. Was bemoaning us on Friday. There's so many good companies that they will not get the attention that they think they will. It takes an hour to do an Apple call, an hour to do a Meta call, and an hour to do an Amazon call. These are not easy. These are not calls like Texas Instruments, which just says, you asked 2 questions, I said 1 question.
Yeah, your long-standing thesis has been that the street's undercovered. There's just too many companies to keep track of. But to your point about the broader market, equal weight has now given back all the gains it had relative to the SPX since November.
All the people, look, we have 3 notes today that say soft landing. And I understand that, but what really matters is that we reverted to pre-November pivot. It's just the same guys again. It's the same thing that happened in March when we had the banking crisis. I think a lot of people come on our air and they don't want to admit it. They always say, well, it's going to broaden out, or it's really broadened out. It hasn't broadened. It's back to the significant 6, whatever you want to call them. And I find that what's happened is that if you're not in those stocks, then you missed it again. And you're trying to justify, there's really a raison d'etre. I mean, there's like an actual essence here of you either went with the big guys, or you continued to believe the thesis that there are a lot of Eli Lillys out there. Lilly turned out to be the only one that's out there. So I think we should own it. I think we should attack the people who come on, the money managers, and say it's a broad rally, because it's the opposite. I mean, attack is probably the wrong way. You know, say that their view's misguided.
Sure. Although we got about a third of the S&P in. We're beating consensus by 5.
Right.
Financials are beating by 10. Industrials by 7. Even with all the DuPont and the 3M guidance, BofA's point this morning is that no one aggressively guides higher in January. There's no upside.
You know, when you talk to the CEOs, they all, I talk to most of these CEOs, the big guys, offline, and they always say, why should I? Why should I take my numbers up at the beginning of the year and then cut? So those who are still back, these are underperformance, under promise, over deliver numbers, that's UPOD.
Yeah.
But I look at the industrials, and I think that the industrials are a question of, are the inventories down enough? They weren't for DuPont. They were for Dow. Dow didn't get enough credit. I thought Dow was good. You can go back and forth. The reason why the semiconductors have worked is because it's finally a destocking. AMD's parabolic move. That's a destocking. But they also have something besides what Intel has. AMD crushed Intel this quarter. Right. Just crushed them. But other than tech, I mean, I look at these, I just say, you're not, you take the banks. I thought the banks did really, really well. But people were willing to downgrade them and not willing to give it. USB's been downgraded, like, Comerica. These are just downgraded, and there's nothing wrong with them. But look, JP Morgan had a good quarter. Wells had a good quarter. But it didn't give them the pop that you get from tech.
So does that leave you then, if the picture's cloudy on the cycle, the industrial cycle, leaves you with the rate cut thesis and the AI thesis?
Yeah, that's it.
And are you willing to chase both? Where are you on that?
I'm in it, both.
You are?
Yeah, I am, because Nick Timmer's has a piece today which talked about, from the Wall Street Journal, it's very good, talked about how, look, inflation's really come down faster. They may have no choice. Now, I still think it's a June cut. He talked about a June cut. But I think that they have to be worried that it could come back. But all the companies that I'm dealing with are really dealing with, we have McCormick. This is the best one to talk about. I have McCormick, spice company, so everybody knows what we're talking about. They're predicting +1, -1 growth. This is a 10% growth. It's a growth company. Why? Because they got to put through price, which maybe they can't. They have to, maybe it doesn't take a lot. I said maybe you guys should do a Marlboro Friday, which is a reference to something that happened 30 years ago, where people where Marlboro came in and said, listen, we're cutting everything 20% because the consumer can't take it. If it weren't for Costco, of which there's 130 million people on the Costco, a lot of companies are trying to get away with murder here. And when I say murder, financial murder, obviously.
Sure.
They're just trying, as my mom would say, like you go to the supermarket and what do they do? Shrink the ice cream from 16 to 14 ounces, they charge more. Costco's rebelling against that. I think Walmart will too. But the fight is about, can you still raise price? And the answer is no. Now, there are a bunch of people who said that Colgate can, and Colgate, some of the raw costs are coming down. Don't bet on it. Don't bet on it. There's too many companies who come in and do generic.
Well, we got an upgrade at Colgate today over at Oppie. They go to 91. I thought the Matt Boss JPM note on Dollar Tree was interesting because he says gas prices, cola, maybe the tax credit, the expansion of the tax credit is going to be a $70 billion tailwind.
I thought it was a great piece. I just don't know whether the conclusion was right, but he doesn't have some of the other companies. I thought that meant for Walmart. Now, people don't go. You know, one of the things that bothers me immensely, I go to Walmart. I got 3 Walmarts I go to. One of my Walmarts in Neptune is just fantastic. Walmart is not what you think. Walmart has so many great things, and they offer them at really great prices. And the stuff is first rate. It just happens to be made in a lot of different countries, a lot of China. But they lower price. When they do price rollback, my kids go nuts. It's like, Dad, can you look at this? This was much higher than it was much lower than it was 3 months ago. They do rollbacks, and Costco is like saying to these guys, "You're not raising prices, or we're going to do Kirkland Signature." McCormick, Kirkland Signature, believe me, Kirkland Signature pepper and salt and green and flakes, all much cheaper. So there are forces of deflation, not disinflation, but deflation in this country that are winning versus these branded companies. And that's not GOP-1. That's just actual fact. And a lot of the analysts don't want to agree, don't want to go to these supermarkets. They don't want to go to Walmart. Because if they did, they had their head blown off. They'd see the prices. The prices are fantastic at Walmart. I got a really great quote for 28 bucks. My kids thought it was 50. I haven't worn it, but who cares? Such a good bargain.
As far as the rally, Jim, Goldman over the weekend looks at the 19% rip over the last 3 months. Tony P calls it in the 99th percentile of market history. These normally are moves you see coming out of a recession. You did say last week we're due for a bruising. I don't know. I want to put that into context.
January seems to be okay, but can we really get through this thicket of next week besides this week? Look, I think Apple, everyone's resigning themselves to a number cut for the second quarter. But when I look at the significant ones, Microsoft, blow away. Meta, fantastic. Amazon, really good. Alphabet, best in show. NVIDIA, not in this reporting cycle, but will be terrific. So, AMD is went a little parabolic, and Lisa Su might be in the camp of not going crazy with the numbers. CEO, she's fantastic. But those companies are all going to do well.
You're not bracing for any landmines like we got out of Tesla.
No, I think Tesla was unique in that you had a CEO who was doing one of these DeBeer, and it was a Hamlet CEO. Don't give me the DeBeer, not DeBeer. Like, that's not the question. Take that off the table. But when look, I was with Rivian. Rivian did not, other car company, they didn't do it down. They didn't do a Musk. Musk just basically said, hey, listen, well, in the notice, expect really bad year.
Right.
How am I supposed to get behind that?
We're going to talk some Tesla CapEx guidance today as well. We'll get to some of the China worries as well. Court orders Evergrande to liquidate most indebted property developer in the world. As we said, Rob Gronkowski, four-time Super Bowl champ, will join us at Post 9 as the parent of FanDuel, Flutter, gets ready to make its big board debut.
Some too. Nope. No, what the hell? Oh, sorry. Good morning, retail traders. Wishy-washy Washboard Jim here. Hope everybody had a pleasant weekend.
In battle, Chinese real estate giant Evergrande has been ordered to liquidate by a court in Hong Kong.
Liquidate.
Eunice Yoon joins us this morning from Beijing with the latest. Hi, Eunice.
Hey, Carl. Well, a Hong Kong judge literally said enough is enough. The judge agreed with the creditors that the struggling property giant has had ample opportunity to come up with a debt restructuring plan. Shares of Evergrande-related stocks were halted, but even before that, the share prices had plunged.
Enough is enough.
That the company had conversations with foreign creditors, but that those 11-hour
China.
conversations had broken down. Now, investors have been carefully watching this saga involving the struggling property giant with its $300 billion in liabilities and wondering what's going to happen after 2 years. It's still very unclear what this ruling is going to mean. The company itself, especially the CEO, had issued a statement saying that he was sorry about the winding up order and that the company would ensure home deliveries and promote normal operations. Now, separately, the CEO told a local paper that the Hong Kong order only affects the specific listed companies. Now, I managed to speak to one of the creditors just a couple of minutes ago who said that that comment is not justified, saying that the liquidator should be able to legally have entitlement to the onshore assets. They're saying, though, that at this point, they're not sure exactly how things are going to play out. And a big reason for that is that what bankers and creditors have been telling me is that the recognition by the government-backed Chinese courts of the Hong Kong liquidator is going to be key, because only then the liquidators from Hong Kong would be able to get their hands on the assets here on the mainland. Guys?
Yeah, Eunice, that's what I was concerned about. What is the jurisdiction here? I mean, does Hong Kong have jurisdiction over the courts in the PRC's mainland?
Well, they have a cooperation. So they have an agreement from 2021 that does allow some cross-border cooperation. So the creditor who I spoke to said that there has been precedent.
Are we going to bail out China now?
We've seen some cooperation, but usually with smaller
Man, a
developers
bunch
and
of
nothing
crap.
on this large of scale. And in fact, when you look, even though Hong Kong
We bailed out
is part
Iran.
of China, the way it could be viewed in Beijing is
Here in the last 2 to 3
meddling
years.
by foreign creditors.
Now we're at war
in
with
what
them.
the Chinese would see as an internal issue, which is that the issues with Evergrande could potentially spill over, and it's already affecting sentiment of home buyers. So they want to make sure that they keep things stable over here.
Eunice, we know that if you're going to have, say, a 1990 restructuring as we did in this country, you've got to get rid of these zombie companies. Why would the PRC not use this as a way to be able to get at the developers? Because as long as you have zombie developers, you'll have no ability to be able to clear the decks here.
Right, and that's a big question. There have been plenty of theories. One is jobs, for example, getting worried that people would be laid off. But one of the issues that the creditor had brought up as well, that could be a problem as well, and bankers told me this as well, is that even if the foreign creditors were able to get their hands on these assets, let's say the Chinese court said that they will cooperate with the Hong Kong courts, that these creditors will be way back in line in China, that you would have, of course, like local governments, you would have the banks, there would be other people who would be ahead of you. But here, one thing that's special in China is that you would have also the suppliers and then the home buyers, because the way that home buyers purchase their apartments is they usually put a prepayment
Take a look at my
down. So there's just
my
a
call
lot of
now.
other people in front of you, which really begs the question as to how much movement forward these creditors have really made, and
Predators.
it's a very big question mark there.
It's remarkable, Eunice, between the property, the unemployment issues, and certainly losses in the capital markets there, where consumers are finding relief. Very, very slim pickings. Here, Eunice Yoon in Beijing today covering China for us. When we come back, we'll get Kramer's Mad Dash. We'll count down to the opening bell, take another look here at the pre-market. It's a busy session at the exchange. Gronk has entered the building, Jim, with a big fanfare a moment ago. We'll pay some attention to Flutter as they do this dual listing here at the NYSE. Back in a minute.
So today is the 29th. We've got quite a bit going on here. We've got CPI, PPI, Wednesday. We've got MOC, FOMC, FOMAC on Wednesday. FOMC meeting on the 29th. Was that today? It begins today. Unemployment rate. Unemployment rate, retail sales, and equity settlements. Tesla video got a lot of likes. I was happy to see that. Wish everyone was like that. We definitely popped up to resistance today. We'll see if that breaks. That'll be a triple top break. Snow pulled back a little bit this morning to my first support at 201.16. The IWM, there's my water. I'm gonna go get my tea ready. We're squeezing on IWM today. It's either gonna break out, right it open, or drop. Into a flag. Could be almost a descending pattern or a falling wedge.
BC. Time for Kramer's Mad Dash as we count down to the opening bell.
Talk a lot about media, obviously.
We got 8 minutes left,
Morning,
and I'll be right back. I'm gonna
a
go.
lot of sports on, but maybe questionable is Warner Brothers Discovery. Wells Fargo is downgraded to equal weight. There have been a lot of talk that perhaps Comcast might be interested, kind of taking that off the table. Content licensing, double-edged sword. Target goes from 16 to 12. And what I think it hurts about this, and David Zaslav behind this, is that they're saying, look,
Everybody's eyes on Microsoft and their earnings
consensus estimates
this
which they
week.
had been above, they're now below. And
We got
I
tech
look at
earnings
I start
this week.
thinking, well, geez, what's going to happen with when they have? They've got some great basketball. Are they going to miss that? I mean, we know that there's a lot of companies that feel very good about having sports. Apple might want more sports. We don't know. I mean, Alphabet has sports. Maybe they did well. Maybe they did Amazon. So I think this is a meaningful downgrade, especially because I think a lot of us are kind of rooting for David to make it, in part because it's CNN. We want a competitor. They do suggest, by the way, in an election year, you couldn't get away with it, which almost, I mean, listen to Leanne Kahn today on I just kind of lose my tongue because, it's one point she said we're making a study of it. I mean, now I did in second year law school, I did a lot of studying. I study. I mean,
You're homeless too, Jim.
I thought that when you're the head of the FTC, you would do more than study. But you know what? She's a studier. She's a student.
Your point about these guys, though, they do say management is caught between scaling DTC and deleveraging through the licensing deals that we saw just the other week.
Right, and it just suddenly becomes a really complicated story. Look, we work for Comcast. Comcast is a pretty clean story. People want broadband. They obviously are pure content, and I don't know if this can hold. This is going to be a very rough story if the Wells Fargo scenario plays out.
Yeah.
Stephen Cahill really put the kibosh.
Moving from deleveraging multiple expansion to lower EBITDA and static multiples.
So this goes from being one of the possible great performers for the year, springboard, to make it sound like it's going to go to 8-7, and you got to be really careful. And it was a brutal downgrade. It's the first thing I saw this morning, and I said, "Ouch, this is bad. I don't know if I want to go to the next and sit courtside."
Yeah, they're not alone in that boat.
No, they're not.
It's in sharp contrast.
Media's just been terrible.
Sharp contrast to the Netflix sprint the other day.
Yeah.
Opening bell in a few minutes, as we said, Rob. Gronkowski's going to join us at post 9. Don't go anywhere.
Wait until Netflix goes woke, and then it'll be down too. Sophie got some volume this morning. A lot of news. Blood have earnings, revenue growth, 20 to 25% compound revenue growth for 23 to 26. So definitely got good news for this company. There's some big buys there. Tape looks nice this morning on Sophie. We're definitely at the linear channel of resistance on the 20-day 1 hour. This has had some drama here lately. 930 is your next resistance. That millionaire was right, man. He buys it down at $7. Last week, earnings were bordering on the negative, and I said that. I said, don't matter. Even if they're bordering on the negative or just a little bit negative, 51% negative, they're still going to buy this market. Unless they wake up and smell the coffee. We got tech this week, though. This is the one that's going to disappointers were Tesla, Intel, TXN. Sophie might be in play today. Just got to wait for the pullback.
Some of the news this morning, Amazon and iRobot terminating their merger agreement, Jim, and as a result, iRobot is going to cut a third of their workforce. Founders stepping down as CEO.
Yeah, this was a major botch.
Botch.
That probably wishes this had never happened, but good for Amazon. They got lucky here. It's like DuPont got lucky.
IRBT.
You know, by this company out west, and it was like, wow, I hope they don't get to do it. And Flurry's blocked it. Look, it's not consequential to Amazon. If you've been in iRobot, I think that you haven't followed any of the discussions of what's going on. This was a doomed deal. Europe can be much more harsh than we can. It seems strange.
So you don't think it alters the conversation about regulatory approval here on other deals?
No, I think that it depends on whether Justice has it. Justice is a little more savvy than the FTC, which is a little more naive. Look, the guy who runs Justice is a heavy hitter, Paul Weiss partner. The person who runs the FTC is a great student. Even professed to be a student, studying. She's a student.
Yes.
Yeah.
Leading Congress on
Got minutes.
this morning. Sort of
Here we go. I'm semi-bearish this week. I'm not going to be going crazy. I'm just have that kind of sediment in my gut. I don't want to take too much risk. We got the IWM going to the 200. There's the inverse head and shoulders for the SPX. We got a double, triple bottom down here. I'll probably wait for. Oh, I don't have my platform up. Shit. That's not good. Watch the IWM here, the Russell. Mike's watching snow this morning. I got it watched on 1 hour. SPY January 30th. The 487 put. Taking a small risk here. Snow hit a double top on the intraday. Got 10 contracts. NVIDIA is at the 9. On the 1 minute, or what is that? No, it ain't. What is this? Oh, never mind. Definitely a strong morning. QQQ's got a double top. Okay, I'm at 117. We got the VWAP. Now this is a major support level here on the VWAP. If this doesn't hold, it's a drop on down. And then I'm going to get out of the trade once we hit this intraday bottom here. 487.62. Or get out now. Snow breaking out pretty good. We're getting the resistance levels up here. Watch the IWM. It's the only one that's not acting like the others. There's just a lot of uncertainty this week, I think. NVIDIA just broke out to a new high today, just now. NVIDIA. I think I've got 624 for the next resistance on it. They don't want to give up on this baby. It's their number one. Microsoft is what they're going to really test everything off of this week. Whatever Microsoft does, the market will agree. I'm at 119 on my SPY. I want this thing to get decked down here. I don't know. They're buying NVIDIA right now. Okay, here we go. Now we broke the VWAP. I don't see no reason why we can't pull back here a little bit farther. We kind of got an expansion pattern at open. And it'd be right down here on this, right at a good support. Head and shoulders. Inverse head and shoulders. Look. Amazon and iRobot. Market seems a little bullish right now. We got some bear flags here, but
like cleaners, like what's the big deal? Like even I get that like Amazon.
oh man, this frickin' vacuum cleaner, robot vacuum cleaner, I hate that thing.
At this point, it doesn't really matter.
If you live in an apartment
doesn't seem like some great.
and you got thin walls,
you know,
I hate it.
Monopoly, but there's really not.
People leave that thing running for hours. Boom, 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 boom.
Is that there's generic competitors for, you know, way cheaper. I don't know, maybe not generic is the word, but there's a lot of competitors, and their stuff is so expensive. It's crazy how expensive the products are. I mean, I guess we're first out of the gate with the Roomba, but that was like 30 years ago.
Microsoft's the one to be watching this week.
The question too is if they're not going to combine.
We got a double top right here.
Amazon totally capable of making another product for a cheaper price. It's very similar, right? And I think
Double top on the 20-day, and we broke it.
Obviously, we've seen European
today.
Union, pretty tough on a lot of the tech mergers.
That's probably an all-time high.
Which, you know, you can see why
Yeah.
it makes sense in some of those areas, but in this particular one, it is a surprise that there's no wiggle room in terms of this merger.
So here's one. This is almost up 100% in a year.
$1,400 for the top line room.
Year and a couple months.
Also making, like,
Just unusual.
lawnmowers and stuff, and dehumidifiers, air purifiers, or whatever. So I think it's like they got.
There we go. Now I'm at 121 on this here.
Rough times for iRobot.
I think we can get down to this
especially in the AI
bottom
world, right?
VWAP.
On your name and you're crashing. Not a good look. Thanks, Jeff Pierce. When we come back, let's get ready for some more earnings. Taking a look ahead at this.
These were all bear flags. I could tell by the upper shadow of these candlesticks are all heavy, long-legged, which is telling you early that we could get a downside reversal. Same as what you see right here with this shooting star or this hammer. That's.
Trading at Schwab.
Now we get one more knife on this thing. I'm going to get out of the trade.
The power of Thinkorswim, the award-winning trading platforms.
You got to watch the tape. We'll have a moment of silence here in a little bit for our soldiers. We'll probably be doing a lot of that with Biden in office. Especially if we fund their wars for them. IWM's kind of breaking out of the snake with an inverse head and shoulders. Still a little bearish. We got the QQQ pulled back to the 50. Trade new high here on the SPY. I mean the Microsoft. 181 something is solid support for Tesla. That's what we got to keep a hold of. Trying to get in this channel here. So far, we're still holding up. As long as we stay above this trend line, we're still bullish on the SPY. If we can start building below inside of here, we become bearish. So we're squeezing right now between the VWAP and that trend line. New resistance is 487.92 for today. Baba pulled back. Big drop on Baba. Boeing pulled back to support for right now. Verizon pulled back. And things don't look too hot.
Delta on that one, but to offset some of the costs on that and take advantage of that divergence between implied volatilities, I'll sell the near-term Feb 16th monthly options on the 167.5 strike call. So I'm creating $12.5 wide.
Sophie's about hit my resistance level.
It's bullish. You're paying roughly about a $6 debit on that. That's going to be a risk.
We're within cents from it
on this one. But you can see from a risk profile standpoint that it takes advantage of a move higher. You're paying a lot less than the width, less than half the width of that call diagonal. And the idea is if the stock does pop, the option market's pricing at about a plus or minus 5.5% move in the shares, $8.50 either way. If you do get that move higher, implied volatility low levels are going to really fall significantly.
BYDDF has been down again. I had kind of hopes for this one here, but the EV sector is not doing too well.
Net risk, increasing potential profitability, but you're buying basically a
Piton's at a quad. We got TKO down a couple bucks.
38% implied volatility on aggregate in the near term February monthly options. But
No
you're
freak that
buying a
owns the
$12.5
place
like call
resigned
that's a lot cheaper than
of sexual-
the width of that call diagonal. So you're paying roughly about a $6 debit with the expectations it's going to move higher.
All right. Yeah, it's interesting. I mean, it seems like the options are pretty juicy in here. So they give you
Spies
some,
double top in
some
here.
action to work with. Like it. All right. So looking for the stock to firm up here and kind of more look like the last 3 months than the last 3 years.
Yeah. Yes.
Okay. Let's talk some Starbucks here. This one's a tough one, Eric, because it seems like in so many ways Starbucks is kind of in a world of
Got
its
some
own
more at
as far as
102.
restaurants and consumer discretionary companies go. But I guess some of the China connections have put it in an unfavorable category with the market over the last year and a half. Some labor issues too. I mean, what is the biggest catalyst for this company now?
Yeah, Starbucks still has a wonderful brand. You know, it's still the place.
Starbucks still has a wonderful blonde.
You know, it's one of the world's kind of largest digital payment companies. They've got 30 million people using the digital app.
Got 108 average.
You know, a lot of money in prepaid spending on those. So it's an interesting company. You've got a new CEO who's trying to improve margins. The biggest risk for Starbucks heading into this quarter in 24 is that they've spent the last couple of years taking price. You know, they've upped price about 6-7% annualized, and that's really driven revenues. In fact, the last 5 years they've averaged 8% revenue growth, but only 2% EPS growth. So margins have contracted, and so what investors and we will be looking for is, to what extent can margins expand? They've got a new system called Siren, new
Carvana double top.
new drink preparation machine.
Carvana double top.
From the baristas. That should help. They're implementing, drive-throughs, getting more throughput. But until they can prove that they can get volume to be commensurate with the price hikes that they've implemented, which, by the way, is very representative of consumer companies across the economy. That's why it'll be an interesting read for many consumer companies tomorrow when they report. If they can do that, then they can get some margin expansion. The street is estimating 50 bips of margin expansion in 24, and that would underwrite about 13% EPS.
Average on SPY puts are at 108.
Both UPS and Starbucks, for that matter, and I think even for the S&P 500. This week, we should really be looking at margins.
Man, if they can get that type of EPS growth, you'd think that the market would give them some love for that. I mean, that's pretty good stuff.
Now we're at the VWAP.
Some big breakthrough technology or something. I mean, for a kind of pseudo staple to be able to do that on the bottom line. But market still has been.
I haven't shopped got me a Starbucks coffee since I got one last year.
Likewise.
Pumpkin spice.
Starbucks. Tom, how do you want to trade it? Reports the day after. We're on the 30th, tomorrow after the bell.
Yeah, and if you look at the results from last quarter, the stock did pop, but the quarter before, the stock dumped on earnings, so it does have that ability to move. So I looked at a strategy that's really inexpensive and cheap because of that event risk, implied volatility levels in the near-term options.
Yeah, the setups there. We got a falling wedge.
So I just looked at something really short-term. You're taking advantage of, once again, of that implied volatility divergence that we're seeing in the near-term options that you're selling versus the longer-dated options that you're buying. So I looked out at the February 16th monthly cycle, so about 18 days till expiration on this one. And buying a call to the upside, buying the 98 strike call. The option market's pricing in
Not much of one, though.
$5 move in the shares, and this lines up with that move to the upside. Buying the 98 strike call in the February 16th options, selling the February 2nd 98 strike call, so a 2-week wide call calendar to the upside. You're paying roughly about 20-cent debit for this. There's your risk. $15 per spread on this one, Oliver. But you can see from the risk profile, you've got break evens near about 91 on the downside, about 106 on the upside.
So far, it's staying bullish.
18 days, so really inexpensive.
The SPY is
buying that cheaper implied volatility level, an option premium, and this is an inexpensive way to play a directional type of trade where you think, hey, that one standard deviation move that the option market's pricing in to the upside sounds good. You'd put it there, but if you're bearish, they're flexible calendars are, so you can put it down to the downside, maybe at the 86, 87 strike, that one standard deviation move. So it's all based on where you think it's going, but this is an example where you're taking advantage of a low cost entry point with the potential for this thing to triple, quadruple in price if it goes up at or near that 98 strike, but still got a nice wide range where you can remain profitable on this inexpensive call calendar to the upside.
Okay. And I like it. Thanks, Tom. Optimism in the tone for the trades this morning. Thanks.
Not here.
Investments. More preparation in hour 2. We're going to look at GM. Now that we've heard from Tesla, a chance for the legacy companies to make their stake. Then we'll trade Cisco, getting ready for tech, and the morning trade with Alan Nuttman. Plenty ahead.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. All so you can trade brilliantly.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example.
Netflix, double bottom. Watch Netflix here, see if it holds this double bottom. I'm still even on my SPY call here. I'm just thinking, just wanting this thing to drop. Been stubborn so far. We got Apple down $1.74. Apple hit my well, that ain't Apple. Apple hit the 200 today on the 1 hour time frame. That could be a support level. TSM broke that Darvis box last week, pulled back into it. I got to keep an eye on this. We're close to the VWAP. If we drop pretty nicely here, I'm going to probably get out. I want to take it to the opening right here. TSM hit the third linear channel on the 1 minute time frame, or the second, not linear, well linear, but what do they call that again? I can't even think of it. Frickin' standard deviation. I knew that. Oh, shit. Right there, see? I took my eye off of it just for a second. I got 20 contracts at 108. Go ahead and get out. in this next candle here. And it could get worse. There's a long leg doji. This could be a reversal candle to the upside. If that stays like that, but it did not. You gotta watch, see, you got one right here, right? Long leg doji, boom. And there's a good tweezer bottom here. Man, damn it. The IWM, I called this out of the snake. We had a nice bounce up to the 200, the Russell. The SPY hit the 200 on the 1 minute. Do I not have the 200 in here? Jeez. What's wrong with you? That was a big problem right there. I should have had that on there. I would have got out of it for sure.
Longer-term conversation, but what are the reasons that they say that? They say, oh, we're going to have these big repricing of assets from stock market and real estate here, that we're going to have these huge inflationary and deflationary cycles. Well, all of those things are happening in China right now. So your place that you're going to move to is actually having those issues.
Totally.
So I don't. The argument doesn't make a ton of sense. And in a situation where there's tons of rapid defaults, Brent Johnson, he's a market commentator.
Market's flat.
Talks a lot about this theory of the dollar milkshake theory. If you've ever seen it, essentially. There's going to be demand for dollars. Dollars going to go up. If dollar-denominated debt defaults, it's actually going to make the dollars even more in demand. And so I encourage those to look that up who are interested in it.
Is that a There Will Be Blood reference? Of drink your milkshake?
I have never seen it, so I can't say for sure. But one other thing that I think is interesting, this is a connection that I've started to make, is I've been trying to figure out why is Japan suddenly doing so well. And I think
they're
part
not.
of it is money from China that has fled China had to go somewhere, and Japan was a natural fit, especially if you need international exposure.
They're not doing so
It seems
well,
that
buddy.
China's struggles right now have been to the benefit of Japan, and we've really seen a nice.
Unless you're talking about Japan,
I think a lot of that is more about China.
then I misunderstood you.
Fascinating, because when you look at what they're doing, kind of tightening up on the margin a little bit, finally Japan, people interpret that as a good thing for the economy.
Now, something I noticed on the SPX yesterday,
bad economic outcomes. So I think you combine China's weakness, any
or it might have been the
potential
SPY.
hawkish surprise from the Fed, even on the margin this week too, could probably strengthen that dollar further at a point when China's having to come and rescue their economy. If we're strong enough to not have to start cutting just yet until maybe later this year, that probably firms up the dollar even more.
It totally would, especially too when you think the ECB is trying to make it to when the Fed cuts. It seems right now they're struggling a lot more in Europe than we are here, especially if you're comparing dollars to dollars, apples to apples. The growth is gone largely in Europe, and so they don't necessarily want to signal that weakness. They want to kind of be in line.
So we got a shoulder line resistance off the upper shadow of these candlesticks of a head and shoulders.
From Europe's currencies as well. So it's
That's what we hit.
US dollar, we might see lower rates.
So that's kind of a resistance for a nice little pullback, maybe.
I mean, until we see it, it's hard to actually ever say Japan's going to be raising rates.
Well, that's kind of what I think part of that slide in the dollar off the highs was that marginal change in momentum of like hawkish versus dovish surprise. It was like, oh, Japan's going to be hawkish, but like still, their hawkish is nothing compared to where we are. So, and if we're going to cut, Europe's going to cut too. So it just doesn't seem like there's a lot of big like crash risk in the dollar. So I like that take. Al Coffee, nice dollar take this morning. Good macro conversation. Way to find something to talk about when markets are little changed. Let's keep talking earnings. Kevin Green taking a look at General Motors for us. The last quarter really seemed to display Tesla's dominance financially, even under times of stress. I'm not even talking about this most recent quarter, KG. I'm talking about before that, when we saw the price cuts everywhere really show up in even lower margins for GM and Ford. Does that playing field change at all after Tesla got really pinched in the earnings last week?
I think it does, because at the end of the day, for GM and Ford and some of these other bigger automakers here, they're still selling the majority of their cars are still ICE vehicles or internal combustion engines. So I think that's going to be the main driver. When you're looking at EVs, it's still a small sliver of their overall portfolio here. So I think the market has already priced that in. Obviously, we've had some forward guidance coming out from GM regarding their EV spend at this point in time. We know it's going to be a lot lower than what they expected even a year ago. And so I think the market's already priced that in here. So we are actually expecting revenue to come in at $40.78 billion. That would be around a 6.5% decrease on a year-over-year basis. And the adjusted earnings per share is sitting at $1.08. That's the estimate at this point in time. That would be around a 48% decline. Now, I think the biggest focus that we are going to have here is not only just what's happening domestically here in the United States, but you also brought up the international sales. And actually, the street's expecting international operating income for GM to actually increase by about 13.9% on a year-over-year basis, which I think is actually a pretty decent growth rate, to say the least here. We do know that North America, for the most part, should be around flat to negative single digits when you're looking at its operating income. And we know the cruise segment has been a major focus, but once again, a very small sliver of their business. I think the only thing that could really shake up the adjusted earnings per share estimate is if they have any write-downs in the cruise segment, which the market's really trying to factor in, but it's really hard to pinpoint how much they're going to write down because of some of the legal issues that they've had, as well as the realignment when it comes to their operating spend for this year.
You know, not looking terrible now after a pretty nice bounce, but still technically in a downtrend. So I guess the GM's still kind of out of favor. But then, you know, Tesla's also in a technical downtrend. That was my big takeaway last week from Tesla's earnings, is that its correlation with tech was shattered, because it generally has traded like a tech stock, but boy, now it's trading a lot more like a car stock, it seems like.
Yeah, definitely. We are really trying and seeing right now in real time the reevaluation of Tesla as a car
SPX
company.
new high
And I
on
think some of the
during
commentary that
SPY.
came from the conference call around maybe some of the headwinds when it came to Dojo, and then obviously Elon really wanting a 25% stake in Tesla and things of that
Well, they're
nature.
taking it.
It really has caused some investors to sell it off because of the lack of focus when it comes to technology. Now, I don't think that's really going to be the case. I think that's just the interpretation of the market at this point. But when we go back to GM, once again, we have to focus on what these ICE vehicles are going to be doing here. And when we have lower gasoline prices, we typically do see demand for internal combustion engines, vehicles that really start to ramp up. So I think that's going to be a little bit of a catch-22. They are actually expecting to see around a $600 million reduction in EBIT because of the UAW strike. So this will be the quarter that they take the
FSR?
write-down for the UAW hiccups that we saw beginning in September of last year.
General Motors
Once
just
again,
hit the
they may
200.
shot when it comes to that estimate. So if that comes in lower than the expectations, that could be a tailwind for the company here in the near term. I think that's where you kind of see this risk-reward balance when it comes to GM. The technical setup, yes, is definitely bearish. We are seeing a nice little bounce here. The implied moves are around 3.8%, and there is more juice, if you will, or more implied volatility to the downside rather than the upside. So the market is preparing maybe a little bit of a sell-off post-earnings.
Okay, so GM kind of got that on their side then a little bit, low expectations, options skewed against them.
Yeah, definitely. Yeah, the market's really preparing for a little bit of a pullback, and that rightfully so. I mean, you could have investors that are long the stock, but maybe buying puts in order to hedge their position. And then we also have, you know, some of these unknowns. Once again, the UAW strike is the big unknown. Their cost-cutting strategy or their plan going into 2024 is also a little bit of an unknown. They continue to have a little bit more aggressive adjustments when it comes to that.
I always wonder how can they cost cut?
I think the market is preparing for maybe a little bit of a downside move, but that's where you can have an upside surprise if they do, come in a little bit less when it comes to some of these write-offs.
Okay. All right, so at this point, the overall outlook seems like we're having a pretty macro discussion informed by a year prior of price reductions generally. I mean, look, I feel like for GM, these things are more likely to be priced in than for a Tesla, where there is so much commentary about it being a tech company, secular growth, demanding high valuations. I mean, with the valuation getting crushed in Tesla, you don't even have anything close to those valuations in the old legacy companies.
Yeah, that's true. But once again, we kind of got to go back and say that GM, the majority of the cars that GM sells are not EVs. It's a very small portion of their portfolio. So yes, we had this pricing war within the EV space, but those pricing impacts really didn't have a huge impact when it came to ICE vehicles that are just the traditional gasoline vehicles. That really did not materialize as the market did expect. It's really more on the EV side. So I think the market is trying to evaluate these companies based on their traditional business and not so much the expansion of EVs at this point in time, because we know that there is a global slowdown when it comes to demand, and then also their ability to right-size the business or make it cost-effective has just not been able to materialize. So rightfully so, they're going to adjust that strategy here. So price wars, yes, they're going to have a little bit of an impact, but I don't think it's going to have a major impact when you're looking at the entirety of their portfolio.
All right, understood. Good assessment. Kevin Green, thanks a lot for the look at GM. Exactly unchanged today ahead of the reports. Going to be a good one to compare to Tesla's numbers after their margin pinch. Like the macro discussion in there on the overall car business. Thank you, Kevin Green. Let's do some trading. Let's talk some stocks with Alan Nutman, Chief Market Strategist at BullseyeOption.com, here with us in studio. Another Monday with a big week ahead of us here, Alan. How you feeling?
A lot of earnings. A lot of earnings. Markets continue making highs. More money, more money, more money, and more momentum. You've got to respect momentum. It's that simple.
Don't fight the trend.
Don't fight the power.
Yeah.
It's in a lot of aspects of your life. Don't fight the authority and just go with the flow.
Who's the authority here? The Fed controlling the soft landing, or AMD this week telling us that AI is taking over the world?
I wouldn't say it's controlling. I think it's finessing the soft landing. So there's 50-50 chance of a cut in March. But
think that matters for stocks right now?
I mean, I think we're looking at the end game. The end game is rates are no longer going higher. Okay, so we all agree on that. The pace of the cuts, that's the eternal question. But we know that over time, the markets are telling us that we're coming back down to 4% in short-term rates. So, that's great. We're holding above 4%.
Banks look good today.
I think
starting off Monday pretty good.
Give the dollar a little bit of a decline. That could be the next catalyst here for the markets.
I'm still in my put, though.
Hikes are done. I do think that's more important than when and how many cuts.
Right, exactly. But, I understand people. There's been a crazy frustration about people. They don't think the Fed is giving good enough signals over the last couple of years. I mean, they could have spelled it out more that they were going to raise rates, they were going to, slow things down a bit, and now they're getting to this pause point. I mean, it's pretty well spelled out. Look at what the markets are telling you. The markets have had it right. If you look at the interest rate markets, the markets have had it right for the last couple of years. It's not that hard.
They have not.
Go with what the markets are telling you because they've had it right.
Do you think
maybe the markets, but not the people that watch them.
Pecking order of catalysts this week, Fed number one, or do you think Apple, AMD, these big giants are going to be more important at this point if cuts are a certainty to some extent?
Well, they are a certainty. I mean, it's just a matter of when, not if. Just like S&P 5000, we talked about.
NVIDIA just popped.
We're 100 points away from that. That's a when, not if. And in the bigger picture, I'm
looking at really taking advantage of NVIDIA today.
Recovery that we've seen every time in history, and that's only 25% above. So, I got a lot of positives. Like I said, we've been in a bull market for 50 years. We've had a couple of minor pullbacks in the last, couple of decades. But other than that, we've been up and away, and you've got to understand how to use leverage properly and how to use as far as the ability to buy on dips and risk reward is what is the key.
You're doing a little bit of dip buying in Cisco, which got whacked on the last earnings last fall.
Yes.
How come this one's on your list?
Well, this has so many technical, and again, technical trading is kind of a Rorschach test.
106.11.
And so this is a stock over the last 5 years traded between 40 and 60. So it's been sideways. It's above the midpoint at 50 now, so you should see a pop to the range top of 60. Right now, we're 10% off the highs that we had in September, and we're 20% down from the 2021 top. So from risk reward, this is a stock that's up 7% last year versus the NASDAQ up 45%. So a little bit of catch up. This is one of the big boys. I'm seeing the leverage buying accumulation, which I look for as an indicator. It's a money flow indicator, so it's not just me. I'm piggybacking on the big money. And so we've got a double bottom at 46. So a lot of things add up for risk reward. You know, Apple's going to lead the way, Nvidia's going to lead the way. This guy has to, you know, this is an old school, like me, old school tech stock.
Hey, we've had some good old school tech stocks lately. IBM, Intel, then Intel gave back
Make
a little bit
old
on
new
earnings.
again, huh? Let's talk about that.
That's not bad. That's not bad. It's almost closed the gap from last earnings, so I guess that's a good thing.
Exactly. So it's had a stair step where it's had higher lows and higher highs, so it's closed the gap. Now, what it's done here is there's another gap up above at 55. And it traded between 51 and 54 for 3 months in September, October, November. So we're back inside that range again. So break under the range target is 57. So I've got a lot to look at here. So the way I'm looking to play is I'm buying the April 47.5 call.
Okay.
So 47.5 call straight for about 5. So it's
that's way down there.
So, well, it's got a double bottom at 46. So but it's got that 80 delta. It's got 3 months of time. So, you know, you the 550 on there. So it's the expiration's about $1 away. The expiration break even anyway is about $1 away. And if we get up to 58.5, the option gains 100%. So it's about math, it's about leverage, and it's about risk reward.
Okay.
And I'm a big believer in tech, you know, but I'm not going to chase the big dogs. I'm going to jump on board somebody that's established a nice bottom, a nice reversal, and has more upside.
$3.50 to double your money, basically. But you got it's a pretty hefty trade to put on, right? $550 because it's way in the money.
Well, yeah, it's $550. It's like being long for 47.5. Are you? If I said, hey, I got some shares of Cisco from 47.5, would you like those?
Right.
Would you like
pay
those?
the premium for
If I handed them to you, the expiration break even's $1 higher, so I'm paying $1 for that time.
I would have liked to have already had them.
Well, I can give it to you right now. You can be long for 47.5 right now, and it's going to cost you $500, but it's already in the money.
Yeah.
Going already deep in the money.
All right, like it. Looking for Cisco to close that next gap. Ideally up near the mid 55s.
Yep.
Hanging on a pound here, came off a couple bucks since the trade about a week ago.
Yeah. Is it a June option? Yeah.
Sticking with it?
Yeah, I think it's June. What month are we in right now, my friend?
We're about to be in February.
No, we're not. So you can't say we're already. We're not. This is not the future
Don't
show.
add on baby,
This is
we're not
not
that
the
guy.
future show. You're not looking into the future. We're talking about the here and now. And that's why I trade the way I trade. And I was looking at my.
But you really stick with these through expirations.
Yes, I have. Oh yeah, I have what I call lifestyle options. I'm taking time out of the equation because I'm buying deep in the money options that are going to act like the stock, and I'm buying plenty of time to ride through the ups and the downs. Now, from a risk reward standpoint, I look at the markets more on a weekly basis to make decisions or bi-weekly basis, and that's why I have my little cheat sheet here to see, like crude oil was up $5 last week, gold was up, whatever it was. I look at things in the big picture. I don't worry about day by day or even week by week. I use options to be able to have that staying power.
All right, the long-term Cisco trade. Thanks, Mr. Nutman.
Thank you.
Appreciate it, Chief Market Strategist, bullseyeoption.com. Looking for that S&P 6K, but Cisco in the 50s first. All right, we'll come back. Let's talk some real estate. We discussed the China problems so far this morning. Let's talk about the U.S. and how to figure out all that empty office space, the difference between commercial and residential. Be right back.
There we go. Okay. Here we go. Boom, baby. Get out. Finally. Man, that
Download the Schwab Network app and join in on the latest market trends.
out at 120.
Anytime, anywhere, on any device for free.
I'm done.
Schwab Network.
Off to the beach. 3 black crows with a hammer here. You might get to the upside.
Wrap up the trading day with me, Oliver Rennan.
You might get it to the upside here.
Coverage, 3 p.m. Eastern. It's Market on Close.
But with all the uncertainty this week, we got to be very defensive.
No place better than the Schwab Network.
Fuck, I wasn't watching either, man. I could have got stuck in that sucker.
bringing together earnings, data, the biggest headlines that move the market, all condensed into a few minutes.
Always clean. This is Jim. May I help you?
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device.
Hello.
Recap your trading day with the wrap.
Always clean. This is Jim. May I help you? This is the FBI. We are recording this message. Right now, Jim is in Africa studying the kangaroo rats. Any phone calls from here will be forwarded to the FBI. Have a great day. Bye-bye. I am a robot. I am programmed to receive. Oh my, look at there. 129. Shit. No, $180. So let's look. See, this was a bullish flag to boot. But we got to study these candles and wonder what the heck happened here. We have an ascending triangle off the 200. So if you weren't watching that trade, or if I was still in, I would have still probably held that trade if I was in calls. And I was in puts, and I was kind of sweating it out right there. It got down to 96 cents. Let me look at the calls right now. The 489 strike. Should I turn down the TV volume? Yes. I didn't know it was that high. Can everybody in the room hear it fine?
Issues. It seems like residential housing is pretty well supported with the lack of supply. So is the negativity coming mostly from the commercial side?
Yes, I think the commercial real estate, particularly the office sector, is still feeling a lot of pressure. Occupancy has been under pressure. The leasing demand has been slow. So I think from the office, the quality does matter. You know, the REITs that we follow do tend to have higher quality assets. But still, I think we are forecasting occupancy to be somewhat under pressure and leasing activity to remain slow, as well as transaction activity to be fairly muted.
Problem I've been having with trying to
I'm gonna go make my lunch.
market narrative standpoint is that
That was a good trade.
you look around and there's so much emptiness.
See, that's-
it feels like it's a really obvious problem. But then at the same time,
Patience,
we all
I guess.
can see it too. We can literally see into the buildings and they're empty. So like, what's the surprise factor? How come the market hasn't panicked more? Is it just waiting until we actually like get to the debt walls and then we're gonna go, oh, this is a massive problem?
Yeah, I think this issue is going to take years to unfold. As the leasing activity remain low, occupancy will gradually come under pressure. But to the extent that we do see a turn in employment and better economic growth, that could mitigate some of this impact. So from our standpoint, I think the impact will likely be gradual and will last for the next several years.
Okay. When does that kind of begin? A long-term problem, but is there any section on the calendar where it's going to be hardest to get through this debt?
I think this year would remain very challenging. But if the Fed start cutting rates, which I think S&P anticipate the second half of this year, that could relieve some of this pressure, particularly in the financing front. So I would say things remain pretty challenging, at least through the first half of this year, and maybe we'll start seeing some relief on the financing front in the second half of the year. But on the operating side, demand will likely remain fairly weak.
Okay. Sounds like we still have some pretty big hurdles to get through. Anna, thanks a lot for the update.
Thank you for having me.
Absolutely appreciate it. Anna Lang, Managing Director of U.S. Real Estate and Sector Lead at S&P Global Ratings. When we come back, more earnings back on deck in the chip world. Super Micro has lived up to the name. An incredible close to last year and a big blast off in 2024. We're going to take a look at the chart there. We'll discuss housing with PHM and pharma with Pfizer. Coming back with the chart master team in a moment. Stock's still doing nothing today, so come join us to look at some charts next.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go, at 12 p.m. Eastern on the Schwab Network.
Charts getting ready for this week. A couple big names. We're going to continue the real estate discussion. We're going to look at Pulte Group. We're going to talk pharma with Pfizer, but let's start with Super Micro. Rick Ducat, Jenny Horn, squad here this morning, and Super Micro kind of sounds like an oxymoron a little bit, but it's been fantastic.
It has been fantastic. It has a really good exposure to the semiconductor space. So following what was some pretty mixed results last week from some of the semiconductor stocks like Intel, obviously adding things on a more sour note, this name has been on a tear. I mean, it gained 30% of its value just last week. It continues to move substantially. It also has about 10% short interest. So just mind you that that's typically something I tend to look at or to pay attention to when we see things move as quickly and as vastly as this stock has. But they've really blown the roof off their financial expectations now for their fiscal, or the first quarter of the year, but also their fiscal 2024 year. They did raise their sales and earnings guidance by a significant margin, boosting already what had been a pretty bullish overall stance most people had on this company. Sales are now expected to fall between around 3.6 to 3.65 billion, a pretty impressive jump from its prior guidance between around 2.7 to 2.9 billion. Moreover, they also did adjust their expected earnings to fall between around $4 or or $5.40 to $5.55. That was from $4.40 to $4.88.
Wow.
So
So that was the reason why I went nuts.
yeah, and they justified a lot of these revisions as the fact that they saw really, really high customer demand, and if that is your biggest issue, you're in a pretty good place.
All right. Products are micro, the chart is super. Pretty good assessment, right?
Here's the micro, here's the super.
Yeah.
You know, I guess you could say it like that here. But, you know, some distinct phases in this chart here. You can see earnings was a major catalyst for a steep rise upward there.
Yeah.
Then earnings giveth and earnings taketh away. Then we had a drop here. And then we had some sideways movement centered around our volume profile point of control, this thick red line here, according to the volume profile study. So that's the area of heaviest trading. That's a significant point of support or resistance, depending on whether you're above or below it here. Then another huge gap upward here. I believe it was a 36% one-day gap up when they revised their earnings guidance here to the upside, pushing us up into new all-time highs recently, coming quite close to that area today. Not quite there yet, though. But in terms of trend, we're above our moving averages. They're all trending upward here. RSI has been trending upward as well. We stayed above that 50 midline here, comfortably in the overbought area. A reading of 82 on the RSI, really quite high. It only goes up to 100 here, and anything above 70 is overbought. So the momentum is strongly in the hands of the bulls here. Now, let's look at some potential support and resistance based on our standard deviation channel study here. Blue line, linear regression line, line of best fit, +1, +2 standard deviations. +1 is support, and then we've got these this old low close near 435 just below that. So 435, 453, those are some areas to watch. To the upside, +2 channel comes in near 544, so a bit of a climb upward to get to that point, but that could be to where we look for some potential resistance.
All right. Sounds like it's got obviously a lot of momentum behind it, but it's in very distinct, you know, rarefied kind of era here, but it has been consolidating a bit, so that's really encouraging, you know, that we've had a couple weeks to digest that big move, and there really hasn't been much pushback. When there has, we've bought the dip on the stock, essentially.
Pretty much, yeah. You can see that we didn't get too far below this 21-day moving average.
Now I'm trying a new strategy here.
And then we can also see
I really want to get this down, this scalping.
Right here, we formed a bit of a volume node as well. So some takers at these elevated prices here.
So I watched a few videos that know how to trade the kind of snake that I'm talking about.
You know, a couple red
A
candles.
lot of times it takes two.
Very small red candles.
Yeah, exactly.
And it's always about the time of the day, which I've got my beach trade out of the way. I can just go ahead and be done with the day, take my break, do whatever I want to do in life, and then come back and do the same thing again the next day. We've got FOMAC, we got a lot going on this week.
Other parts of the real estate market. Pulte-Group's down a little bit. We did get
These
some
people on CNBC, I listened to them again today. It's all about the
Same has been on a monster run. I mean, we
the
are
rates and the
sort of
Fed
getting
and the
right
blah,
around
blah,
the
blah.
highs. I know we're falling about 4% off of recent highs, but hey, the stock is up 100%.
And it is. This is Fed week.
I mean, the home building space has seen
The market's all about the Fed, which I'm not used to trading a market like that.
That have only been supportive of some of the
Usually that's the last thing you want to think
this
of.
is a company that around 98%
But we're so
of
far in
overall
debt,
revenue is derived
our
from home
spending,
building, so this
there's
is
a big
pretty
disconnect
easy to say
between
this is a home building stock,
what's going on in
obviously.
Washington,
They're
what's going on in Main Street.
Experience actually decreased growth though.
Just
on
a lot of
year-over-year
chaos.
basis, and they do report their results later this week.
We did hit this
They've
double
really
bottom
had
down
performance
here,
over
so we
the
need to
last
wait
6
for the
months,
pullback
but
here.
Overall, now expecting some of this luck to have, not luck, but like sort of strength to have run out, as we are expecting relatively difficult comps, not just for Pulte, but for the entire home space as a broad-looking space. Now, their home building segment is expected to have now reflected the rising impacts of these mortgage rates compared to a year ago. Also, the slight shift in their mix towards build-to-order homes, which won't deliver until 2024, is expected to also be a headwind in this coming quarter. However, the persistent scarcity of available existing homes is expected to actually have benefited this company, because right now there just aren't homes available. If you ask anyone actually that's looking to buy a home, you know this trend has been reflected pretty substantially in anyone that has been experiencing like there is just nothing available. So when you're a Pulte Group, that's not a bad thing to have when your supply right now is sort of underpacing your demand.
Absolutely. Been a big part of the rally behind these stocks. And even though there was a little bit of softness when KB Homes reported first this earnings season, the overall chart looks okay. What about that RSI down there, Rick?
Well, kind of a mixed picture here, I would say. But to back up a little bit, once again, earnings has been the catalyst for a lot of the movement here. Upward move since our last earnings, then transitioning to a downward move here. Then, once again, earnings made us do a sharp about face here. Bull flag, you know, consolidation area, just keep breaking through these areas over and over again here. So now we find ourselves in a position of perhaps slightly slowing gains here, because we can see we've moderated a little bit. Our sharp upward trend line in blue has given way to a more modestly sloping trend line, still up though. And you know, our price is still above all three of our moving averages, all of which are still trending upward, though the slope of our 21-day EMA has lessened somewhat here, looking a little bit more flat. You can see volume node suggests we've had strong price action around 103 to 104 or so. You know, once again showing conviction at elevated levels here. And to get to RSI, which was a bit of a mess here. You can see that we were trending downward here despite being in the overbought area, suggesting that we are seeing a reflection
calls went up.
sideways moving price action in the RSI. A couple more crossovers into the overbought area. We invalidated that downtrend line, but now our very small uptrend line has been invalidated. We did stay above the 50 midline here though. So momentum still in the hands of the bulls, but waning notably here. We haven't made a lot of good progress beyond this level near 105. If we were to look once again at our standard deviation channels here, we can see that our upside target, once we get, you know, if we are able to break above these old highs, comes in near 113.39 or so. To the downside, 104.88, the site of our best close here before we had our breakout here. That's a key point to hold. Then 21-day EMA and our trend line near about 103 to 103.50.
Seems like the worst you can say about this chart is that its momentum has slowed down a little bit, but it does have a lot of support. It's got a lot of fundamental, arguable support here. It has been a market favorite for a long time, houses. If that's the favorite, our next stock is something like the opposite, which is Pfizer.
It is, and I would say that we have been on a nice streak of looking at stocks on this segment that are like Amazon, Apple. You have names like even today, Supermicro. Pfizer is such a completely different trend, and I think seeing the significant fallout. I mean, it's rare that we look at a stock that is in this clear of a downtrend, frankly. Stock that has lost about 4.5% since just the start of this year, so it doesn't seem like a lot of this selling has abated anytime soon. We do get earnings from this company, and I do think that with the bar set, I mean, just relatively so low, it could be actually a really interesting report, especially given the fact that they have done a lot in this quarter to increase their offerings that aren't just the COVID vaccine. And of course, this company existed prior to COVID. I mean, there's no doubt about it, but they also have been really ramping up some of their drug development and have been launching these newly acquired products and newly, created products to then increase their sales amid the declining revenues from their COVID-19 vaccine. So they've done a lot. I mean, they have a major partnership with BioNTech that does develop their COVID vaccine, but they have been developing now these oral antiviral pills. Investors also will be looking at the recent acquisition of all things Seagen, which has also led to a pipeline of various drugs. So for that reason, they do have a lot right now that's being developed, if not being launched. I think that's huge because, again, I wouldn't say, I feel like this is oftentimes grouped with Moderna, which, was solely built almost for the purpose of COVID vaccines. Pfizer is a long-standing company that's been around much before the vaccines, but it's unfortunately, it trades almost like Moderna.
Yeah, well, they've continued for a long time. It's every time we talk with their leadership, they continue to talk about the vaccines as being their main thing, and the antiviral stuff is different, but still kind of connected out of the same realm. So they want to take all the technology they've used from the vaccines, try and develop into new products, but the market basically is we moved on to Eli Lilly, we moved on to Merck. So
weight loss drugs.
Weight loss drugs, and then just the traditional cancer stuff. I mean, Pfizer's going to have some of that in there, but it hasn't been moving the stock, hasn't been the main catalyst for it. And it looks like the revenue is supposed to grow a little bit, but the earnings are actually going to be down slightly that we had on screen a moment ago.
If earnings are down, it matches the chart here because we've been pretty much just down and to the right for the past 52 weeks here. Down about 38% from those yearly intraday highs. Much of the price action encompassed by our two downward sloping parallel white lines here. Bit of a downside breakout actually. Was looking pretty dangerous here. Took us into new 52-week lows. We did recover, but we stopped at our orange 63-day EMA, couldn't quite make it above that point here. Now we're finding ourselves below all three moving averages once again, all of which are trending downward. Look how far above current prices our long-term 252-day exponential moving average is. You know, we're far below that level here, which comes in around 35. RSI trending downward, recently gave up that 50 midline, momentum shifting to the hands of the bears now. So kind of a difficult situation for the bulls here. But we do have some areas to watch here. If we once again throw up our standard deviation channel study here, it reveals as well. We're right near our blue linear regression line, our line of best fit, our idea of fair value here. Old lows near 25.76 are the point to watch to the downside. -1 channel comes in near 22.80.
Visor.
Quite a stretch. Not saying we're going to reach there. This is just a projected support area. Now, to the upside, we've got our volume profile point of control roughly in line with our 21-day EMA, coming in near like 28.50 or so. That would be an area to crack. Then our best close near 29.73 on a relative basis here. That recent high there.
Man, it's a fascinating chart. Not a lot like it that's so stuck in one trend. If you go back to the original chart real quick for me, please, Rick. Because the one thing I wanted to point out is that you had on the last one we saw that the regression line was literally perfectly smack in the middle. You very rarely get just a perfectly linear regression. I mean, like the chart is like symmetrical around. And the other thing is that the gap between the long-term moving average and the actual trend is like almost equal. Like it's amazing how long it's been stuck in this trend that the long-term moving average is like going parallel to it. So to me, it's if you are a trader that believes the trend is your friend, the trend here is basically betting against the volatility other than what is kind of priced in the slope of that downturn.
Not seeing many signs trend is shifting to the upside. If anything, things are worsening to the downside.
Wild stuff. All right, thanks. Jenny Horn with the
wild stuff.
Mr. Ducat on the charts. Coming back, get you an update.
We got snake and a symmetrical flag or inverse head and shoulders. So watch the SPX right here. SPX. Whoa, whoa, whoa. SPX.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous.
Lotto.
Financially, I'm the flight attendant in that situation. The relief that comes over people.
The 4905 or the 4900.
I definitely feel privileged to be in that position.
Trading the trending names every day. It's fast market. Ready for you, ready to go.
Inverse head and shoulders,
Catch me on Fast
snake,
Market. Weekdays and
symmetrical
noons
flag
on Schwab.
into an inverse head and shoulders.
Download the Schwab Network app.
4,900 strike at
All
$3.
the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device for free. Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network.
Could drop more. I'm going to keep a tight leash on this one.
footing on reports that deal might be happening still. Nina Young with the latest. What's up, Nina?
Well, right now we have news coming from Japan that Western Digital and Kyoto could be restarting merger talks, and this is pretty big, but depending on how you look at this situation, because these two companies have been in talks for a merger on and off since 2021, and it stalled for several reasons: valuation discrepancies, antitrust hurdles with Chinese regulators, and then they both got opposition from SK Hynix and Bain Capital. But the most recent stalling of the conversation was back in October, and then after that, Western Digital said it would split itself into two companies focusing on hard drive and flash memory markets. But the relationship history is pretty complicated. Both Bain Capital and SK Hynix are part of a group that bought Kioxia from Toshiba in 2018, and Bain Capital is a major shareholder.
WDC.
SK Hynix has an indirect stake in Kioxia, and it had been resistant to the merger. Bain Capital was at one point as well, and that's why, however, now
They were on this last week also.
it's not in opposition because it's talking with SK Hynix to resume those merger talks. And back when they did stall in October, the opposition came from SK Hynix that said that they didn't back the deal last year because of the potential impact on the value of its investment in Kioxia. And the reports say the companies were also unable to agree on conditions with Bain Capital too. But the impact of this deal would be pretty huge, and analysts like it. And in fact, Loop Capital said today that while Western Digital split into two separate companies, trading as two separate equities could be pretty good, the combination of the two big powerhouses could be even more impactful.
All right, so it sounds like we might be finding some common ground after quite a volatile history in the making of this potential deal. But I mean, that's kind of par for the course right now. Tough to get deals done in general. So this one, though, a little bit more internal strife rather than external from governments. Thanks for the update. Western Digital shares like it right now at 3%. And helping to recover after a little slippage, but we were already buying the dip on Western Digital last week post earnings. Joining me, Kevin Haynes back in studio. Joe Zoll's on the line, Director of Trading Education, Charles Schwab. Joe, you ready for this week? What's your highlight?
Yeah. I mean, what's not the highlight, Oliver? You got 5 of the Magnificent 7 with earnings. You've got the Fed meeting. You've got non-farm payrolls. I mean, everything is packed into this week. To say that this is probably the most important week of the year to date, I don't think it would be an overstatement by any means.
Okay. As we talked about this morning, Kevin, a little bit of kind of outside forces maybe at work. Alex was talking about the Evergrande situation in China. Now we're talking about the Middle East violence. And, you know, we still have that dollar pretty well bid. Gold came off a bit, but bonds and the dollar bid. So it seems like a little nervousness.
And don't forget VIX. Even though the S&P is unchanged, you've got VIX creeping higher. There's nothing imminent, and there's nothing that would actually tip this into some type of sell-off or risk-off environment. But you have to see the warning signs. You have to see, Oliver, you have to see the storm before the clouds. Right? And that's what some of the indicators here for the market are telling you. And nothing may happen, but all traders should be cognizant of what's going on. Geopolitics, they're off the radar until they're not, Oliver. Yeah. And that's why you got to watch them. But the fundamentals right now, I think this market is excited about, it used to be afraid of inflation data. Now it kind of looks forward to it, because the news has been pretty good in terms of inflation. So market's got a lot to look forward to, but boy, Joe Zoll said it best. There's a lot of things between now and Friday's close.
Yeah, that is true. Joe, looking at volatility right now, as Kevin mentioned, we're below 14 in VIX, stocks at highs. VIX has kind of been creeping now for a couple months.
It has, and I'll take it a step further. If you look at, we talked about the 5 mega cap stocks that with earnings this week. That's, Apple, Amazon, Google, Meta, and then Microsoft. And if you look at the straddle prices, so basically the expected moves for these stocks, Microsoft and Google are pricing below their typical expected moves. So a lot of the option traders are expecting those to be, you know, fairly small moves. And if you look at Apple, Amazon, and Meta, they're below even more. So there's not a lot of hedging activity. You know, Kevin mentioned there's a little bit of a spike in the VIX today, but not what you typically would see for kind of a January earnings. And what I find is really interesting about that, when you look at all the forces going on around, whether it's geopolitical events, whether you know, it's the Fed meeting, and you get the non-farm payrolls on Friday, there's just not a lot of activity that would show the case that the markets are really afraid of anything that's coming out this week. And sometimes when you see that, you know, it just makes you wonder if everybody's on the same side of the trade. You know, do you need to be a little bit more cautious? And for me, that's kind of perking up my antenna this week, if you will.
Yeah, I like that. All right, so when we look at the calendar, kind of get started tomorrow. I feel like maybe Wednesday really move in earnest, but confidence, jolts tomorrow. You know, economic data not to be ignored because employment on Friday too. I mean, I feel like based on the data we've seen so far, we shouldn't expect Powell to really put March in front of us.
I think the key for Jerome Powell is not what he does this meeting, but how he guides towards March. Remember, it's not mixed. A lot of people think it'll be later in the year that the Fed cuts rates, but Goldman, couple big banks think it'll be sooner, think it'll be March. Let's see if Jerome Powell guides us towards that.
Okay. Pushing those dots forward, or just putting any more on the dot plot? What do you think?
I think it's one of those where moving them forward.
It's time.
Yes, exactly.
As opposed to quantity right now.
Right.
All right. Thanks, guys. Joe Mazzol, Kevin Hanks, appreciate it. The closing dots, gentlemen. Trader 360 with Nicole Pedalese is up next. I will see you this afternoon at 2 p.m. We do have some earnings to start this week. I'll see you then.
Schwab Bank Investor Checking, the checking account built for investors.
Well,
Named
the heck
highest
did that
in
stay
client
there?
satisfaction by J.D. Power for 5 years in a
Whoa.
row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture, everything comes.
Now we got the double bottom here for sure.
Catch us right here at the New York Stock Exchange on Trading.
We got one more contract.
Only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored.
If it don't work, I'm gonna get out of this trade.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street.
Commercials gotta go. That's the only bad thing about this thing right here. They don't silence the commercials. So I got one at 3 and one at 250, average 275. If this doesn't work, I'll get out of it. Didn't hold that symmetrical flag, so that's kind of bearish.
$2.5 million of that termination fee immediately to repay the term loan. And then the remainder of that loan will be set aside and used for future repayments of the term loan, subject to, of course, the rights of the company to utilize such amounts for the purchase of inventory. They said they are disappointed with the company's 2023 performance, but their focus is now on all things the future. So they did finally get this, obviously disclosed that they're going to terminate this agreement. I think that this is somewhat of a sigh of relief. I know it doesn't look like that from iRobot shares today, of course, but because certain rumors and certain speculation that still will not go through per EU regulators. So I think now finally getting some clarity and the statement from both companies is something that typically the street likes. Of course, this is not great news as iRobot. I mean, they were buying those shares for a pretty nice premium, but I do think all things considered, finally having some clarity on that.
Any thoughts on Tesla?
Something that's perceived as
Yeah, I've got
forward.
All right, Jenny Horn, thank you for that. Markets correspondent.
I've got a couple tools. This is called the Ready, Set, Go one, but I'm just using the double bottom on the chart.
Bands, NFL players.
And Tesla, Sophie, people are happy about that one. Tesla's doing very well today. This is day 3. We broke the resistance level. Now on the 21, I think this is the 21 EMA. I needed this to break on that hour. So we broke that hour. That's very important. Target 191.56 for Tesla. That runs into the 63 EMA.
So you talked about having the biggest market share, right? FanDuel is huge. You actually had a broadcast here today. Why don't you tell us a moment, because you did have Rob Gronkowski here. I mean, Super Bowl champ, 4-time Super Bowl champ. He was super. Tell me about the show that you had here live today to just make this announcement.
Well, we had marching bands, we had the Gronk spike, and we had a lot of entertainment. And that's what this is all about. Sport's about entertainment, it's about getting people really involved in the moment. We saw that last night with the playoffs, what great games there were. And then we're looking forward to Super Bowl, which will be the biggest of all time, and huge opportunity for people to engage with the game and with FanDuel. So we're very excited about that.
Yeah, and I wanted to ask you about the competitive landscape. FanDuel is huge. Tell me about the competitive landscape.
Well, we have scale, and that's the most important thing. You never have 100% of the market. We have 51% of the market in the US. and we're the market leader in Australia, in Italy, the UK. And that's where we like to be. So scale matters in a big platform business like what we have. We keep growing, we keep investing, and so I have no doubt that we will continue to even grow our market share from where we are today.
So in your past life, you were working at a big hotel business that was here, and you've been on board for about a year.
Yep.
How have you found it, and what are some of the things that are on the agenda for the company, particularly with this new, eye of America now?
Put on something a little warm here and I'll be right back.
Understanding it more. What's on the agenda for the company?
So being involved in the sports market as we are is huge. Sports keeps growing. This is a technology business. We have 7,000 people working in our technology function, which is huge. It would make us one of the world's largest technology businesses. And that means we can do things at scale. And the way we set things up is each of our businesses has their own technology stack.
Mara's up today also. Mara.
Much faster than other businesses that have centralized. So it means that we are
Meta's up.
pace as a scale business.
And what about some of the things that people talk about? I mean, whether it's labor issues or AI or, malware. I mean, your business is all technology. I know you're protecting against malware. How is AI maybe helping the business, for example?
Yeah, so AI is a huge opportunity for us, as you'd imagine. We take in a huge amount of data from all of our platforms, and then we use that to set the best prices and set the bets that people want to bet on, that's most relevant for them and gets them involved in the game. So there's a lot that we do with technology, and we're very, very good at it.
And tell me, what are some of the biggest draws? I mean, really, when you think about the whole year or the few years, what are some of the biggest money makers for the company?
Super Bowl is huge, and the build-up to Super Bowl is huge, and there's been so much excitement in the playoff games that I've no doubt that will be huge as well. March Madness is huge, and the NBA, which goes on for a long time, so there's lots of games, people get very involved in that, and leading up to the NBA finals. So a lot for people to get involved in and to bet on.
What about tennis and soccer?
Tennis and soccer are growing, and soccer outside of the US market is huge. That would be our biggest sport. I think in due course, NBA may actually become even bigger than soccer with the growth that we're seeing. But currently, soccer is huge. A lot of growth in NBA.
Yeah, and the Knicks.
Oh,
Knicks
yes.
is doing so well.
You bet.
Everybody in New York is so excited, though we did have an injury over the weekend. It is wonderful to see you, Paul Edcliffe-Johnson, CFO of Flutter. Thank you for being with us, and congratulations to you and the team here at Educator today. Coming up, we're going to have a lot stacked on this show for you.
Come on, baby, break.
We've got 3 charts, 3 trades. Rick Ducat will take us through the technicals. Mike Shore will take us through the trades from Fortinet, United Health, and Occidental Petroleum. We'll be right back.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Oh, God. Coin and Mara having a good day. Tesla? Where's that chart at? There it is. The Bears don't know what to do. The 1, 2, 3 rule, man. There's a great video. Come on, SPX, move. Now this is when. It says 290, we're higher than that. We're at 3.
That's a good question. You know, I think that they've set the bar pretty high. We have a lot of stuff coming out this weekend. They've set the bar pretty high, running up these queues to where they are, and I think that...
I think they did too.
I think that we're looking at a scenario where if we have blow
I get a pop on this here SPX, I might sell.
across the board, and if not, then they have some room to sell it, and then they buy it back. I'm not
SPY hit the 200.
I think that it's going to take a lot to push these things appreciably higher before anything, before we get a pullback, and those buys, those dips will be a buy.
Yeah, oh, okay. Is that how you're coming to us with Fortinet, is our dips buys?
Well, no.
No.
Fortinet is playing up into earnings. So I'm bullish, and if you had to ask me one way or another, on these cyber tech stocks, I don't know why, but they do horribly on earnings typically. So this is a run up into a bit of a pocket as we get into the gap from last earnings. But it's really, really hard to go in long to any of these cyber stocks through earnings. After earnings, yeah, again, buy the dip, and I don't know why. I don't know why some stocks do better on earnings than others. Some sectors do better on earnings than others. Cyber is not one of them. But this is up to, not including earnings.
Bingo.
Rick, take a look at the Fortinet chart for us, please.
Sure. In a lot of ways, this chart, the story of this chart begins with that big earnings gap. We had a 25% gap down on our earnings during the summer months here. That led to a period of kind of sideways consolidation here, mostly centered around our volume profile point of control, this thick red line here. That's the area of heaviest trading. So around 58, that's where the most activity took place on this chart in terms of volume here. Then we had another gap down. And since then, we've seemed to have solidified. We're up almost
Now we got it.
from those 58
Come on, break.
lows, just above 44. Now we're kind of in this no man's land, this area where we had this large gap here without a lot of, near-term
Conviction.
price action to go up. We'll have to go a little bit before we had that gap down to try to assess some support and resistance. But looking at our moving averages, prices above all three of our moving averages we follow, yellow 21-day, orange 63-day, purple 252-day exponential moving averages, they're all trending upward. The faster moving averages are outpacing the slower ones and diverging. So the trend is more geared toward the upside. We also can see on our RSI, after a period of sideways movement, we broke above that overbought area. Now we're above that threshold of 70, which is a sign of strength here. So momentum more geared toward the bulls as well. If we were to start looking for some potential resistance, 67, this blue line, that represents some old lows that we saw before we had that gap up, or gap down, excuse me. And then we also have 71, another period of lows that we could look for some potential resistance around. Those two areas also
FTNT. That's a Bitcoin trade, ain't it?
in terms of support, around 65 was old high close there. Then our yellow 21-day EMA roughly lines up with our trend line near 62.
Tesla hit the 51 though, and the 50, that could be some resistance. If I go back to my old rule.
Well, it So what I'm looking for is I'm looking for a breakout of the recent highs at 67.
YouTubers, go back and watch my 3-day rule video that I did this weekend. This will give you a good idea on how to trade something like Tesla that's had a bad guidance. I don't ever want to jump into a trade like that unless it's been 3 days after and see what develops. Today, we definitely had a breakout on the 3rd day.
68.70 call spread, pretty darn cheap, 50 cents. That I don't think that we're going to go rocketing up to that 74 level before, but we have some really nice.
Called IWM first thing this morning.
So if we buy that at 50,
we're at a 1, 2, 3 resistance level
to the 70 line,
on the IWM.
That means that we have a 3-to-1 reward to risk ratio on that one.
And you know, as you talked about the market,
We're bullish now
Fed week, before I get to your next,
on the SPX as long as we stay above the 200 SMA.
and so you were talking about buying the dips in the big
I'm going to see if I can get 350 out of this.
I certainly sense a little
Maybe
bit of
more. Might get another.
the longer term. How do you feel about how the Fed may or
Back
may
up to
not
489676. We got to break this resistance. We got a couple of them here. We got to break this channel of resistance, which is
Sort of clue as to, they've already indicated that they're going to, if things continue this way, that they're going to be pulling back on interest rates, which is great, but it's a matter of, does it happen in March, May, July? And I have not been in the March camp, and I'm not really sure why, you know, the pricing of
right
the Fed
there.
funds future is actually giving it a decent chance.
Could take profit
I don't
here.
think that there's any reason for the Fed to cut.
We got a couple bear flags.
Continue on like this.
Got a shooting star and an inverted hammer.
Seems comfortable with. Keep on
A
playing
lot of
out
times
with
these
your
are
data
squeezes.
going forward.
This is,
Still
but this
trending in
ain't.
the direction that we're at. Great, then we can cut in the summer, or maybe even wait even longer. But the market doesn't seem to be really all that uncomfortable with rates where they are now. There's
New
no
high.
reason
Oh.
to introduce another variable in here, which could give us another inflation.
Always clean. This gym may help you.
So I think I think that we're looking summer and maybe even to Q3 before we start seeing any cuts.
Okay. Next up, should we get to United Health, which has come off those highs at 554. We've seen some of these names facing some expenses. For example, Humana reported some steep losses. We watch this health very closely. United Health had this big gap down over the last recent trade, let's say over, since December sometime. Tell me a little bit about your ideas here, Mike.
Yeah, so what I'm looking at here is that, I mean, they're just in general with the healthcare stocks, they've been under some pressure.
We're retesting the 200 right now.
Great, but they are rebounding from that. But we are coming into some significant resistance here at the 200-day moving average. So I'm not convinced of a move back up into that 515, 520, 540 range. I want to play a bearish, biased iron condor that we hold this resistance up at the 200 moving day moving average, which is right around 506.5. So basically, okay, things aren't all that bad, but I really don't see an upside surge.
Yeah. All right. What do you think here, Rick Ducat, as you take a look at well, we're talking about some of the fundamentals. Take a look at the charts.
In the shorter term, to put it simply, this chart is kind of a gappy, choppy mess here. You can see that we've had this period of kind of sideways movement for much of the earlier half of the past 52 weeks. We had a nice rise upward here for a while, culminating with our 52-week highs up there near the 5, I can't see it quite very well, but 560 or so. But then we've progressed downward here. We had this more modestly sloped blue trend line here that has given way to a sharper, steeper downward trend line here. We've got two white trend lines kind of going toward each other, converging toward each other, a falling wedge type of pattern here. Now, the area that Mike highlighted of that 200-day simple moving average pretty close to what I have here, the purple 250 2-day exponential moving average. What's the difference between an exponential and a simple moving average? A simple moving average is unweighted, all the values are treated equally, and the exponential moving average is more heavily weighted toward recent price action, so it's a little bit faster to react. It has more of a bias toward the recent price action here. They're both fine. They're both fine for using in your trading as support and resistance here. I just happen to use a different one. It's pretty close to that same area. This comes in around 510.67. We've also got a volume note here, an area of heavy trading around that same level here. So this could be a key resistance area to take out here. Now, in terms of our overall trend, the bearish outlook makes sense to me. We're below all three of our major moving averages. The moving averages are all trending downward. You can see the faster 21-day has overtaken the slower 63-day in yellow and orange respectively there. And we are, just in an overall environment where these moving averages are sloping downward here. RSI also trending downward here. We've got a short-term trend line to keep an eye on here. Look for it to be invalidated with a push upward, but for right now, things are in the hands of the bears. Made new relative lows on the RSI there. So support and resistance. This area right here, this green line near 503, that was an area where we bottomed out in terms of our closing prices a few times. Happened again here. We're just a bit above that area, so look for that to hold on into the close. To the downside, old lows match up with our volume profile point of control near 479. So to the upside, 250-day EMA.
About ready to exit Tesla?
So, and then our old lows right about here near 516 could be another hurdle to clear.
This here moving average will keep moving on me, but I've got two real nice engulfing candles, and I don't want to disrespect them.
I know you have these on the mind. How would you go about trading this one, Mike?
So I'm looking at, I'm going to go out to next week, so
I had 190, 192.
45, 490, 507 half, 512 half. So I've given myself a little bit of room to clear that 200-day SMA, and to get back to your comment on that, I do use EMAs. I don't use them on my daily charts because it's a matter of style. They're both. I use EMAs all the time in my day trading, but for longer term, more sweeping type moves, I go with an SMA. But in this case, they're not that far away, and the market does look at the SMA. Whether we like it or not, it's always, what is the market trying to do? What is it looking at? And it lines up pretty darn well. As we see today, highs bounced right off that 506 half, which is the 200-day moving average. So I think that you're going to see some profit taking here from everybody that bought it down at the 575, excuse me, the 480 level. We'll see a little bit of that and then probably settle. So we're only in this for 2 weeks tops, and selling that iron condor, you can sell it for about $3, which totally you can lose $5 because it's a $5 wide spread on either side of this, bearishly biased, but we collect $3 to do it. So we are actually getting 1.5 to 1 on this. Of course, we do have the bearish bias to it, and if it goes up, well, then we lose. Good trades lose money sometimes.
Yeah, understood. Last but not least, when we take a look at Occidental Petroleum, how are you feeling about this one particularly? We've seen the investments, mergers and acquisitions in the group. We've seen oil right now at $77, so it's been creeping higher of late. Tell me more.
Yeah, so, the energy sector's been, frankly, kind of confounding to me. You would think that it would be where the overall price of oil is and what is happening in the crude world. I guess we're all in the crude world, but the actual crude oil world, that I'm looking at these prices, given all these fundamentals, probably need to go up. And so, there are a lot of names that you look at in the same place: Valero, CVX, Oxy. I just picked Oxy for today, but I'm looking for a grinding type of move up. Remember that earnings are out of the picture here, but a grinding type of move up that, and frankly, I'm looking for one that's pretty cheap. So I'm looking to play this with a call calendar. Call calendars are done, or calendars in general are done, when you have either a high disparity between shorter term implied volatility and further dated out volatility, which we don't have here, or when you expect more of a grinding.
Boom, baby.
This kind
Go.
of trade can actually make money if we just kind of sit here.
We're at 340.
Collecting theta. So I'm looking at the February 9th.
We got to break this resistance right here. This is my resistance channel. Now to manage, it's a good idea if you're in this trade to do what you got to do.
Designed to be well, actually, none of my trades are designed to be home runs. They're designed to be good leverage bets. But buying this thing at 45, you should be able to sell this if we grind up to the
body of that candle
at
and the body of this one.
75 cents.
I'm not concerned about
Understood. And as you said, grinding higher.
the wicks.
Today, Rick, what are your thoughts on this chart today?
Two competing trend lines are my headline for this one.
Let's see if we get one more candle to the upside here. If it pulls back and hits this support level, I'm still bullish.
Trend line starting with our yearly lows near 55.12 and sloping upward there. One key thing to note, price has crossed above the yellow 21-day exponential moving average, which has also started to shift from a downward slope to an upward slope. Why do we care? That's an early sign
There we got
of
350.
trend change from bearish to bullish here. So
Come
be
on,
on the
give it.
lookout if we can
There it
clear
is.
above this level here, 58.50. That was
If this
point where we
breaks,
had
I think
established
it's
a
clear
gap
sailing
here,
to the
another
top.
low, another low and a gap and a high. So that would be a clear.
We got to break this
clear.
resistance.
Beyond that, 63-day EMA and trend line and volume profile point of
4894.23.
to the downside. Hold the 21-day.
And I can get out of here at 350 if I want.
And then our
But I want to see if I can just get a little bit more. I'm tired of getting out of these too early.
Okay.
And then when I say that,
Here, Mike.
frickin' knife.
You know what? I just want to highlight that is a great point that was just made. That a lot of people don't have the 20-day EMA or SMA EMA on their charts. But if you think about that, that is about a month, and that tends to act as a pivot line. If you lose the 20, either way, getting above or getting below, you have a very
This is
good
it.
chance
Let's do
of
it.
seeing the 50. So if we get above the 20 EMA,
There we go.
50 EMA is above,
Now go.
you have a really good shot of going there, and then conversely.
So once we break that resistance level, I think it's clear sailing to the upside here.
I'm sorry, you don't know anything in trading. That you
Bam.
actually
Got it.
have a very good chance.
I'm out.
Have a very good chance of seeing the 50-day moving average unless something else crazy happens. And I never understood why people don't have that on there. But it's even if you are a swing trader, I think it's really important to take a look at. I actually use a 2021 EMA cloud, which is basically just the 21 EMA. But I use a cloud,
Beautiful.
and it's a very good indicator for that pivot from bullish to bearish or bearish to bullish.
Okay, great to see you both for the big three today. Rick Ducat on the charts, Mike Shore, Prosper Trading Academy. Thank you both. Coming up, lots of earnings to spotlight. Big names, Meta, Alphabet, Apple, and more. Technology talk coming up.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360.
Not bad. Puts, calls work today.
Download the Schwab Network.
Real nice call on the put. I mean, I had to stick around a little bit.
Available
Then we had the double bottom on the put, on the call. Boom, baby.
Schwab Network.
Welcome Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange, developing stories, and Kevin Green is here with us, senior markets correspondent, to talk about the big story pertaining to Evergrande, something we've been following for a long time. Now, some developments.
Yeah, we are seeing some developments here. Now, yesterday in trading or overnight, they actually did drop around 20% when you're looking at their equities being traded overseas. And then they were eventually halted. And this is after the Hong Kong court actually decided that the company would need to move forward with liquidation. And this is actually after their overseas debt holders did not come to a decision or a restructuring deal over the weekend, which is causing this liquidation process to take in place. Now, one thing to also kind of...
I'm gonna go get me some coffee going here.
Mainland China is going to accept the results from the Hong Kong court. And if they do so, Nicole, this is going to be one of the biggest liquidations when we look at real estate that we probably will see ever in the economy here. And that's going to be a very interesting development, to say the least. Really, who is going to purchase some of these properties that do not have any occupants, and how much are they going to go for? And so right now, all eyes are really on China. We have seen a lot of enthusiasm over the last couple of trading sessions because of the stimulus measures that have been put in place, but this could be a little bit of a step back when you're talking about China's ability to grow post-COVID. And I think when you're looking at this deal, there's going to be still a lot of questions to be answered here, but at least we are making some form of progress, and hopefully this is going to stop the bleeding when it comes to the real estate sector.
Golf time, yes. I know how to play golf. I'm self-taught. Back in 1986.
Well, it is a big week.
Or 5. I worked for an inventory crew, Washington Inventory Service, and lived in Knoxville, Tennessee. And that's where I learned how to teach myself how to play golf on the weekends. I like living in Knoxville. Knoxville was kind of neat.
Well, I mean, when you look at earnings, Nicole, it's the same drill. I call it the earnings trifecta.
I moved there from Memphis, West Memphis, which is a pretty rough town.
And the company's stocks will get rewarded.
But yeah, I got Northwestern golf clubs and...
But if you're going to miss the one you don't want to miss, in my opinion...
I'm not a good golfer at all because I'm self-taught. That's the worst kind you can play with.
Indicator, not a trailing indicator, and it's really all about the guidance.
But I can golf.
The bottom line, and you can miss the top line.
It's like anything else that I've tried to do in life. Try to do the best I can. Same with baseball.
Well, of course, you always...
Basketball, I just
get all three right.
Too many
pretty good at basically dealing with
players that were better than me, or at least were. It was a small team, so they were already picked, and I fortunately went to a good school that had good ball players.
The other little telltale sign is if a company announces a dividend increase,
I wasn't
before they announce
disciplined enough in basketball, but baseball I was real good at. Then boxed, which I was pretty good at. Till my eyes started watering and I had to quit because I couldn't see.
The two that I'm most interested in, but not necessarily in order of importance, would be Meta, which is this week in a couple of days, and then followed in another week or so with ICE, Intercontinental Exchange.
Right. Tell me about Meta. That's a name that you've owned for a long time. What are your thoughts?
This thing probably go up more.
Well, it traded at 400 today. Meta's a company that we continue to like, though we clearly like a lot of.
Did you hear today that? Good.
Had a near-death experience.
Well, we nailed that Tesla video. Those two moving averages is something that I picked up last week, the 21 EMA and the 83 EMA, and I'm gonna use them for a little bit and see how it works out. They always change in different time frames, so there's different ways of trading them. But when I did the video, I did it, and look, see, we almost hit that 81. When you even think about getting, you're not going to hit it. You don't, when you're scalping or day trading, don't expect to always hit them. If you got two engulfing candles, and you're watching the tape, and you see it slow down, then more red pulls up on that tape. Tape is price.
But, you know,
The action is the candlesticks.
have technical reversals from time to time.
So you want to watch that price. I'm a price action trader.
On those reversals, when it looks like you want to sell the stock,
I think that was a pretty good call.
But I mean, I think on a relative basis,
Plus the RSI
it's cheaper.
is also up here, which would give you an idea maybe to get out and take your profit.
Who knows? But you know, we prefer to buy something on a pullback.
Now you turn this to a 1 minute. I'm going to show you how to get into this trade.
Tell me more about some of the other names. Microsoft.
So you had to break out. You came in, we had a little pullback and a breakout. Then she pulled back again, and she broke out again.
We don't own Apple. We don't own Apple. We don't own
So you,
Microsoft.
one of my favorite chart patterns of the year is this inverse head and shoulders. Just draw your line straight across.
The only, what I call the only high octane
That's your left shoulder.
of those 7 or 8 is Meta.
Came down, broke out, came down, created that left shoulder. And then there's your head. Broke out of the head. This is your neckline.
AMD, we'll hear from AMD, NVIDIA, you know, is another one that people have loved. How do you feel about some of those names?
I think they're great names, but we
That's your neckline.
we tend to look in different.
So you got the left shoulder. After she hit that and developed a trend, developed the neck, she pulled back and right to the right shoulder. So you got the left shoulder, identified the head, and then the right shoulder, and that's when you should have took that trade. And if you missed that, take it off the neckline. When it comes up and it breaks out of that neckline, that'll be a triple top break. And once it broke out of that, that would have been probably a good idea to take that trade. So you had two possibilities of taking that at the triple top breakout or that right shoulder. This is my favorite pattern of the year so far. It's about it shows up every single day.
The Fed at some point will cut rates, but we don't know when. The good news
Google
is
inverse head and shoulders.
year, and the White House will probably do everything they possibly can to put lipstick on a pig, and that includes influencing the Fed, because quite frankly, the Fed's as political as most other government organizations.
So we are almost out of time. I don't have time for each one of these, but I do want to make sure we hit them and talk about them. Maybe you could pick one or two. Chubb in insurance is a name that you've come on and you've liked many times. In the energy space, you have Oxy, Chevron, and Exxon. Tech, you have Meta, which we just spoke of, and Luxottica for the luxury in the eyeglass wear, ESLOY.
Definitely my most favorite pattern of all.
Tell us about one or two of the names that I just mentioned.
Well, we like
There's no ifs, ands, or buts about it until I find another one. But this has been my most profitable into 2024.
Are terrific beneficiaries of
Left shoulder.
higher interest rates because of all their float, and number two, they're
Left shoulder.
You know, we've been lacking some
Right shoulder. And then the head.
catastrophic events. So basically, there haven't been a lot of calls on payouts from either earthquakes or hurricanes or what have you. So it's sort of been a win-win. But you know, we like
Excuse me.
as you know, I spend a lot of time in Bermuda. Bermuda's a big center, financial center for the reinsurance industry. And if you talk, if you ask people who are in the insurance business to pick one stock, 8 out of 10 will all pick Chubb because it's such a well-run company. But so anyway, we prefer Chubb. But the sleeper in the group is actually the Essilor-Luxottica, because it's a bit of a long story and we don't have time to get into it. But it's a very unique company. They're the largest manufacturer for eyeglass frames, and Essilor does the lenses, and they own all the lenses.
Patience is the hardest thing to come up with, but once you start identifying the pattern,
Thank you so much. Ted Weisberg, president of Seaport Securities and founder. Of course, Ted, thank you. Coming up next, disruptors. KLA shares. Well, those have pulled back from all-time highs. We've had earnings. Susquehanna has downgraded this stock. George Sillis is standing by. He's going to take a look at KLA momentarily, which is at $5.95 today.
started. See, I wouldn't overtrade Tesla today. Let it do its thing right now. It's kind of telling you that we found support.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
What are these things at now?
Trading 360. It's time for the disruptors.
360.
With us, senior markets correspondent, talking about KLAC. Susquehanna downgrading the stock to a neutral
370.
buy rating. They raised the price target to 675 from 640. It's at 595. So upside there. Tell me about what you're watching and what they're saying about the outlook and such.
Yeah, I think if you look at KLAC, Nicole, I mean, first you got to think about the business. This is one of the leaders in semiconductor manufacturing equipment, primarily for processing diagnostic equipment and quality control equipment across multiple semiconductor areas of the ecosystem. So the stock is still higher by about 40% over the past year, but it's down about 10% after it posted earnings going back to the 24th of this month, in other words, last week. Overall, the earnings were quite robust. I mean, they did beat the estimates, but if you look at the sales, they were down 16% year over year, as well as earnings, which were down about 15% year over year. But I think the reason the stock is pulling back was effectively the guidance. If you consider the estimates for the full year, for the next quarter, forgive me, they were about $5.86. At the midpoint,
KLAC.
About $5.26.
Never heard of it.
So what this ends up doing is it recalibrated a lot of the models.
God darn it, $4.
About 51 cents, or about 2% for
$4.10.
the full year. And so
There it goes.
Back, and of course, the analysts
Head and shoulders.
are going to reevaluate the stock based upon the changing dynamics of the earnings profile.
So at 410, this would have been a nice trade.
Is basically bringing the stock down to neutral.
I got out 375 and it hit 410. So this here's a head and shoulders.
They also maintain a buy rating on the stock with a 640.
You got your left shoulder, and your head, and your right shoulder. So that's an exit idea.
Forward quarterly earnings adjustments that the company provided, but the stock
has
pulled back about 10% since they announced that.
Okay, so with that, how would you go about an example trade?
Yeah, so there's a nice pullback in the stock. Now, I'm not going to say that it could certainly bounce off a bull flag level at these areas, but if you actually look beneath the stock price right now at around 570 is the 50-period moving average. So I think the stock will probably just drift sideways, could slightly move to the downside if we see a market pullback. So we can stay sort of bullish to neutral by putting on a put vertical. In other words, selling right around that 570 area, the March puts, and then simultaneously buying the 550 puts below that. So it's basically a $20 wide spread, but we're going to sell it the total spread for $5 in credit. So effectively, if the stock stays at 570 or higher by expiration in 46 days, that's a good place to be because the premium will erode to zero. Break even is at 565. Now, if the stock does pull back, but we're earning essentially, $5 of return. There's $15 of risk, and that happens if the stock goes to 550 or lower by expiration. But essentially, looking at the math, there's a 33% return on risk, and selling that 570 put is a 30 delta. So that implies there's a 70% probability that the stock will expire higher at that level or higher by expiration.
Right. George Sills, thank you. It's great to see you, George. Thanks for a good look there at KLAC today. Coming up
Secrets
next,
to
our
loom.
360 round. Our panel is focused on oil and what lies ahead for the energy sector. Trading 360 right here on
I was
Schwab
looking at
Network. We'll be right back.
resorts this weekend.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device.
Didn't Oklahoma?
Free. Schwab Network.
Oklahoma's building another one. They were terrorist attacked years ago by that one idiot.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Man, that's a beautiful trade.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab
You got your
Network.
snake into a wedge.
Missed out on today's market headlines?
It's a fat,
Get caught up
fat,
and catch the
fat
wrap
wedge.
at SwabNetwork.com. Available anytime, anywhere, on any device for free.
And then there's your snake, your sell-off, breakout. And I was watching a guy this weekend that knew what he was doing. And I'm trying to figure out the perfect time to get into these trades. I mean, my idea was better than his, probably, but I don't know. This is a different reaction. They have that. You have the snake, you have the breakout, you have the pullback. You wait for the second breakout, and then the pullback. So, I mean, initially he's more or less right.
Welcome back to Trading 360.
And that's an inverse head and shoulders. Then you had the breakout, it pulled back, created a double bottom, lower low, which you don't want to see, but you do if it's a falling wedge. Then you have the 1, 2, 3 breakout, pullback, which is a pivot point inside of the flag. That's a pivot point.
Over at Mizuho, I'll start with you, Nitin Kumar. You have actually some calls
Back
on
up
some of the
to the shoulder line of this head and shoulders.
to be working in the world of energy. Which ones may be buys and why?
Thanks, Nicole, for having us this morning. Look, for us, right now, it's still a defensive world. While we're watching the geopolitical tensions emerging in the Middle East carefully, the call at the start of the year was there's plenty of excess spare capacity. You had some comments from Saudi Arabia overnight talking a little bit about how they don't feel that it's their responsibility alone to balance international markets. And so at this point, we are still not looking for a big spike up in oil prices, but of course, we don't know what the end goal will be here. In that environment, we prefer stocks that are defensive, that can create their own catalyst, either through the asset base or through the balance sheet. So our top picks are Chevron, Coterra, and Civitas. Three names that we think offer investors a differentiated opportunity.
Meta had a new high today.
Going up in the short term.
I'm sure more people are familiar with Civitas. Just maybe a word on each of those so we can get them out.
I'm gonna go get my coffee going, and I'll be right back.
Yeah, Coterra ticker is CTRA, and I think this is a very interesting story. This came about in the merger of Cabot, which was a Northeast Pennsylvania gas producer, and Cimarex, which was a Permian company, which of course, when people are familiar with the Permian. What this company has created over the last, I want to say, 18 to 24 months is a good, very flexible capital allocation strategy where they can take advantage of whichever commodity is stronger over the next 12 to 18 months. Critically, they're also very low balance sheet risk. I think they're like 0.3 times net debt to EBITDA. Differentiated cash returns, 50% of free cash flow every quarter is going back to shareholders as a buyback. So in our opinion, this is a company that can navigate choppy waters over the next 12 to 18 months very successfully. Civitas is a very interesting name, and I'll spend half a minute here. very quickly, old DJ company had a lot of risk in Colorado. Last year, they go ahead and buy assets in the Permian, have really differentiated themselves. Balance sheet's a little bit more stretched, but only 1 times net debt to EBITDA, nothing heroic. Strong cash returns over this period of time. We like the management team. So overall, we think this is
I don't think we're going to break much today.
Thank you for those. Patrick Don, I know you're there with Gas Buddy. You have a report that came out today about gasoline prices following what's been going on. I know you've had Red Sea tensions, we've had tensions in the Middle East, we had weather. Can you tell me what you're watching and where some dollars and cents of this for folks?
Well, Nicole, this is the time of year when we generally see sluggish fundamentals, a weaker American consumer. Obviously, in the last couple of weeks, we've seen extremely cold weather, which has derailed oil production in the short term, especially from areas like North Dakota and down to West Texas. And we've also seen the impact hitting refineries as well. U.S. domestic oil production took a 1-week plummet last week by 1 million barrels a day. U.S. refining capacity fell by over 7%, or at least inputs plummeted last week, and that's pushed gasoline prices up here over the last
Damn it.
Not to a significant degree yet, but consumers are getting ready for the sticker shock.
4 o'clock. I mean, they're at 4. That ain't bad. I'm thinking about puts here.
Quite as painful in the spring and summer for gasoline prices.
The 48.85
Just starting to move up here in the weeks ahead.
or the 340.
So what was the national average of where it is now?
No, 340.
This summer?
I mean, not 340, but 48.90.
We expect that could advance by 35 to 80 cents a gallon. Keep in mind, too, as we mentioned, the Houthi attacks in the Red Sea, what's going on in the Middle East, those remain wild cards that could either enhance the increase or potentially push it down in some ways if there's a much different situation that plays out. I think that the biggest of increases is really going to be in the
Well, we got to wonder. Do you think
but we still could briefly see
after Brandon making Iran $250 billion richer with his sanctions dropping off the oil, and plus the $5 billion we gave them, do you think he has the balls to bomb them? Hell no.
I guess some escalation in the Middle East. We all saw the headlines over the weekend.
Does he have the balls to put sanctions on him?
Earlier this year, our range for the year was 70 to 90, and we really, there's no upside when you have something like what's going on in the Middle East right now.
/CL.
Sustainable.
I'd say if it hits $75, I'd think about trading it.
So you could see 90 to 100, but I think the average is closer to 75 to 80.
Thank you both so much. Wonderful to see you both. Thank you. Good look here at oil and gasoline. Patrick Sahan of Gas Buddy and Nitin Kumar of Mizuho.
I thought about this morning,
That's going to do it for us here on Trading 360. I'm Nicole Tedelides.
buying the put on it.
Here, 11 a.m. and 2 p.m. here on Schwab Network. I'll see you at 2 o'clock.
But it's just not running. I mean, it's just not running like it should. So I'm very disturbed about even wanting to try to trade this thing. I figured this would have been very red by now.
Schwab Bank Investor Checking, the checking account
I mean,
built
real
for
green.
investors. Named highest in
Well,
client
I don't know, it did-
satisfaction by J.D. Power for 5 years in a row.
It has
With
gone up
Investor
now.
Checking, you get the award-winning features of our
$8
checking account,
from when I was
plus
looking at
cash
it.
management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
And puts are up a little bit.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
Oh, what's this?
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week. SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Binge watch the market with Schwab Network. Tune in 24
So this is a
hours
pretty
a day,
good deal
7
here
days a
on
week
Tesla. It breaking out on the
SchwabNetwork.com
third
and
day.
all of your favorite streaming services.
I'd set an alert
Schwab Network available
if you got this chart set up
any device
with a 65, I mean the 60,
Schwab
the 21 EMA on the 1 hour time frame. And we're going to look at the candle here. I'm just going to set it right here for right now, and then I'm going to come back, probably change it. But I want to see where that is compared to the candlesticks. So we change it to the 1 minute. This will give me an idea.
Good afternoon, traders, and welcome to Fast Market here.
Which is pretty much spot on.
We've got a great lineup for you today, including discussions and strategies.
That'd be a triple top break right there.
We'll take a look at AMD, which has rallied to all-time highs into their earnings.
You got a channel of support right in here, so basically if it held this support level, you'd be very bullish in tomorrow.
Portfolio breakdown consumer sentiment data on UPS.
187 for Tesla. That's where I'm going to set my alert for today. See if it pulls back to that bottom channel there.
Session highs. It seems like everything's in the green now. The SP 500 up.
You're just not going to break this, break it yet until people get used to it.
Up nearly 0.3%. The Russell 2000. Small caps
Yeah,
leading the upside.
I have to say that was pretty good. If it didn't hold that number, that 181, we definitely would have got puts.
We keep on talking about like this week between data and earnings that are just, you know,
Okay, smart people are up.
volatility, and here we are just sitting waiting.
Did you ever look, sit on a shore, watch a storm come in, and you're like, it's calmer now, that's kind of what this feels like, doesn't it? Because here's why, Tom. The market's up very small. All four indices are now green end of the day. But VIX is up, bonds are up, dollar's up, gold is up with the dollar up. So risk-off assets are kind of giving a different warning signal than maybe the market is giving. Now, ton of earnings, ton of data.
Damn, look at that put. That'd been $70.
When people see the number,
yeah, that's it later in the day.
It's Tuesday.
On the SPX.
Announcement comes out.
That candle,
And then of course,
right there.
that are, you know, not getting better, getting worse. So there's plenty to be concerned about or focused on. But there'll be a $10 trillion in market cap and 5 stocks coming out Thursday, Tuesday and Thursday. So
That's too much.
Something for everybody, but Those clouds, Tom. Careful those clouds on the horizon.
The calm before the storm, as Kevin puts it. But one of the big stories that came out, I was hosting a Future Show today, and that was iRobot and Amazon kind of dissolving their acquisition here. More market correspondent here to help us break this one down. This seems like a big loser for iRobot here, Jenny, but Amazon's kind of just pushing it aside.
Yeah, I mean, I think because, first of all, I think Amazon was going to overpay for the deal, just given the fact that I know we're seeing this mass selling today, but iRobot shares have sunk significantly since Amazon first announced that acquisition now years ago at this point, it feels like. But iRobot shares down 65, almost 66% on a 12-month basis, and down 62% nearly now year to date. I think that this is not exactly what you were hoping for as a iRobot shareholder, but Amazon slightly higher in this session, but of course they have like a lot going on this week. They also have earnings out later this week. But as far as the deal goes, Amazon and iRobot have agreed to terminate their acquisition deal, citing challenges to gaining regulatory approval, specifically in the EU. The companies did say Monday they signed a termination agreement resolving all outstanding matters relating to the transaction. Amazon will be paying iRobot a $94 million termination fee. The Wall Street Journal did earlier reports this was a huge shock because in addition we get reports that the EU's competition watchdog planned to block the $1.7 billion bid to buy iRobot. So the European Commission had previously raised concerns. The tie-up would restrict competition in the market for robotic vacuum cleaners. Amazon's general counsel has stated they are not very happy with the deal. This was a way to make everyone's lives more efficient and easier, and they believe that this is going to be something that would have been at least a success as far as the consumer was concerned, but they basically expressed their disappointment, and that's pretty much it. I mean, it seems like this deal is now off the table. It was expected to generate about $100 million in savings, so at the high end, it was going to be seen as pretty accretive to, I think, Amazon, which only sells these vacuum cleaners on its website. I will say, though, I feel like this has tarnished the reputation of the various iRobot and Roombas. I have one, and I can speak nothing but positive words about it.
I think they suck, girl.
Game changer as far as vacuuming goes.
Okay, Jim. The least surprising thing I've heard all day today is that you have an iRobot.
I mean, it's a game changer if you turn it on and have to walk away and not have to worry about it.
This is a big deal.
That's a game changer,
It's
but
not a very big company, only 27 million outstanding
I had
shares.
one above me in my apartment, and I
And,
couldn't
the
stand
stock is
listening to
down
that
today.
thing.
The stock has had a rough go of it.
Ding, ding, and I bump into a wall. Smack.
Not a big deal for Amazon.
I went up knocking on their door. I said, "What the heck?" Nobody was home.
For iRobot, though, right?
Yeah, I
There
do
we go.
think it's pretty massive.
4 hours that
because
thing
I believe that they agreed to
ran.
acquire this company. I mean, we're trading
And it
at
would hit
around
everything.
$7 right now,
Boom,
so
boom,
nearly
boom.
$16 saved for rounding purposes. I
couldn't
believe
stand
that
it.
Their initial bid came in.
And it went on for months.
exponentially higher than
Every
current
single
trade. So if you were
day.
a robot shareholder, you were like,
I
hey,
said, "What? Are you
we're walking
some
away
kind
from
of
this
clean
deal in
freak
pretty
or
good
something
shape.
up there?"
Now this deal isn't going through. I think that this is the same exact situation as a name like Spirit, where it was sort of trading with the hope and with the idea that it would be acquired. So now it's like, what does this company look like without the behemoth that is Amazon? That is a pretty major question, especially for a company as tiny as iRobot. So it'll be interesting to see if like another company comes in and still tries to acquire this company. I think that's difficult though, because it doesn't seem like
They did bounce back pretty successfully.
that they necessarily have so many wins. So the fact that they blocked this deal or that were at least enough so that
Oh yeah, that would have been a good trade. Shoot.
then kind of puts this like unfortunately.
Yeah, that would have been a good one.
So I will be
Double
interested
bottom.
to see what this looks like. They're still being sold on Amazon, so that's at least a good thing. That's
Yeah,
the
that
way
would have been
I
a good
purchased
trade
mine.
right there.
But yeah, a name like this looks a lot like Spirit now. Or what is the identity without this acquisition? I'm not really sure.
Yeah, you got to pull them charts up.
$94 million termination fee. That's not, outsized or anything.
Because I didn't pull a chart up. I just said, okay, well, I hate the company.
Awesome too, Jenny. I'm with you on that. If you've got a pet, you got some hardwood floors. It's a necessity.
It's the it saves you so much
That would have been a good
Yes,
trade.
it
Wait,
does.
do cats count as pets?
Yeah.
Oh, just checking.
They sure. You know what? The amount of hair that
It's
they
SPX
do,
is
they
at
sure do
390.
count
That
as
would have been a
pets.
good
For
trade.
sure. I agree with that. All right, thanks, Jenny. Mark, of course, here breaking down. the news on
Head and
iRobot
shoulders.
Amazon, but now let's
You
bring
got
in
your shoulder
Tom's
line
office,
left
Coffee,
and right.
Senior Equity
distributor here on the network.
So you want to do
Alex, I
that,
wanna
you
get
want to
your
draw
take. So
them
far,
in.
about 25% of the S&P 500 have reported earnings. Beat rates just over 70% according to FactSet.
There's your left shoulder
That's almost
and
in
your
line,
right. Now
a
that
little bit
becomes
lower than what we've
resistance.
seen over the last 5 years, but
This is your
It
neckline.
seems like that Goldilocks scenario on the earnings front too, and that's what the market's kind of pricing in at this point.
So if we drop below the neckline with a one-bodied candle, this becomes
My
support.
first thought when that deal was announced was Amazon just bought a map of my
So
house.
it's getting ready to, it's going to
They already
squeeze
seen the map of my house. If anything, these regulators
and go
did
to
Amazon a
sideways,
favor.
and
They
it's
were
either
buying
going
this thing for,
to break out,
over $1 billion. It's
or
worth
it's
like
going to
100
pull
100
back.
million. I mean, it looks like they got out of a bad deal.
And I think this is going to be a wait-and-see week until Wednesday.
What if Amazon fought this? Oh, okay, fine.
I know. And they fought real hard, right?
Yeah.
I don't think so. But, I mean, going back to earnings, I mean, it seems like we're in a sweet spot, not only data that we've recently seen, trending lower inflation, consumer's still pretty robust, jobs market's robust. Earnings seems to be, it's not good, it's not bad, but it's not beating estimates that were coming into this quarter.
They sucked.
Yeah, so let's kind of talk about these things one by one. I think if you look at what happened last year, a lot of the calls, we came out of a 2022 that was a little bit more volatile.
Don't forget about how bad the banks were, my friends.
Rates went a lot higher. Things were a lot more dire. Volatility was a little bit elevated from the year. S&Ps were on their butt. And we allowed for outperformance then because there was pessimism allowing for better than expected to allow for outperformance in equities. We had a 24% rally in 2023 in terms of S&P 500 performance, but the earnings were like less than 1% growth. So we're coming into 2024 in a vastly different situation. Low volatility, high stock prices, and a need for earnings to bounce back. If they don't, one would think if you're a fundamental investor, there would need to be a repricing of the S&P 500 because the multiples expanded so much. On the same side, inflation is not really a huge concern now. It's shifted more to how fast does it get back to the target, what is good enough for the Fed, and when rates come down. Now the market's gotten pretty overzealous with this. We talked about this on the Future Show this morning, Tom, where you have one faction that's like, okay, things are going to get so bad, like they're going to over-rotate it, and essentially you're going to have to move rates back towards zero. This isn't sustainable. Talk about real estate issues, things across the world. And then the other is this soft landing, which is, hey, growth is largely hanging in there, earnings are largely okay, and inflation's not an issue anymore. All these adjustments will be sort of tweaks to the real rate. Now, that is average to like 5 to 7 rate cuts. But there's not really a world that I'm seeing that you actually get 5 to 7. It's like you get several hundred basis points, or you get like 1 or 2 25 basis point cuts, and so that's sort of the dynamic that the market's in. As we go to this week, though, we look at the Fed, we look at the geopolitics,
Okay.
we look at everything.
Jimmy's getting ready to buy a put again.
Of the program, which is risk assets are elevated. The market's sort of like trying to rally, and then every time it gets a little bit too far, kind of eases back to unchanged. Like there's a lot of risk out there right now. There's storm clouds. I don't know if it's going to rain, but certainly cloudy sky. It does seem like there's more risk to the downside with the S&P 500 and NASDAQ just off all-time highs right now.
Yeah, we didn't even bring valuations into this.
Yeah, valuations on the S&P 500 elevated for sure going into this, Kevin. But if you look at the names that are reporting this week, we've got Microsoft, Meta Platforms.
We do have the tech coming out, but I want to show YouTube this here. Anybody that wants to watch here on the SPX. I've been a stickler when it comes to this resistance level. The last time I called this head and shoulders out, I used the bodies of the candles because that was our first attempt. And when we hit that, we pulled back. We pulled back pretty hard. We pulled back pretty hard. That's called a shoulder line. And then this weekend, I took the wicks, the upper shadow of this body of this here shooting star. So this is a shooting star right here. When we developed that left shoulder, or that right shoulder on that head and shoulders, we pulled back sharply. This is called a shooting star. That's a very bearish candle. Shooting star. So I took that wick now off this one here and this one right here and run it up, and that's where we are sitting right now, which is another shoulder line. That's going to be hard to break. Now that shoulder line definitely at an all-time high. So there ain't no other resistance beyond that. That's the last resistance that we come to before we have to use different indicators. So in this last correction we had here, once we broke that, we hit that double top, it came back and pulled back to the bottom of this here, the top of this here head right there. It's respecting that 21 EMA pretty much. Come on, puts. So this was a double top lower high. We had the shooting star right here. Inverted hammer. Your trend line is going to be right here where I want to get out of the trade. Hey, Paula. They can't break this. Fucker. Oh, there she goes. I didn't want that. Nope, we're still good. $4,897.31's my resistance. Yeah. Say la fida. Okay, we're at 360. This is support. We're going to use the 81 EMA. If we stay below the 21 EMA for an exit idea. I mean, you can get out now with $40. But I think I just don't like that higher high there. But we didn't build past my resistance, so it still makes me bearish for now. I'm gonna go get my coffee. There we go. There it is. There it is. Now, this is a good exit idea right here. Just like that, brother. That's the 81, 83, what is it? I got to get this. This is new. This average is new to me. 63. I used to use the 65. Okay, that I was programmed to use the 65. But these are 3 black crows with a hammer. That means we might stop right there. I just love trading the SPX and the SPY. It's just so easy. Now we got 3 black crows with a hammer. And they have tweezer bottoms. See, these are 3 black crows, and that's a hammer. Those ain't 3 black crows. You know what? I don't really care what they're shaped at, as long as there are 3 red candles, and they disrespect the other previous support level, and same thing as resistance. That's 3 black crows with a hammer, and that means bullishness. So when you hit the 63 is my new moving average that I'm testing out I'm gonna learn how to try to trade with these two. And I need my 200 and my 9 on here. In fact, I'm gonna add the 200. Well, I'm gonna wait until this week. I got other charts I can look at. Wonder where the 200 is. Let's find out. I'm curious. I'm very curious. Okay, I'm going to keep the 200 on here in case we break that. But do you see what we got here? You recognize these candlesticks, what they are? I almost got in the call too. Damn, look at that. Woo! Fuck. What's that call at? 510. Oh my. There's 510. Oh, I went to 510. Oh. They went to 510. Mama says it doesn't be like that. The perfect exit. God. Okay. It says they went to 620. I don't believe that. Nice bottom call on Netflix. Did you get it? Thank you, Noon. Okay. Always clean janitorial. May I help you? We will direct you to the FBI. This is a recorded message. FBI, please follow this phone call and see where it takes you. Does it take you to Nigeria? Goodbye. Netflix double topping. Netflix double topping. I gotta go get my coffee. I don't want to see what a Tesla is. What you doing, Tesla? Oh yeah. 1 minute. Tesla pulled back. Perfect exit idea. Perfect exit idea. See, Jimmy got out right there. Now, Tesla, I'm going to raise my support level above the 200 SMA. My alert. This is the 200 SMA on the 1 minute time frame. The calls, oh, coin at the 200 SMA on the 1 minute. If you're in love with coin, I'm not going to trade it. What'd you do, Big? Man, I can't believe I had a video go viral. Not viral, but I mean, to me, it's viral. Finally getting the recognition I deserve. Hey, who is this Washboardjim, man? You see that Tesla video that he did last week? God damn, he nailed it.
Very similar, we see all the same things that you guys saw. The web, the data, the dimensions are down, PE's out of control. So, just wanted to let viewers know that. Yeah, but
that's a bonus. You gave us a bonus.
I like that. You know what? It's a great Monday. Let's go. So listen. On when it comes to UPS, FedEx, I mean UPS has done very poorly with stock, at least for the year. FedEx has done well.
Well.
You gotta look at last quarter too. Negative 40 on that one. So we were very happy with that report. FedEx got crushed last quarter. You can see that vertical
exactly.
line at the top.
Where were you?
Yes, so far they definitely outperformed. When you look at the data, actually, when you look at web mentions and also on just traffic, people going to the websites, it's actually a little bit more in favor of UPS. Year over year, it's pretty much a tie, but if you compare versus 2 years ago, UPS is kind of hanging in there while FedEx is really struggling. So this is the web visits on the year-over-year basis. If you go more on a 2-year basis, it's much bigger. But the data that we're seeing is that consumers, when given a preference, they do prefer UPS. Now they're a lot simpler, right? They stick to the ground service primarily, very simple stuff. FedEx is going for, generally speaking, higher margin express. They're going for freight, air, that kind of thing. So the companies do differ a little bit in that regard. And what we've seen is that UPS's strategy has produced more interest from consumers, again, when given that choice. And a lot of times they're not given the choice, and it can go, it can kind of go south for companies sometimes. One example that we've seen is with Chewy, the online pet supplies company. They're FedEx, and they've had a lot of consumers complaining about the delivery services and things like that. Because Chewy does a great job on their end, but once they hand it over, it's sort of out of their control. And that's actually led to decreased happiness for Chewy. And so that puts pressure on companies to make that switch. And you can kind of see here on this, on the year-over-year basis here, what's going on with UPS versus FedEx.
I had a guy send me some necklaces that he had.
A little bit more.
And who knows what they were like? But once I got them, they were not in the package.
In favor of UPS.
They were gone.
I know that when it comes to happiness, they're about the same. They're about 53%, which is.
He said, Jim, I've done so well with you. I'm going to send you some necklaces.
Their package, but we
Really?
have seen a shift when it comes.
I didn't even get to see them.
Showing some preference with what
I was
they're
so
saying
disappointed.
in favor of UPS over FedEx, and at these prices. It's similar to the AMD play. You got to think about where
They got lost.
expectations are. Last quarter, they reported soft revenue, soft guidance. The stock was down about 6%,
Or stolen.
I think, on that report. So I think the expectations are fairly low. The stock has bounced back a little bit since that report, but expectations are generally somewhat lower for UPS right now. So we've got the ever slightest bullish.
Chewy was a good trade of mine for a couple times, and then I lost interest.
Plus 21 on our earnings score for them. We're willing to take
I do like how they
the
ship
upside.
stuff
A
out,
lot
and
of
they ship
that
it out
can have to
fast.
do with how the stock's underperformed and the fact that expectations are likely lower.
Landon, let's play.
We got a snake
little picture,
breakout,
big picture
pull
on a
back.
stock like,
On the fourth hour.
Earnings per share is supposed to be down 32%, 244. Revenue is supposed to be down 6%.
We got a 1, 2, 3 on the 4 hour.
Is it as simple as
1 hour and a 4
This
hour.
is a cyclical company going through a cyclical
God, look at
part of their
IWM.
business. They're doing all the
That
things
was a
behind the
beautiful
scenes to
call
set
this morning.
themselves up to be more profitable.
So
when the market,
look at this. This is
sector
another
of the
strategy
economy
y'all
turns
can
around.
put together
Remember,
here.
2018, they came out with better, not bigger, means of getting more efficient, upping margins. If you're a long-term investor, shouldn't you just?
So
look
when I
at
come
this
in the
and
morning, I
say,
look at my
when the
indices.
market gets better, the overall economy gets better.
I like
this
to
is
check
gonna
these
turn up
out.
like the cyclical stock it is.
Yeah, I think so, and I think a lot of investors watch this stock.
And the first thing I noticed
just that, kind of
that the QQQ, the SPX, and the SPY were all up.
And it can be a little bit
So I went straight to the IWM, and I called this IWM out. I said, man, this thing's down.
more commerce takes place.
This is what they've been pumping, the Russell 2000.
So yes, I do think that
The
there's a play
IWM.
there that if you're bullish on the economy,
So what happens?
you can be
We
bullish
break
on
out of the
UPS.
snake,
Between the two,
pull back,
you're looking at this stock
created a
performance
second
chart.
shoulder,
If there's
boom.
data saying that FedEx was just absolutely dominant in all regards,
Boom.
I wouldn't really be talking about being bullish on UPS compared to FedEx, but really we're showing that the data that we've got, consumers, is a little bit more favorable for UPS, and given these two stock charts, it's clear which one you should
Remember
pick.
that next
First of all,
time.
Lower expectations, and the two companies are both
You got the
gonna generally go
QQQ,
in
the
same
SPX,
direction,
and the SPY were all
generally,
up.
with the economy.
All but the IWM.
Has been beaten up
I said,
much more and has slightly better data.
gather
for
around the
consumers.
campfire.
Yeah,
I think
like
that we're
UPS
getting
and
ready to
FedEx.
break out here
And
on
your
the
score about,
IWM. I've got
21,
it
so
in a
just
snake
over
with a
the neutral
breakout
and
pull
just
back,
slightly
a
bullish.
boom.
Landon, when you guys look at competition, we always talk about the duopoly that FedEx and UPS are, but Amazon, I think they're number one now in packages delivered,
So
Is that
you're looking at it.
coming into any of your data points here? Because
God darn,
it
Jim.
seems like as more people
How'd you do
join
that?
Prime, that hey, maybe UPS and FedEx, both of
There's
their
something else
days
I
are-
just noticed
best
on
days are
here.
behind them.
Yeah, I think that's a great point. I mean, we always talk about the Amazon effect, and I think historically we've overblown it. But with this regard, I mean, the way that they're really cutting costs by delivering their own things, and this is a whole different conversation about how Amazon invents businesses to cut their costs. I mean, that's what AWS was. It's an incredible company. I love Amazon, but yes, it's definitely a concern. I mean, if you're UPS and FedEx, you don't have that customer that you had before.
Snake breakout into a megaphone pattern.
More and more businesses that
One is
start up as
tubus,
GDP grows and the economy does well,
one body,
and that's
two
gonna work
body,
towards UPS and
3,
FedEx.
boom.
Amazon, obviously, they
Now
love
watch
to
this
have
trend
that
line
business.
right
They're not
here.
getting it back. So maybe the best days are behind them, but this pie is going to get bigger and bigger. So yes, that slice is gone, but the pie overall is going to continue to grow. So maybe things won't ever be as great as they were in
Yeah, it didn't do
2019 or
exactly. That's a
20
pivot
for these
point
companies,
in that
but
channel,
I do think the economy
more or
continues
less.
to grow and that pie gets bigger for both companies, for both UPS and FedEx.
All right, great stuff, great data. As always, Landon, appreciate it.
All right, guys, thank you.
All right, that's Landon Swan, co-founder at Likefolio, giving us UPS data and the bonus on AMD.
So we're up here.
Negative, but I
Here's
like
your
that.
head. Here's your left shoulder and your right
That's
shoulder.
the thing, though. I don't think it's
We're gonna draw a trend
knock on
line.
AMD and what they're doing.
No.
But it's a knock on price action that
On
we've
where the
seen.
stock is going. Yeah,
Watch it.
it's a knock on valuation.
There it is.
I did read something
Resistance.
on UPS. The average UPS full-time driver will make about 170.
So if this thing falls down and doesn't hold this trend line, I'm gonna buy put.
So that's one of the reasons why you saw that margin contraction.
I'll go get my coffee. I've said I've been going to get here for the last hour that I've got in there waiting for me.
What it's going to cost them to employ all these people.
Okay, so they're relatively bullish on this one, Kevin. How do you want to look at this as for an example?
So, it's a little tricky, but what I wanted to do is something that we do on the show a lot, and it's a good way to look at it. I took the expected move, Tom, which in this case going back is about $9.60, right? So I went to the 146, 141 put vertical, sold that, and all on February 2nd, by the way, and then I did the 1 week, February 9th to February 2nd, 165 call calendar. And so I did this package, right, in paper money, and it's just a practice trade for about a 30-cent. It's actually about a 35-cent credit now. So this is one of those trades, slightly bullish out of Likefolio. If the stock stays right here, you're profitable because you do it based on a 30 or 35-cent credit. So you don't need the stock to go up to be profitable, Tom. But if it does, if it goes up anywhere near in the 160 to 165 range, you get a little kicker of that 1 week calendar spread, Tom. So this is one of the trades for a credit. The risk, obviously, is the $5 downside put vertical that kicks in like below 141 is when that would max out. So yeah, you're collecting about $45 a day in theoretical theta. You're long about just under 9 deltas, Tom.
Yep, slightly bullish on this one. Let's break this one down. In the near term Feb 2nd weekly cycle, we're going to sell the 146 put, buy the 141 put. So short $5 wide put vertical that's helping to finance the purchase of the 1 week wide where you buy the February 9th 165 call, sell that same call in the February 2nd option series. So 1 week wide 165 call calendar offset by that short 146, 141 put vertical, 30-cent credit on it. Break even about 146, Kevin. So to your point, you're taking in a credit. So anything, basically above where that short option is going to be profitability on this one with the kicker at or near that 165 strike, which is about that 1 standard deviation move. Now, where's your risk? Well, your risk is below that 146 level. It bottoms out. You got $470 in risk below that 141 level. You've got some assignment risk on those short options, both the short 165 call and the short 146 put in the near-term options over the next 4 days. So keep that in mind. But this is using that short put vertical to help finance the purchase of the slightly bullish call vertical on there, and because you're collecting a credit, you've got no risk to the upside above that break even there about.
It's Kathy Mocha time.
So good look
It's
at
Kathy Mocha
combination
time.
type of position here. To
It's
take a
Kathy
bullish
Mocha
stance, but you're
time.
still making money if it's a neutral type of move here. All right, kind of sets up well with the like folio data on this example. All right, we're going to take a quick break here. When we come back, we're going to take a look at General Motors. The automaker stock has trended lower over the last couple of years, and they report earnings tomorrow morning. Fast Market's coming right back.
Okay, what's making coin run? Ted Cruz, Marsha Blackburn, and Cynthia Loomis square off with Elizabeth Warren on Senate Crypto Showdown. I can imagine what that bitch wants. How a Donald Trump meme coin soared to astonishing 96 million market cap. Oh yeah.
Download the Schwab Network app and join in on the latest market trends.
That's funny.
Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
All the need-to-know
How in
info
the
for
heck
every
did it
trader.
do it?
I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device.
Jim
for
thought
free.
about puts again.
Recap your trading day with the wrap, right here on schwabnetwork.com.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction.
I
in
think
global
trading,
markets.
if you traded
Available anytime, anywhere on
just the
any
SPX
device for
only,
free. And available on all
I think it could get
your
you in
favorite
good shape
streaming services.
of charting.
Futures
Learn
with
how
Ben
to chart.
Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at GM, let's bring in our next guest. That's going to be Kevin Green, Senior Market Correspondent here. KG, we've got stocks at or near all-time highs. That S&P 500.
I'm going to put the 9 on here too.
What do you
I
see
don't think I can live without the 9 EMA on here. Then I'll have my 4. I'll have the 2 major ones, the 21 EMA and the 83. The 200. And then the 9. I think it's all I'm going to put on this chart.
At the developments for this week, we actually have a lot that could actually move the markets higher, from earnings to the FOMC minutes, as our FOMC meeting, as well as some jobs data coming out on Friday here. Today, we are seeing some strength when it comes to consumer discretionary as well as information technology. Those have been the leaders. And the laggards right now.
We'll see where that 9 lines up with the 21.
Stocks and materials. But
That way I can get my crossovers. Get in early. When the 9 EMA crosses over the 21 EMA, that's usually an SMA. You'll see a difference.
Direction for this market moving forward, either to the upside or downside.
Yep, the calm before the storm. We called it earlier.
Oh my God, look at that.
One asset class that's been pretty volatile recently due to
big old fat knife.
Crude oil reversed hard from those 2-month highs we saw overnight at $79 a barrel. What are you seeing here?
Yeah, we are seeing a lot of
this is
volatility when it comes
support.
to crude oil here. And actually last week, if you look at some of the internal data, we saw open interest actually declining on a day-by-day basis, going up to Friday. So
Do you know what these puts are at now?
Short sellers were actually buying back contracts.
Does anybody want to know?
Within the commitment of traders report, where the short sellers actually bought back around 34,000 contracts for the week there up until Tuesday, and then Friday we saw this huge increase.
They're at 7:30.
To the long side here. So I think we're seeing a little bit of technical side.
That's $400.
77 is going to be a key area to be able to hold here, and I think right now
730.
geopolitical risk
I don't.
is definitely out there. We
780.
see a lot of volatility there.
90.
Also, some of the data
I don't
when you
stutter.
look at the EIA reports, the ADP report, or API reports, actually do
Okay.
show a little bit of strength when it comes to the
5
jobs
times
report for
what?
last week. Let's see if that's going to continue. That could also be another
What's
reason
5
why we have a
times?
little bit of a catalyst to the upside, trying to break and sustain that
390,
$80 level.
400.
Yeah, it seems
I
like,
left
I don't know if
2,000
this
on the
is a demand
table.
story or what, but
In
it seems like with all the geopolitical
5,
risks that
10,
are out
15,
there,
20
you know,
minutes.
offset somewhat by the production here in the U.S. being at record levels, you know, it doesn't seem like we can hold a lot of the gains that are sometimes early on in the session. All right, great stuff as always. Thanks to Kevin Green, senior markets correspondent.
That's all I got to
down
say.
markets and crude oil. But now let's bring in George Tillis, senior markets correspondent here. George, we're talking automaker GM report earnings. It's kind of muted the expected
840.
move.
You got to be a
Seems like
hypocrite.
a lot of these OEMs in the automaker space have been really pulling back against their
Okay.
investments in EVs.
I don't
What are
think
you
that's
seeing
very
here at
nice of you.
GM?
Well, I think if you look at
After
the
all
market
this
maker
teaching
move, I
and
think you're
everything
right.
I
It's
do,
almost as the market's
and you
trying
got
to
to
figure out
slap
what
me
to
in the
do with
face
General Motors. There's a couple
for a
of good
measly
catalysts, but at the same
70
time,
bucks a contract.
we have to consider the pushback. I think from a consumer standpoint,
When it could have
maybe
been
against EVs
500 and
as a whole,
something.
We've seen some challenging environments for Tesla as of late. GM, of course, trying to manufacture very expensive
520.
EVs. There's some pushback there. There has been some resegmentation now and talks about going into gasoline electric hybrids, and again, trying to follow major international automakers like Toyota. They've actually been very successful using hybrids versus focusing on EVs. So I think resegmentation is going to be the key for General Motors on a forward basis. Now, if you consider the earnings, they're expected to be down quite a bit compared to last year. $1.14 is the expected print for adjusted earnings. Now that's down 48% compared to the same quarter last year, where they earned about $2.12. At the same time, sales are expected to be down by over 8% to $39.47 billion. So you have to think about the challenges for GM. One, price-wise, it's really trading right where it was prior to.
I'm definitely not very bullish this
in
week.
2019, we
So
can
it's a
see
great
it's down
opportunity
significantly over
to
the last 2 years from its high of
take advantage of
about
these spikes until
$65, where
Wednesday.
there was not enough cars
And we already
prices
know.
essentially went to the moon, but at the same time,
If I listened to
General Motors
CNBC all day,
struggled
they'd be
with
talking
its,
about the Fed and the
core
interest rates,
autonomous
and
driving
bringing
division,
everybody
still losing money in that regard.
and their grandma on here.
Labor strikes and costs
Probably got the
associated
old
with that
people
have
in
been
there.
sort of a hang up for the company. And
The
I
ones
think,
you never
like I
see.
said, there's been pushback, not necessarily because of price, but I think there's
Well,
pushback
what do you
based
think
on things
about
like
the interest
reliability,
rates?
cold weather, reliability for electric vehicles.
General
That's been
Motors is a
as of
hot
late.
topic today.
And effectively, people aren't buying them as they once were, or once thought they were, considering the investments that General Motors has put forth in this particular segment.
George, this stock has a below 5 PE, and there's a term we use sometimes, tripping into a pile of Christmas, right? This hybrid, gas and EV type car might just be the right mix for what American consumers are looking for here. EVs, the jury's still out, and whether it'll be really mass
No.
adaptation.
No, you cannot mix them together.
American buyers.
You seen what happened to the Prius?
Something in the hybrid case might be the
You can
right,
buy them for $4 to $5 grand
right,
now.
because if they're close to getting
It ain't going to work. It's either going to be all electric or just gas. Let's get that straight.
From a valuation standpoint, at 4.5 to 5 times.
These hybrids are too complicated. Old
One of the
man.
things you have to keep in mind is what's going on with earnings growth. So if you look at 2023, the estimates are $7.55 for the full year 24, $7.76. So 21 cents increase estimates for the next year. So that puts the growth around 2.5.
You know, that one woman just stands there all day long and open and closes the door probably.
So the other thing I think GM has got going for it from a financial standpoint is the balance.
I want you to look at all these employees here. Every one of them's obese.
They could surprise.
I'd be putting them on a very good regimen of working out.
By initiating two things: potential increase in the dividend because they can afford it, and two, share buyback. So that's something to keep in mind. I think at the end of the day, General Motors is looking at Toyota. Toyota's actually.
I want to show you something about General Motors.
They haven't dug their heels into
General Motors
EVs. They focus more on gas and electric hybrids. That's actually been a winning success for Toyota. They are the leader globally in
is
gas
a piece of crap.
hybrid sales. So I think if GM is going to go down that
It always
route,
has been,
cost them money, they can afford it,
and it always will be.
But again, that might create a situation where earnings
General
growth
Motors
take a hit as
has
they
been
invest
bailed
in
out
resegmenting their operations for gas electric hybrid
too many times.
vehicles. But at the same time, they have a strong balance sheet. So for those
3
who are
times.
bearish, you have to keep that in mind going into the shift.
General Motors made it all the way down to 27
And that was
cents.
surprising, I think, to a lot of people, George.
And I was
when
here,
Ford
and I took
GM
that
were
trade.
coming out with these big plans for increasing production, ramping
And they
up
got a
different
big
models of
bailout.
EVs. The Japanese automakers, Honda and Toyota, just
For
kinda sat back on their
years
hands
and
said,
years
"Yeah,
and
we're gonna go with the
years
hybrid
and
strategy,"
years
that
and
really
years
has
and
worked out
years
well,
and years. You couldn't
as,
break
the
40
EV
bucks
space
if it
runs
tried.
into some issues. All right, great breakdown here for us.
So all of a
Appreciate it. That's
sudden,
George Tillis, senior markets correspondent here.
EV car
Kevin,
comes in,
Kevin,
and Jimmy
that
calls
being
a
said,
target of
the hybrid
75
autos,
bucks.
Dealers, there was Wall Street
We
Journal
hit
article that just came
67.
out today. Dealers urging GM to
Now,
introduce
they're having
more
trouble with the
hybrid
EV
models
car
to better
sector.
compete
They just got big bailout from the government again.
because that Toyota
Billions
Look at the Hertz news.
to ramp up
I mean, there's just
their
not
EV.
as much demand as the rose-colored
So
glasses
what happens?
view that
They
everyone
go on
had
strike.
for,
They
for
get an
EVs.
outlandish
The
pay
administration was all
increase,
behind it, right? So, but it's just not showing up. And
leaving the rest of America behind, leaving all their car parts behind. Everybody that puts the shit together for them to put these cars together all got burned.
ICE internal combustion engines, just maybe due to cost. And we saw the freeze out here in Chicago.
Again,
stories about the freeze out in Chicago.
Yeah, I mean,
agreeing to something that they couldn't afford.
Charging stations where people were running out of juice.
They're going to
before
be
they could
getting
charge.
another
All right,
bailout.
Kev, so that being said, you mentioned, and George mentioned, the $1.50 plus or minus move that the shares are priced.
This has always been a
Not
junk piece of
outsized. It's been about
dog
a 3%
manure.
move over the last 8 quarters as far as direction goes. So I looked at something in the family as far as an example.
I've been
trade that
watching
takes
it way
advantage
too
of
long, probably,
maybe it's just
and I have a
higher
definite
volatility, but maybe the stock's not
hate
gonna move.
relationship with it.
So I looked at an short iron condor. Sometimes we refer to this as an iron butterfly because you're selling the same common strike. So going out to the February 2nd weekly cycles.
No, I didn't say that, did I? I love the caddy.
Example here, where I'm going to sell a straddle here.
I love my
35
Equinox.
call,
I wish I
put,
still had it.
And then against it, because I want to stay risk defined, buy the 38.
I'm telling you the
call,
truth, I love that car.
above the current share price, and then buy the 32 put. So in essence,
That's the
you're
first
trading that
Chevy I
short
ever
straddle
owned.
And short or long strangle, collecting roughly about $1.60 credit. That's what you can potentially make at it.
I really loved it.
But Kev, you got risk of about $140 per spread on this one, but this is definitely a neutral strategy.
Yeah, look at the information you're getting from the market maker move, which tells you a big move is not expected. Well, this trade is playing in line. Now, if it was a
Eat
bigger
my
move
lunch.
expected, you might get more premium in this trade. But at
I
the
had
end of
my
the
first
day,
car was a Cadillac.
If it doesn't move, this trade works. Now, if a big move,
My dad gave $150 for it. Said, "Son, here's your first car." And it sat in the yard for a year.
and whatever you sell it
All I
for,
did was sit in it and
So there's the risk.
dream
right?
that one day I was going to
Either of these
drive.
spreads could go to $3.
And then I
But
got a
if it trades in the
67,
fridge, you're okay.
64
All right, good look at that,
four-door
Alexander trade.
Cutlass.
That's going to do it for Kevin and I today here on Fast Market, but stick around right here.
64, 67.
Coming up.
And I called that Perry's Old, so I drove that around forever. I had a Pontiac Tempest. And had a Pontiac Le Mans.
For the #1 hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know,
Okay, after I got my little grudge out,
Oh, I gotta take this, Carl. It's Schwab.
so far this stock's acting pretty good.
Have a choice in how you invest
SPX
with
is
Schwab.
respecting its
Trading the
supports
trending
and
names
resistance
every day.
levels.
I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360. Only on
Randy,
Schwab
yeah.
Network.
Randy, what's up?
Welcome
You working?
to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. Alex, really quiet day today, all things considered. I know we're up, led by the NAS, actually now the Russell here up almost 0.5%, but all things considered, relatively quiet day ahead of what is a storm of earnings we get later on this week.
And it's a storm of economic data. It's a storm with the Fed. There's seriously geopolitical concerns seemingly everywhere in the world at the moment. There is, as Kevin described it, clouds in the sky. Now, we don't know if it's going to rain. We don't know that there's lightning or thunder, but you see the risks right now. I don't imagine we're going to see this market get too far from unchanged over the next couple days. Maybe you'll venture away. Maybe it'll come back. Maybe, hey, maybe I'm wrong. Maybe a melt up will be on. Maybe we'll get a surprise. There could be a sell-off. But with all these things on the docket for the week, it's really hard to imagine a big move happening before them. Now, the Fed might move the market. The earnings are maybe going to move the market. But we got to wait till those happen before we can say that the market's moving because of them.
Yeah, and I completely agree. Where I think we could be just sort of like waiting for the dust to settle here until we hear from some of these major companies, which really kicks off tomorrow after the closing bell, or I guess tomorrow pre-market, but tomorrow sort of starts the earnings, like the appetizer, and we really ramp into gear by like Thursday after the closing bell. So ton of earnings this week, actually a ton of previews today on the show, so we'll be kicking things off here with our upvote downvote segment. We'll trade those upvotes, and then for FOMO today, we're looking at one of the biggest companies that is going to report, that is AMD. Of course, they're not part of the Mag 7, but they might as well be because this is a very influential name to the overall semiconductor and AI world. And then we'll be going through all things
AMD, huh?
Zoom info, which should get upgraded at Bank of America today. So pretty big picture today, a lot of earnings previews to get through though.
Yeah, it's we're here now. Earnings season is here in full force. This is one of the biggest earnings weeks that I can remember, and any of the earnings seasons that we've covered, Jenny. You always talk about it's old earnings season. If you're a believer, you don't even have to be a believer now. It's in your face. 5 of those names, and the 2 that they're not. I mean, Nvidia's a big one, but Tesla's been the one that people are saying, hey, maybe sub it out, you put it in AMD. We get AMD too. So you're looking at some of the biggest, most valuable, most critical companies in the world. And the bars are very, very high. I think this is going to be just an absolutely incredible week. It's going to be fascinating. I'm excited. And who knows what's in store. And that's only like a third of the story. You get labor market data, and you get, of course, the Fed as well. So let's do up, down, not endorsements, not recommendations. You talked about it being kind of the appetizer today, and tomorrow really kicks into gear. We got a couple to look at that maybe aren't going to get the attention tomorrow that they would, so we got to give them some love today.
We do. So kicking things off here with the first name that is like chronologically reporting with UPS reports tomorrow morning. So we get those results bright and early, and this name looks a little bit lackluster compared to FedEx, but of course it is about 2 times the size. So as far as market cap goes, at least. So that's just one way, obviously, to look at it. But this name is down about 1.4% on the session in these earnings. They did fall pretty significantly when they reported last in October after cutting their revenue outlook and giving overall some disappointing delivery expectations for this year. Now, for this report, the company's earnings per share are projected to be around $2.44. That would reflect nearly a 30% decrease from last year. And meanwhile, we are expecting revenue to come in around $25.3 billion, and that would also be down about 6.5% from last year. They've outpaced, though, the transportation sector coming into today's session, which is down about 2% over the last month, but underperformed the S&P 500, and that has been a theme now.
So here's an alert Mike gave this morning on snow. It pulled back pre-market. We had a nice little bounce to resistance level inside of the channel. Standard deviation on the 1 minute time frame.
Of course, international 5.5%. Well, UPS a little more exposed domestically. So if you just kind of compare FedEx to UPS right now, if that's the mix, has to favor FedEx slightly more. But this is going to be a fascinating one.
Oh, we just got mixed messages.
We also get an idea too. If UPS is still dropping off a lot of boxes, people are still buying stuff.
People are still buying stuff, especially I always use this as my barometer, but it seems like my apartment building cannot keep up with the amount that people are buying. But next name today here is Starbucks. And I know pumpkin spice season may be over, but there is still a lot to unpack when looking at this name, especially some of its progress overseas. Now, we did see last quarter it easily beat expectations.
They're pumping Starbucks today.
North America, we did see same-store sales rising 8%, but the bar keeps getting higher, and for so many different reasons. One being innovation. The company did say that there's no doubt they were patted by the early appearance of their most popular seasonal drink on the menu, as far as record sales went. But so innovation is key because its various menu items can really change customers' habits.
So here's the SPX. We've developed a new neckline.
I mean, I've never had that. To me does not sound good, but people love that flavor. So I mean, that's something to consider. But also China, this is their second biggest market, a major earner as far as its performance goes. Starbucks plans in the nation are not modest either. They do aim to grow to around 9,000 stores in the country by around 2025. That's against an even more ambitious goal to expand its total store footprint to around 55,000 stores by 2030. I mean, that is crazy. 55,000 Starbucks. I mean, that is just like an astronomical number of stores, but they're such a massive company.
Seemingly they're all busy too, at least the ones that I go to. They're always packed, you're always waiting, and I made the argument that for our generation, the millennial generation, maybe throw Gen X in there, this is a consumer staple. It shouldn't be, but it is, and it's one of those areas that this younger next generation of people, particularly Americans, feel like this is an area that, hey, look, I can splurge a little bit. I can treat myself. I can get these specialty drinks on a relatively frequent basis and not feel guilty about it. I'll find other things to budget out to figure out I'm not giving up my Starbucks. Now, you mentioned the biggest factor that I think when it comes to the stock price in terms of up or down, that's going to come down to China. The China story is just not the same as the U.S. It's far weaker. And I'm not sure that the same consumerism really is rampant there. I don't know that this is as high on the list in China for their consumers as it is for younger Americans that are, seemingly flocking to every one of these, so many thousand stores on a daily basis. If the China story doesn't really start to improve, it's really hard for Starbucks to change the market's conversation around it, especially with names like Dutch Bros here domestically growing so rapidly. If you want exposure to coffee, it seems there's other areas that have nothing to do with China right now that are getting some love.
Yeah, absolutely, and especially if you live in like a major urban area like we do. I feel like there's so many various coffee brands. I mean, they're fighting for market share, and people are very, very loyal to their given coffee maker. And I know that Starbucks is definitely one that is so much loved by so many, but it's not cheap. I mean, every time I go there, I'm always amazed at how quickly I can spend like $6 on a drink, which feels ridiculous, but I guess we all have our vices. But next name today here is Match. Now, Match is a really interesting one because it has also been somewhat of a disappointment. I think still reeling from the fact that we are in a different market environment than what we did see, I mean, in during the pandemic especially, but so we're sort of adjusting from what was relatively difficult comps. Now, we did see for the fourth quarter last year that earnings are, or excuse me, for this upcoming quarter, we are seeing earnings around 49 cents per share. That figure has remained unchanged over the last 30 days, but the average surprise is negative 4.2% for this name. They are seeing some solid momentum in Tinder, which was driven by strong marketing and product strategies. That's also expected to aid their top line, while they've also been focused on growing out its various offerings to Gen Z, which is of course the user base that is slightly younger than millennials, but they're basically saying this is the growing market that we need to address. So they've been updating their offerings. I feel like everything on all of their apps you have to pay for now, which is sort of annoying, but I guess one way to monetize more of their features.
Yeah, I got out at the right time, it seems, from this. Hey, you can always go back, so you can't ever know for sure. But what I will say when it comes to this, though, this to me, especially if you looked at a longer-term chart, is I'm going to tie it to something we're going to talk to later, which is semiconductors. Right now, semiconductors are what the online dating app world was during the pandemic in terms of all the demand. They run up. Nothing but things have improved for companies like this. There's just as many users, if not more, but they're not as exciting for the market right now. So things can get better for companies like Match, and the stock prices can still go down despite that. Those are the same things that are, I think, presenting themselves in the semiconductor stocks right now. So I'm excited for Match. We'll see what happens. Last one on our agenda here today is EA, and you can't talk about Electronic Arts without talking sports franchises and sports titles.
Okay, yes, because that was like sort of some of their biggest, I mean, they usually is their biggest releases, but mind you, in the to-be reported quarter, they did announce the release of EA Sports NHL 2024, the latest installments of their EA Sports WRC, and of course the EA Sports UFC 5, which is their latest game in the martial arts franchise. I hope I got that all right, because this is not at all my wheelhouse. I'm more of a real sports kind of viewer, but I can respect.
Believed you.
Yeah, you see, I can respect at least the interest, and of course FIFA is another one that is majorly, lucrative.
Which that one they rebranded to just I think FC now. That partnership breaking off between FIFA and EA, but the game largely the same.
Okay, yes. See, this is obviously not my wheelhouse, but again, this is very lucrative to EA, and this is a name just slightly lower today, but has been able to weather what has been a volatile storm for some of its peers. I mean, you have Activision, Microsoft, you also then have Take-Two, which has had its own issues, but also relatively strong performance. So this name has been sort of drama-free, which I think is also something that makes it attractive to investors. We are expecting the stock to continue to exceed its expectations. It's beaten in actually 4 of the 5 last quarters, average surprise being to the upside around 13%. They are expecting to see growth as far as revenue goes, modest growth by about 2% from last year's figure. But this is a company that continues to churn out growth, even if it's not monster growth, it's just more reliable. And again, I think that is reflected more so in its chart here.
It's also carved out its niche. Its niche is clearly the sports franchises. When you think about soccer, you think about hockey, you think about football. And that's something I'm excited for. Now, I won't actually be participating as a player of this game, but I'm going to be, very jealous of those who are. They're supposed to come back out now with the college football game for the first time in a decade with the new name, image, likeness things, allowing for that to happen. I want to get some details on that. I'm here in summer. I want to see if I could ever, if I decided to go splurge on.
We're back down to support here, so we're gonna. I think we're about done. This ain't gonna drop.
Once again, we'll see if that happens or not. Supposedly
we've been pushing it too long.
Well for the players, which would be very cool. However, this is a space that they got to find other ways too. They got to branch out. They got to see if Apex Legends and some of their other games can compete with the Call of Duties. Call of Duty dominates all those more action video games, that of course being Activision. So I'm excited to see what they have to say, particularly about that.
Been pushing it way too long.
Got to compete with all the hype around GTA 6, which I know isn't getting released till 2025, but it's like people are acting like that's going to be released tomorrow because everyone won't stop talking about it. So competitive space, but they've definitely sort of, I'd say, carved out their niche, like Alex pointed out. But we'll be looking more at Starbucks as well as match earnings previews. We'll be looking at some example trades as well as key technicals. Stick around, Next Gen Investing. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
There's no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise, from bell to bell and beyond, available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chart Master segment. So today we are looking at Starbucks as well as Mount, both ahead of their earnings out tomorrow after the closing bell. So here, as always, is our Chart Master to break down the technicals for us. We'll start things off with Starbucks. This is a name exposed to China, obviously U.S.-based, but one that Alex always says is a consumer staple, and I do have to agree with him, although I'm not a Starbucks girl myself.
Not for me. I don't drink coffee. I can't tell you the last time I even went to a Starbucks, but I do like the chart for this one as a study of a downtrend that has progressed into a more shallow downtrend, but still kind of struggling a little bit here. So we can see that we're down significantly off those yearly highs that we established, around 116 or so. We're down like 20% from that point here. Now we can see that we have fallen below all three of our moving averages here. They were all clustered together for a little bit. Now they are all prices below all three of them. They're all diverging apart from each other, and they are all sloping downward here.
Coins
so
pulled back.
Pretty notable about face in this name. And if you look here,
Chart Master about Starbucks.
it took us up.
Let's see what he got to say and see if I compare to what he says.
Very heavy volume here, so it was looking pretty good for a little bit. All those gains have been erased. We have filled the gap we established.
Falling wedge.
91.86 right here. That was our high point that we reached before the gap up. We held the line though. We held on to that support area here. So that's a key place to watch going forward for potential support. We've struggled to make our way above our yellow 21-day exponential moving average the past couple of times we've touched on here. So, like I said, kind of a case study in bearishness at this point right now. We'll have to look and see further if the bulls can turn things around, take out some of this resistance that we've got right here.
So now as far as momentum of this trend, I mean, like clearly in a recent downtrend, what is our side telling you?
We had a As we saw here, a significant gap up that took us above the overbought area, then everything kind of evaporated, like I said. Now we have a situation where we had a downward sloping trend line here, that red line that took us lower and lower, but we invalidated it. We broke above that trend line around the same time price broke out of that falling wedge type shape here. Now,
I'll be right back.
Upside breakout. We kind of just have meandered sideways here. Our RSI reflects that, but it is still improving. We did hold above our old trend line. Now we're getting close to that 50 midline here. Let's see if we can break above that level here. That would be a return to bullish momentum. That 50 midline separates bearish from bullish momentum. And we also would want to see price take out those previous highs as well. That would be a key thing to look for.
So now into this earnings event, which is obviously going to have some volatility as they typically do. What are you seeing as far as some support and resistance for us to keep on the radar?
Well, you know, we've got all three of our moving averages here. Those are some obvious points to look at for short-term support, or excuse me, short-term resistance here. The main area that I have my eye on, though, these old highs right here, which are quite close to our volume profile point of control, the area of heaviest trading, that comes in around 99 or so. So we've got a few hurdles to clear on the way to that level, but 99 would ultimately be the level I would be really curious about. 21 EMA, this yellow line here, that's our closest near-term resistance. That comes in near 93.50. Then we've got our orange line here, our 63-day EMA near 95.57 or so. To the downside, this gap level that I mentioned before, that's key to hold. Coming in just below 92, if we break through there, the next stop could be our worst close on the year, coming in at 89.48. That would be another line in the sand to watch to the downside.
Yeah, absolutely. And I think that investors in this name have been along for what has been a volatile ride, as you just pointed out. So now, trading this name, Alex, walks through then a more optimistic trend or trade, just given the fact that the trend has been relatively disappointing, even beat down, perhaps looking for a more optimistic take.
Yeah, looking for a bounce back and staying true to what we talked about a lot last week, which is looking at directional earnings like trade illustration, because the premium selling ones looking for a lack of movement just have not really worked. And so looking for just a bullish response here. Now, granted, sent this in about an hour and a half ago, stale pricing maybe with a continued rally intraday in Starbucks, but the idea remains sound, and we'll still look at it anyways. Looking at it at the time, a stock that was trading around 92.5, we looked at buying the 91, 94 call vertical expiring Friday. Now that would be one half the width of the strikes, the 150 in risk to make 150 on the $1.50 debit, 92.50 was a break even. One may now be looking at something more like the 295 possibly, who knows, depending on what the investor or trader's goal might be. But the idea being one strike in the money, one strike out of the money, half the width of the strikes being the debit spent with a break even relatively close to the current share price. And this is one that benefits from a move higher. The market maker move, which of course looks at real-time option prices and then spits out a number after doing some math of a one standard deviation range up or down based on those prices, suggests a $5.50 or so market maker move, which if you look at a $93 stock, that's targeting around 98. So with that, just to get about 94 with this, that would be well inside of that. This is fairly directional, just looking for an up move, all the risk to the downside, Jenny.
Yeah, the name that I mean is one that's very influential, and it's like it doesn't get enough coverage, I think, or like love for how massive it is, because there's so many other names.
We're probably going to get overshadowed by the Microsofts, the Alphabets, the AMDs of the world, despite the fact that it's a pretty big company itself.
It is. So definitely I think important to go through this example trade here. But now shift gears and look at Match, which is not as big as Starbucks, of course, but still very influential to those that are on these various dating apps. I cannot, sympathize enough because they are a grueling experience, but nonetheless, this thing was off of its lows by about 38% here. So even though it's been pretty disappointing over the last 12 months, it actually has been in a nice uptick as of late.
Disappointing over the long term, indeed. We're down, I think, about 78% from our excuse me, all-time highs near 118. So a very notable fall from grace in this name here. But still, let's look at the more recent term price action to try to assess what we're seeing. The first thing to note is that we are in a downtrend here. We kind of can make a downtrend line going across these highs. We had a notable gap up on a spike upward there on news that I believe it's Elliott Investment Management disclosed a $1 billion stake in Match Group here. So that pushed prices up significantly, but it faded and reversed and actually wound up going down below that initial gap area. So we more than filled the gap. We retreated back to our two moving averages here, yellow 21-day, orange 63-day, exponential moving averages, and we held on. We have a upward sloping channel to deal with here. We've got our one conventional trend line going across the lows. I simply duplicated it and put a parallel line going across some of these highs. It didn't match up super cleanly, especially considering we had this very large upside excursion here. But most of the price action fits within these boundaries, and that's what we try to do. We're just trying to describe the shape of the price action here. Now we can see that we're above our two shorter-term moving averages. Our yellow 21-day and orange 63-day are both trending upward here and diverging farther apart. But our purple 250 2-day still significantly above price. We never quite cracked it, even on the back of that large gap upward there. But we can see now that it's still trending downward, kind of reflecting the large fall we've had from those highs that we were experiencing earlier in this stock's history.
Yeah, and I mean, I think that you made a really good point that it hasn't necessarily been a story of pain just over the last 12 months. It's been a more longer-term disappointer. But as far as now momentum goes, what are you seeing? Because we are at least improving here.
Yeah, and momentum, that's what we are looking at when we look at RSI. We're trying to assess the speed of the change in prices here. So we can see that we had a very modest upward sloping trend line on the RSI here. We are above that 50 midline though. We managed to hold on during our last downswing above that 50 midline as well. Now we are trending upward again, making very slight new relative highs above our previous ones here. We did have a push into that overbought area briefly, but it was not to last. We fell below that 70 threshold here, and that's a bearish signal to be on the lookout for if we do make our way back up into that point again. So now the next thing to look for is if we do have a continued push to the upside, look for RSI to make its way above that overbought area once again, that threshold of 70. That would be a sign of strength to keep an eye on here. Counterpoint would be if we do invalidate this trend line, we'd probably come pretty close to breaking below that 50 midline as well. So that would be the other, on the other hand, what you'd want to keep a lookout for if you have a more bearish lean on the stock.
So now as far as some key price levels here, also reporting tomorrow, so same time as Starbucks, also will probably be overshadowed, but walk us through what you're seeing.
Right up here, this area, there's a few things that really catch the eye. The first is we've got this trend line in blue. The second is we've got our purple 250 2-day exponential moving average. The third is that we've got our intraday highs that we had after that news story about the $1 billion stake in this company. So between 42 to 42.50 could be a resistance area to keep an eye on here. Note as well, we've got this volume node just below it. So that's between like 41 to 42. These volume nodes are areas of particularly heavy trading. That could also be a resistance point that price would have to work its way through to continue to the upside here. To the downside, a similar confluence. We've got our two moving averages, 21-day and 63-day, right in line roughly with our volume profile point of control, the area of heaviest trading, this thick red line on our volume profile. So let's call that around 36 or so. That could be another key area to watch to the downside.
Yeah, really well put. And good look at two names with earnings yet to be reported. Rick Ducat, our chart master. So now, trading this name, Alex, walk us through then, for example purposes, a more bearish leaning example trade, given its long-term weakness, and also just, we did look at a bullish example trade in Starbucks.
Yeah, and the earnings last time around weren't really favorable, and the stock had been, kind of under pressure then as well. So just because a stock may be cheap doesn't mean that it can't get cheaper, especially around these earnings events. And of course, it's just an illustration. Someone who's more bullish could look at a bullish version of the similar strategy. But what I looked at here was Taking into account that the market maker moves about 10% on this stock, there's a possibility for it to move quite a bit. I looked at an out-of-the-money put vertical, creating a situation where the risk is 100 and the max profit is 200. So a chance to make 2 times the risk on the trade if it does get a pretty steep down move in response to this earnings event. This week's expiration, buying the 37.5, 34.5 put vertical for $1. Break even would be 36.50. So that's just above that area that Rick talked about with that 1 and 3 month moving averages, as well as his point of control that he talked about in the volume profile, all kind of confluencing and converging around that 36 mark. So just above that. But if it does break through that and goes below 34.5 to the downside, of which earnings could be that catalyst, this one stands to pay off as much as $200 below 34.5 on this particular trade. And again, this is the bearish look. Someone who has a more bullish outlook or neutral wouldn't look at this strategy.
Yeah, really well put. And a good way to look at these names in 2 different directions, sort of, for example purposes, of course, into this earnings volatility that I'm sure we will see starting off tomorrow. But we will leave it there for this segment. Now coming up next, we have another earnings preview. That is AMD, which is quickly making a name for itself in like the 2-horse race with NVIDIA for the fight to AI. So we'll discuss more what we can expect from their quarterly earnings tomorrow coming up next.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Stocks on AMD, it's time for FOMO. A few stocks eliciting that feeling more than this one over the last few years, really last year in particular, as the stock surged, Jenny, in real time over the last 52 weeks, nearly 135%. And we talked about this on Fast Market. What I've found the most, unique about this particular story is, hey, look, we talked about NVIDIA a ton. We saw the revenue guidance, the earnings guidance, things like that, influencing it so that the valuation actually went down at that time. AMD's earnings fell last year, yet the stock's up hundreds of percent.
I mean, that's like the case for actually like Lam Research is the one we already heard from last week. They saw declining revenues, declining earnings, and the stock still took off. Although we did see some weakness to end last week on the back of Intel reporting some pretty lackluster, not only guidance, but also I was shocked when you break down their revenue that their data center and AI revenue has actually decreased by 10% on a year-over-year basis. And it's like, isn't that supposed to be your growth engine if you're decreasing revenue by 10%? It doesn't exactly fit the same narrative. So then there is the thinking of like, have we gotten ahead of ourselves for some of these AI-induced stocks? I think that you've been
Whoa, she broke out.
skeptic just in the sense that like these companies now are just like tagging on AI and then
Not what I planned.
growth. I think AMD is definitely operating in the right space. They've also been fortunately
What'd I do?
for them, operating
I'll buy
with
something
AI
else.
for the better part of the last decade. It just hasn't really been, you know, so front of mind for so many investors. But it's been something they've been working on, they've said, for the last decade. AMD is right now, I think, in like the arms race. I think they're a clear one of the leaders right now, maybe just behind AMD. And they're
I have to cost average down on this one. I hope I do the right thing.
pretty much right around all-time highs in this name, I believe. And that seems like we closed at all-time highs last Thursday or last Wednesday, but we're only about off that by now about 5%, given some of it selling on Friday. That was all Intel induced. So we'll have to see once we get their earnings. Is Intel sort of foreshadowing a trend we could see, or is that just an Intel-specific problem and AMD is still this growth monster?
Well, I'm going to bring you some numbers here. You know, take them for what they are, right? I get the feeling to the upside, and I can understand the idea that, hey, right now this is just the area of the market that's getting some love, but the fundamental story doesn't necessarily coincide. And so let's explore this. If you looked at last year's earnings year over year, so the calendar year 2023 versus calendar year 2022, they declined 24.25%. If you compare the estimate for the calendar year 2024 just with calendar year 2022, it'd be a 12% aggregate growth over 2 years. Yet the stock has rallied 100 and some percent in just the last year. Valuation in real time is about 43.5, forward PE. The 2-year average is 25.7. Well, those just sound like numbers, right? But I'll give you the actual, numbers as to what that would mean in stock price. If it just went back to its 2-year average, if the earnings didn't, grow tremendously, it would basically be saying, hey, if it was just valued the way it had been over the last 2 years on average, $103.50. That's what we're talking for this stock. That's almost a 50% decline in this name. There's a lot of price action that's borrowing growth from the future. So not only is the bar high for now, they got to be telling us an increasingly confident story, much like NVIDIA was able to do. But now that NVIDIA has done it, there's this expectation that not only are these names able to do it, they're expected to do it.
Yeah, and I think that's a really good point, and that's exactly the fear, I think, going into this earnings event is that the bar has just been set so high, and we expect, just astronomical levels of growth. I will say that Intel's actual earnings themselves, like their figures, weren't as disappointing as the market might have you believe, so that is also concerning. It seems like you're not able to have really strong guidance and really strong figures and really strong tone on your earnings calls, like something that has been so focused on this earnings quarter so far. Your stock gets punished. So that then puts AMD in a pretty much rather difficult position. They have to be nearly perfect on this earnings call. But AMD also could face some near-term weakness just based on the fact that I think the setup right now has been so strong into a lot of these reports. So it's like, even if the environment is ever so slightly like lackluster or more muted, then the stock sells off. So at this point, it's like the near-term setup is unfortunately more unfavorable for them at this point. But all things considered, we're down about 0.75% today. Stock's up 133%, like you said, over the last 12 months, and we're up almost 20% this year, which
It's crazy.
has not been the case for so many of these tech names this year.
So a couple things.
Some of these runs are just bizarre.
Interested in bearish look at the name. We talked kind of a bearish outlook on fast market. We looked at a bearish illustration. But this is next gen investing, and this is FOMO. And the feeling when you look at a chart like that is bullish. So we're going to look at a bullish strategy. And quite honestly, whether or not the valuations make sense, the fundamentals, the technicals, whatever you want to say, the reality is the current share price is $176, and we're going to have earnings. And there's nothing to say that this stock can't, go to the upside. We've seen stocks continue to outperform. Now, I don't know that how the staying power at some of these levels. Who knows? But in the interim, there's absolutely no reason why the stock can't continue to go higher. So we looked at a bullish strategy of buying a call calendar spread, looking for a move towards $200 a share. That big round number on the stock, it would be historic, a new all-time high for the name. Selling this Friday, buying next week's 75-cent debit means $75 in risk. So most importantly here, Jenny, this is super customizable, but it also allows the trader or investor who's deploying this type of a strategy to control their risk a little bit. Only exposing for a notional $75 here in the event that this stock moves the other way, doesn't move much at all. You know your risk going in. It really stands to benefit greatly from a move towards 200. You can see that mountain top-like peak. Now there is risk too. This thing could overshoot to the upside. So if it goes to 210, 220, not impossible, maybe not the highest likelihood. It could overshoot, and although it's a bullish strategy, it wouldn't necessarily make money in that situation. So we talk about this all the time with these calendar spreads, with these time spreads. Precision is most important. It's almost like you're throwing a dart, and you want to be accurate with that dart. So you're selecting the price that you truly think that AMD will open up, potentially post-earnings, perhaps even before earnings, if you get a run-up over the next 24 hours.
Yeah, absolutely, and we'll have to obviously see how things are. Hopefully recover here. I know that we're only down modestly, but just following that pretty brutal session on Friday, I think investors are hoping for a good result, at least those that are bullish in this name. And that is definitely the long-term feeling, especially when we look at a 3-year or a 5-year chart. But we will leave it there for all things AMD. Now, coming up next, we have a developing story with Renita Young, new markets correspondent for the network. So, Renita, we're talking one of the most topical, really, conversations we could have today because Flutter, who is the Portuguese parent company of FanDuel, and just listed on the NYSE, I believe. And then we have DraftKings at 52-week highs. And I have to say that I'm not exactly super thrilled with the results from yesterday, but I am super thrilled. The Super Bowl is in about 2 weeks, so let's talk about this.
I mean, it's fine timing for this company to go public in the United States, and actually not necessarily going public. It's not an IPO. This company, Flutter, is now a secondary listing in the United States because it's been trading over on the London Stock Exchange ever since 2019 under a different ticker. And today, it started trading on the New York Stock Exchange under ticker FLUT, and shares have been rising today. But it's also been trading American Depository Receipts over the counter under ticker PDYPY, and that's a throwback to the company's original name, Paddy Power Betfair. Now, the CEO, Peter Jackson, said the company wants to make the United States its primary listing because it believes the New York Stock Exchange is the natural home for Flutter. Why? It's because FanDuel has its #1 position in the United States, depending on the day, really. It could be either DraftKings or FanDuel as #1. But he said that the company expects the U.S. to contribute the largest portion of its profits. And so, rightfully so, he believes that the U.S. is its natural home. Now, the company will make a proposal to shareholders at a special resolution at its annual general meeting that will happen in May. And if approved, that the change will go into effect in the late part of the second quarter or the beginning of the third quarter. But CEO Peter Jackson said in a release that this is a pivotal moment for the group, and it will make Flutter more accessible to U.S.-based investors, and it'll gain access to deeper capital markets, the largest and most liquid deeper capital markets at that.
Yeah, and I think that's really well put, Renita, and I think this is going to be exciting because, unfortunately, I know there's other names in this space, like ESPN Bet and all the various MGM Bet. Really, it's these two. It's FanDuel and DraftKings, and especially from a marketing standpoint, my goodness, these companies both are all you see when you watch the NFL, which is like
anywhere, even on train stations and all around the city. But I want to talk about briefly. You just said the competition, because analysts have been concerned ahead of time, or some people, some investors more so. Well, will this be more competition for DraftKings in the United States? And some analysts say, no, DraftKings can hold its own in the United States. It still has a huge following. One analyst at Stifel saying, I can only see this being a threat if, or not necessarily a threat, but I can only see this as a change if people wanted more exposure to a more international company. Otherwise, they feel like both companies competing is a good thing, and it'll still be okay for both companies.
Yeah, and I think that's also really important to add because I just tend to operate based on the marketing schemes of these companies. They are shelling out cash. It's like Kevin Hart, I think, is the DraftKings guy. So I at least enjoy those commercials. But we will leave there really great breakdown on all things sports betting and the two companies that dominate the space, frankly. Renita Young, new markets correspondent here for the network. Now, coming up next, We will be looking at Archer Daniels Midland, which is trading higher today. There's a lot to get through. There's some news, there's earnings. We'll discuss that more with Kevin Green coming up next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes. On Morning Trade Live on Schwab Network. Weekdays at 9 a.m. Eastern.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. Time to discuss Archer Daniels Midland. That is ADM. Now, this is a tough transition after coming from AMD to ADM. You can accidentally click these on your computer, on your platform, and pull up the wrong stock from time to time. Bring in Kevin Green, senior markets correspondent for the Schwab Network, to help make some sense, because this company couldn't be any more different than AMD.
Yeah, definitely. We have seen a move to the downside here over the last week here, Alice, I'm sorry. And that's because they are currently investigating intersegment sales for their business here. Now, this investigation actually was kicked off by an SEC inquiry that has now led to their CFO actually being put on leave for the moment because of maybe some potential accounting irregularities here. Now, the CEO did actually come out and state that it's not going to have a material impact on their business because it's a part of the nutrition segment. But the nutrition segment is still around 28% of their total revenue, so it's still something to consider. Now, I think this is actually a very big deal when it comes to this stock. We talk about technology all the time. We talk about Tesla, things of that nature. This stock here has a fundamental impact when it comes to food consumption here in the United States and around the world. And there's only a couple of companies that actually have this type of exposure. And so we have 4 big main units that I wanted to kind of go over here just really quick so we can get a little bit of an understanding of its business. They have the Ag Services and Oilseed segment here. They actually create and help transportation of these agricultural products from farmers to producers, and have a whole significant logistics business just sitting in that particular segment. They also have the carbohydrate solution business, which manufactures global corn and wheat milling facilities across the globe. They have the nutrition segment, which helps with animal health products as well as pet food, grains, things of that nature. And then their others business, which they are a futures commodity merchant as well. So they're actually a market maker in the futures space. So they have a significant impact when it comes to the U.S. economy and global economy. And that's why the story is very, very important when it comes to the regular consumer like yourself and myself.
Yeah, Kevin, that was such a good breakdown, because frankly it's a little bit confusing what this company does when you just based on like their company website. I was like all over the place here a little bit, because basically like their food consumption, food processing, food distribution, and I think you explained it so much better than I could have explained it. But as far as then like its growth going forward, first of all, I found it hilarious. I had really never looked at this company, and it's headquartered like 2 blocks from where I live, which is not cracking me up. But we're getting a nice lift today. We also have earnings still ahead. So, like, is this company still growing at a healthy clip? Because I will say that we saw some pretty mass selling. I believe it was last week where we broke well below our 50 and 200-day moving averages. So now does the earnings look like when we're down? I mean, relatively low. I mean, we're only off of our lows by about 7% here.
Yeah, so the company is still expecting to report $6.90 for the adjusted earnings per share for fiscal year 2023 here. So that is going to be the biggest question that we're going to be focusing on. How much is this accounting irregularity or the potential of that, how much is that actually going to impact the bottom line? Now, one thing to also kind of note, even though we talk about the vast different segments that they have, from helping out farmers to transporting to manufacturing and milling to even delivering food to the table in some respects here, we also have to kind of keep in mind the margins are very, very low for this business. The profit margin, when you're looking at gross profit margin, sitting at about 8.3%. So they don't have a lot of wiggle room to the upside or downside here when it comes to their business. Everything has to be pretty much on point for them to stay profitable. So I'm not sure about the growth prospects here in the near term because of these headwinds, but once again, since they are maybe one of 4 major companies in the world that actually do what they do, it is a staple. So there is going to be, for the most part, a floor there when it comes to the stock's expectations moving forward here.
Hey Kevin, this is Next Gen Investing, and I'm reading about seed oils and carbohydrates in this world of keto and health and all these stuff that's sweeping the Gen X and millennials. Isn't this the kind of come Gen Z? Aren't we running away from this stuff, Kevin? How is this on Next Gen Investing?
Well, I mean, if you like protein shakes, this is going to be the company that provides that protein. So once again, it has its hand in pretty much every single segment, especially when you're looking at food and nutrition. And I would think that Gen Z and the millennials like to be healthy for the most part. So this is a company that actually helps out with that. So very big deal, not a company that we talk about a lot, but once again, a very big staple for the U.S. economy. Definitely has to be on the radar for pretty much every investor or even consumer that's out there, because one way, shape, or form, Alex, you and I have consumed a product from ADM over our lifetime. That's how much of an impact it does have.
Yeah, I mean, no kidding. And I think especially in a time when like these weight loss drugs are all the rage, I'm reading their dietary supplements, I have to imagine this is definitely impacting so many people's lives. I like the processed food queen, so I don't know how much it impacts my life, but hey, I could be using some more of the seed oils and all the things, the keto and whatever is on their website that Alice was talking about. We will leave there. Really great breakdown on Archer's Daniels Midland, which is a mouthful to say. ADM for short, of course, here, but we will leave it there. Now coming up next, time to look at Zoom info. Upgraded today at B of A. We'll discuss that more with George Tillis coming up next.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Schwab. Cut the cord on the way you get it.
If I don't break this here, well, I don't know. I think I'm still going to hold it. There's too much uncertainty this week. There we go. That helped. Tall took a tall dive. Tall. Looking on my descending watch list. WW's down big time. I haven't looked at Hood in a while, or ARC. ARC's up today. Nile broke out of the box today. Boeing. Japanese not doing too, Chinese not doing too good today. Huh, it's the same list. Damn, what's going on here? Had a big split, it looks like. Yep. A 1 for 100 split to regain NASDAQ compliance. So might have another good short. I'm about ready to do my number 5 update on this stock, AMC. They keep buying it. Looks like we had a new low. National signs a long-term exclusive agreement with Senkos. Oh, there's my put. Ain't doing much. That don't make sense. Oh, dipped down a lot farther than I thought. It'd have to take a nosedive for me to get back in the green.
standing by. He's going to tell us why he likes Boeing. Even though it's had a lot of headlines, a big sell-off, he'll explain. He'll tell us to take a look at Disney and Chevron. Head of Investor Relations.
Hadn't even looked at Disney today.
To talk about the company's earnings and outlook. And our panel, the Magnificent Seven, well, 5 of those mega caps reporting this week. So
Broke resistance.
when it comes to the world of earnings.
96 bucks.
Look at the markets. 2 hours left in the trading day.
Did a video on this. Said we're bullish.
Well, S&P up 6.5 points at 48.97. The Nasdaq gaining 56 at 17,477. The Dow's down 5 points at 38,103.
We're flat.
Russell up 0.5% at 1989. And VIX, by the way, is up about 3%. U.S. dollar 103, gold 20.43 an ounce. That's gaining. Oil 76.98 the barrel, now $1. And Bitcoin at 43,400, so that's gaining 2.3%. Of course, we'll have Fed Day, much to discuss throughout this week. In the meantime, some of the stories that we're following, Kevin Hincks is with us, Senior Equities Contributor to Schwab Network. So we have a busy week ahead. What is it as we start this busy week that you're thinking when it comes to these markets?
Hey, Nicole. Yeah, I think this market has a very quiet before the storm feel to it right now. How do I know that? Well, the overall indices are relatively unchanged or slightly higher on the day, but think about this, Nicole. You've got the dollar higher, but you've got gold higher. That is not what you normally see. You've also got higher bonds, higher VIX. So the risk-off assets seem to be painting a different picture than the quiet that is hanging over the stock market right now. And why? Well, we've got $10 trillion in market cap earnings coming up within 5 companies. We've got economic data, we've got a Fed meeting, we've got a treasury rebalancing or refunding announcement. We've got a bunch of economic data not from our payrolls on Friday. So a big week coming up on the horizon, Nicole. So a very quiet day heading into that.
Yeah, understood. And then disappointing earnings last week. Tesla seeing some gains. Looking at the CapEx plans. Your thoughts? What's getting out of those today?
Yeah, Tesla up almost 3% on basic news that Elon Musk sees CapEx actually going up between 8 to 10, possibly over $10 billion this coming fiscal year, but it should drop off after that. The original numbers were between 7 and 9 billion that they put in previous reports. Now they think that's going to be 8 to 10 billion in 2024-25, but then that could drop off after that. Elon Musk gave a bunch of reasons: labor availability, supply chain issues, material prices, trade conditions, a lot of reasons why, but he sees CapEx a little higher and then lower as it goes on. It seems like Tesla traders and investors are taking that and as a positive note. Stocks up, like I said, just under, now over 3% on the day, Nicole.
All right, Kevin Hincks, thank you so much. Good to see you. Now let's take a look at the bigger picture. Sam Stovall is with us, Chief Investment Strategist at CFRA. Hey, Sam Stovall, thank you for being here. We're almost wrapping up January, this new year, kicking it off. I think there were some questions, whether we were going to have a positive month. I mean, it seemed to have some jitters partway through, but things haven't been too terrible lately. We've been hitting some new highs. Tell me your thoughts on 2024 thus far.
Hey, Nicole. I think basically we started off on the wrong foot. We had a negative Santa Claus rally. We had the first 5 days be down. And as we know from the Stock Traders Almanac, as goes January, so goes the year. But with us likely to be posting a positive January, that offers an awful lot of good historical precedent. In particular, we have never had an election year in which January was up, but then have the market decline for the rest of the year. So we were up 100% of the time since World War II. Average gain was 20% versus 15% during those election years. And essentially, it's been fairly positive going back to time.
That's pretty amazing, So if you have a positive January in an election year, thus far, every single time it's been a positive year overall. And that dates back to when?
Dates back to World War II, and then if you dig a little bit deeper, a positive January also then says, as goes January, so goes the year for the top 3 sectors, not just for the market itself. And so right now, communication services, technology, and financials are those that are likely to outperform the market, which again, it has done about 85% of the time, going back, in this case, to 1990, because that's as far back as S&P has sector-level data.
Wow, I'm glad I sort of elaborated on that question because we got good added info there. So what indicators are you watching as we are seeing now the Fed is coming up this week? What any of the economic levels or anything jumping out at you these days?
Well, I think that the two things, no surprise, are earnings and the Fed. Earnings, we've been seeing them drift lower, not only for the fourth quarter of 2023, but also for all of 2024. Expectations had early been gain about 10.5% in this coming calendar year. Now it's looking to be more like 9.5%. This is according to S&P Capital IQ consensus estimates. So I think we need to see an improvement in the estimates for 2024 in order to justify these relatively elevated PE ratios. And also the Fed. I think there's an awful lot of optimism that the Fed will start to cut rates in March. We think it'll be in the second quarter. And also the expectations are for 4, 5, 6 rate cuts. We think there'll be 3. So later and fewer is the mantra that I'm holding on to now.
So you think there will be 3. And with that, when you look at what's going on with rates, where do you see the 10-year and how much does it matter? Because I think people are sort of getting used to a higher rate environment with the 10-year above 4%. Where do you see rates really headed in the next year or so?
Actually, sticking around the 4% level is our forecast. And you can also look back to history, going back to as far as the Fed offers data on the 10-year note to the early 1950s. The average was about 5.5% or so. So we're still well below the long-term average for the 10-year note. And so I would tend to say that we're showing that the economy can expand, that if we do have a slowdown in 2024, it's not likely to result in a recession, and that could assist with earnings growth, could also benefit the employment picture. We're looking for 175,000 jobs to be added when it's reported on Friday, and unemployment rate ticking up to 3.8%.
Did you ever thought, just overall, or investor advice? I think a lot of people were looking to small caps too. You mentioned tech and communication services and financials among the sectors that have been doing well and may, in fact, do well for the year based on history. But any advice for investors?
Oh, sure. Well, I think that small cap stocks look very attractive. Right now, they're trading at a more than 30% discount to their average relative PE over the past 20 years. And should we get the Fed to start cutting rates without the growing fear of recession, I think that could end up benefiting the small cap area. And if we have the dollar come down as we anticipate this year, that could finally assist some of the international investments. So in a sense, hit them where they ain't, because a lot of investors are not in the small caps and they're not in the international shares.
Yeah, what do you tell folks when they ask about those magnificent 7, many of which that are reporting this week?
Well, that's where the growth is, and we still have favorable investment outlooks on some of these behemoths. I mean, let's face it, semiconductor stocks were up more than 100% in 2023, but we're anticipating more than 40% earnings growth in Q4 of 2023 as well as all of 2024. So I think some of these growth areas will continue to do well, so let your winners ride.
Yeah. And last but not least, I mean, we've had the Fed, running off the balance sheet. Maybe they'll now pause on the hiking and, switch to cutting, like you said, maybe 3 times. We look at money printing, we look at treasuries that come into the market, and some people were saying it was sort of counterintuitive to have treasuries flooding into the market while they're trying to do this. Any sort of big picture thoughts that we can take away and think about, sink our teeth into, Sam, on all this?
Well, I think you still have to look to the basics. The basics being look for interest rates, look at earnings expectations, look at valuations. We are in the second year of this bull market, and traditionally second years post a 12.5% rise. We have had a couple since World War II that did not celebrate the end of their second year, but usually it's the third year we have the greatest challenges to bull markets. So I would tend to say that election year, second year of a bull market, positive January, a lot of these historical indicators imply, but certainly don't guarantee that this could be a good year that follows a great year.
Sam Stillwell, great to see you at CFRA. Thank you so much, Sam.
My pleasure. Good to talk to you.
Coming up next, David Dietz is standing by, and he's going to make the case for Boeing, as well as some big market trends that he's watching. The big very busy week ahead. Keep it right here, Schwab Network. We'll be right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim. The award-winning trading platforms bring your trades into focus on the Think or Swim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade greenly with Schwab.
Each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Like the New York Stock Exchange, we've got you covered. The biggest stocks, the biggest trends, all the market moves. The watch list with me, Nicole Pedalides, 2 p.m. Eastern on Schwab Network. Welcome back to the watch list. I'm Nicole Pedalides, live on the New York Stock Exchange. I have some more market movers for you right now. Their shares slumped to near 52-week lows after the Pennsylvania jury ordered its subsidiary Monsanto to pay more than $2.25 billion over its Roundup weed killer. This is the largest damage assessed in the long-going round of litigation. The mayor says it would appeal this decision, claiming that scientific evidence shows Roundup does not cause cancer. iRobot shares plunged this morning following the announcement that Amazon would no longer try to acquire the robot maker, with the company citing key regulatory challenges. iRobot will undergo an operational restructuring plan, which includes cutting 350 jobs. Its CEO chairman have
Damn, look at that thing go.
down more than 65%.
That's it for me on that one.
52-week highs following acquisitions last July.
Ouch.
Warner Brothers Discovery sinking after Wells Fargo.
Jeez, I just can't get this right. Well, I can, but not.
Analysts saying licensing content to other streaming services like Netflix is a double-edged sword.
What we got here? I'm gonna have to go in a lot.
Earnings have been destroyed since Discovery and Warner Brothers merged. Shares are down 30%.
1 minute, 5 minutes. I got it on here somewhere.
SoFi swinging higher on back of strong fourth quarter earnings and higher loan costs. Reported its first ever quarterly profit on a GAAP
Damn. Of course. The calls are at 610.
Almost triple. And SoFi also saw a 19% in deposits. Taking a look at Bitcoin today, 43,395, up 2.3%. For more on some of the big trends driving this market and some stocks to watch, I'm joined by David Dees, Managing Principal Senior Portfolio Strategist, EPAC Private Wealth Management. Glad you
Okay, I'm going all or nothing right here.
Nicole, good to be with you at the New York Stock Exchange.
Yeah,
Nobody take his trade.
It hasn't gotten old all these decades later. Tell me a little bit about the week ahead, because there's a slew of earnings this magnificent set. The Fed, what are you going to be watching for?
We got a lot of them now, 50 cents.
Why? Because you've got 19% of the S&P 500 are going to be reporting this week, and there's nothing buys individual stocks more than the earnings they report, and that includes 5 of those Mag 7s. Your Apple, your Microsoft, your Google, and so we're going to be watching for that very closely. Of course, the Fed is starting its 2-day confab tomorrow, and of course, all eyes are on
Give me 75.
what they're going to do in March. We know this meeting is not a live one. Right now, I think it's about 45% probability that they'll reduce rates in March. That has come down dramatically.
Dramatically.
We're going to say, they're going to say, we're no need to cut rates immediately.
Come on, a little bit more.
We've got a data that's just an all-time record on Friday, and they're talking about cutting rates. On the other hand, they're going to be
Fudge.
people that as inflation comes down.
Them first ones, man.
If rates stay steady, real interest rates get bigger and bigger, and that will put a real drag in the economy, and they don't want to see that. And of course, jobs report. The consumer is 70% of the economy. If they have a job, they're going to keep spending. If they're worried about their jobs and the jobless rate starts to go up, that's going to be a problem. So we're going to be looking at that. Finally, treasury refunding. Are people buying treasuries, despite the huge supply of them, due to the deficit spending?
I was just asking about that, and some of them haven't been received so well lately.
Exactly. It's kind of a two-edged sword, because when they're not received well, the interest rates tick up. That's the drag on the economy and the market. On the other hand, why are they flooding it with all this debt? Because of the spending. And that's going to be a big driver for the economy this year. You've got that Inflation Reduction Act. You also have all sorts of green initiatives. We're helping fund 2 wars. I mean, a lot of spending going on, and of course, that's a big tailwind for this economy this year.
Yeah, understood. You have Boeing on your list as one to watch here. Is a name that you like, right? I mean, tell me more about this.
So, first of all, at the end of the day, we have a duopoly in terms of airplane manufacturing. It's Airbus and Boeing.
Right.
And Boeing actually has an edge in your wide-body, long-range planes, and Airbus has an edge in some of the shorter-haul carriers. But the fact of the matter is, no one can break into that duopoly. Boeing has a backlog of order that goes out years. Now, of course, we've heard some very disturbing news and so forth, manufacturing defects, but let's look at the big picture. At the end of the day, commercial aviation is one of the safest ways to travel. Compare that with what happens with the car manufacturers. They always are having recalls, even Tesla had a recall and so forth. So you have to take it in stride. At the end of the day, the other thing to keep in mind is, okay, Boeing had a couple of tough incidents, but of course, one of the Airbus planes was in an inferno, one operated by Japan Airlines, so it's not like Airbus is perfect either. Where are these airline carriers going to go to? And we do know that air traffic is going to be increasing at almost twice the rate of the GDP over the world for the next 20 years.
Because this one, I mean, and so really with this duopoly, I mean, where are they going to go to get the airplanes? It makes sense. So if you go from 176, right, between October and November, up to 267, so that was a big, quick move. Now it's at 204. Is now the time to buy, or is it going to go back down and keep testing, or do you sort of buy in and dollar cost average? Well, what do you say when it comes to trying to get into Boeing? Because really, now it's down, what, 21% month to date, and it's been down.
Absolutely. So we know we're paying 21% less than just a little while before. But remember, this stock was well over 400 several years ago, which are about half the price. So my strategy is
if you get a particular, the FAA decides they want to do one more test and the stock drops back 5 points, buy it, because that has nothing to do with this duopoly theme that I'm harping on here. It's not going to do anything to discourage everyone on the planet from wanting to get on a plane and go to the Caribbean or wherever.
Yeah, very interesting. What about what's been going on with Disney and how impactful is what's been, Nelson Peltz has been saying, he jumped in, he wanted board seats, then he thought Bob Iger was on the right path and he backed off, and now he's sort of reared his head again saying that he wanted them to focus more on streaming. Your thoughts on Disney?
Certainly. So again, I mean, you have this huge transition from, linear TV, the so-called cable TV, to streaming. But at the end of the day, whether you're consuming it via satellite, via cable, or on your handheld device, it's all about content. If you like what you're seeing, you're going to want more of it. At the end of the day, I still think that Disney is content king. The iconic characters, the theme parks, their content library is unmatched and so forth. And so I think, although Netflix has a slight lead, there's room for at least two people, two players. Ultimately, maybe that's the duopoly too. And I think Disney can manage this transition well. And of course, we're also coming out of the pandemic. The theme parks are starting to build momentum. Even people going back to the movies that they weren't doing during the pandemic. And of course, Disney movies are always a good bet. In terms of Nelson Peltz, I'm glad he's there. He doesn't waste his time or he doesn't find value in the company. So the fact that he's paying attention to it, whether he has the right strategy or not, he certainly sees it as undervalued. And indeed, the stocks were supposed to be 200 at one point. Now you're under 100. And of course, the pressure is on Disney because of Nelson Peltz and others to get that thing up.
All right. And he takes claim that he says that last time it went up is because he was there pushing it as an activist investor. Last but not least, Chevron, which was around 147, and actually you had TD Cowen put a 150 target, so thinking it's probably somewhat fairly valued around these levels. But your thoughts on anything like Chevron?
Sure. So we're going to hear earnings from Chevron on Friday. It looks like it's going, if you analyze it, it's 11 times earnings. You get a dividend that's close to 4%. Chevron has increased that dividend 36 years in a row. And they're paying out less than half of their profits. I mean, the fact of the matter is we're not going to be able to wean ourselves off from fossil fuels for probably decades at the end of the day. In any event, as we do, the smaller players will go by the wayside. That leaves Exxon and Chevron. Chevron, I think, is a little bit more out of favor right now than Exxon. Of course, they wouldn't be spending $53 billion to buy Hess if they didn't think energy had a big future, and that's going to give them a pole position in these key rich assets off the country of Guyana, South America. Of course, look at all the concerns here's the wild card, the Middle East. Right now we're focused on the Red Sea. If Iran gets involved, Iraq gets involved, the Straits of Hormuz could be cut off. There is no way around the Straits of Hormuz. Oil prices could go up 10% before you finish your coffee in the morning.
Yeah, there we go. Just a final quick last thought. I mean, jobs on Friday. Starbucks, I just saw a headline across there. They're expecting the consumers in the U.S. to slow down a little bit. What are you expecting for jobs and consumers and their spending behaviors and such?
So I'm looking for about 175,000 job count increase in the jobless rate to tick up maybe like to 3.7%. I think what we want is a Goldilocks number. We want something that shows that jobs are still plentiful, that Americans are still coming in off semi-retirement and so forth to take those jobs, but we don't want anything too hot because of course that's going to worry the Fed that perhaps inflation is rearing its head. Of course, if it's too low, then people start talking about recession. So if we have something between 150 and 200, we're golden.
Okay, so we'll look for that. All right. Good to see you, David Dietz. It's wonderful to have you on. Thank you so much. Impact Private Wealth Management, David Dietz. Coming up next, we're going one-on-one with AT&T's head of investor relations to talk about the latest earnings report and outlook for AT&T. Next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in...
Okay, time to go over the watch list. percentage gainers today. Lissad's even up. Sophie really got the volume today. Really has the volume. There are going to be a lot of videos coming out on this stock. We had 3 white soldiers leading the gate. So you'll be seeing some good videos coming out on it. We definitely broke that 1 hour. Oh gosh.
Such healthy investment in our networks, our free cash flow is growing. That was a great point you made a second ago. We generated $16.8 billion of free cash flow. That's not only more than the initial outlook we had, that was more than the improved outlook we had recently given investors. And the takeaway from that is we expect it to continue into 2024. We gave an outlook for free cash flow for this year that is higher than what we achieved last year. So really the message that we had for our shareholders is that we met or exceeded all the targets that we had set for the full year, and we believe we can do it again in 2024.
Very good.
And you're projecting strong free cash flow for
T.
this year, 2024, and folks will love that, right? I mean, are you thinking when you talk about 16.8 billion free cash flow, is it about?
That's a lot of cash flow.
More than that?
We've said that we think we can do between 17 and $18 billion of free cash flow in 2024, so growth off of 2023. And by the way, cash flow in 2023 was up about 19%. So we really think that cash flow is becoming an increasingly important part of the story for our shareholders.
And when we take a look at the investments, and every time I've spoken with someone from AT&T, I can feel the excitement about the big investments the company has been making over the several years that you just pointed out, right, with 5G and fiber broadband networks. And is telecom changing in a way that will benefit AT&T?
Yeah, I got it for a brief moment.
Switching to 5G, there was this feeling about which of the
Back down to 50.
We're actually really ready for it.
This really
Talk
sucks.
about T-Mobile being in a good place. how is AT&T ready to take on the competitors in
Yeah.
the next 5 years for how telecom will evolve, whether it's AI or Internet of Things or whatever else?
That's a great question, and I think one of the key trends that we're seeing in the market that we've been seeing for a while is that customers want to be able to buy all their connectivity from a single provider. So they don't want to have one company that's giving them their mobile broadband and a separate company that's maybe hooking up their home. They're increasingly looking to get it from one provider. AT&T is by far the best positioned telecom company to provide that connectivity over our own networks. So we have competitors who attempt to do the same thing. Maybe they do it over their own broadband network, but they rent someone else's mobile network to provide that solution, or maybe they don't even have a broadband network that they can offer to their consumers, meaning they're a mobile-only company. We have the biggest fiber footprint in the U.S., and we have a national wireless footprint, and the fiber network's only getting bigger. Just to put some numbers around that, there are 26 million customer locations that are passed by our fiber network. These are locations that we can or soon will be able to serve. By the end of 2025, we think that's going to be 30 million. We said there's another.
I've never had really good luck with AT&T,
that we think we could reach with fiber,
except when it was a landline.
Continues to be where we see it is, and whether policy continues to be supportive of it. So as we look out over the next 5 years, and really maybe beyond that, we see a converging world, and we don't see any company in our space as well positioned to meet that converged demand.
I thought they were expensive for one.
Understood. And where do we stand on the dividend?
The service, I mean,
Closely, that was something that was a bone of contention, I
I
guess,
couldn't get service out where I lived at. Verizon I can,
how are we looking on the
out in the country.
We feel good about the dividend. We understand that it's a very important.
And I heard their internet was good if you can get a good signal.
Just to put some high-level numbers around it, we distribute about $8 billion a year to our shareholders in dividends. You go back to what I said before, we expect to generate $17 to $18 billion in cash flow. That's what we use to pay our dividends.
Oh
that
boy.
means that our outlook for cash flow is more than 2 times what we expect to distribute to shareholders. That means that we've got a lot of excess cash that we can use to improve the financial profile of the company. You're seeing us pay down debt. We have said repeatedly that we have a target of getting our balance sheet to a certain level by the first half of next year.
We said repeatedly.
On our way. And as we get to that milestone, it's going to be a great opportunity for us to expand the conversation with our investors.
CRM looking good.
To further enhance shareholder returns.
Salesforce.
We can look to revisit our dividend. We can look at other ways we can return capital to shareholders. We can look at a lot of ways we can make accretive investments in our business. You go back to what I was discussing earlier, even though we have one of the biggest capital investment programs in the U.S., it's actually leading to growth that's creating strong free cash flow. So we think we've got a lot of optionality as long as we continue to execute and take advantage of the investments we've already made.
Yeah, I'm still impressed with the over 1 million fiber broadband customers for the 6th year in a row. It just really sounds like a lot. And, I don't know how you keep up the trajectory. And I think about the different economies around the world and trying to get the right, you mentioned having your AT&T locations and getting fiber to homes and such. How do you get the right things to the right people, whether it's here in North America, around the world? Some people want iPhones, some people want Android, some people want folding, some people want prepaid. I don't know. I mean, where do you see the growth happening for the company?
Spy calls are now at 127.
Here in the U.S., and you go back to some of the points I made. As many
489s.
And small businesses and large businesses that we can serve today with our fiber network, there's really many more that we could potentially reach. And we've consistently seen that when we build fiber in a new community, people sign up for it. We win where we have fiber, and we've actually been doing better selling that service than we initially expected.
Well, it's much better.
We started to identify opportunities to expand that fiber footprint well beyond what we've targeted for the end of 2025. So I think we've got a lot of options. And no matter how we do it, we're going to be doing it over network infrastructure that we own and operate and control, because that way we can not only deliver the best experience to our customers, we can do it at a really competitive price point and do it in a way that generates the best possible returns for our shareholders.
And just quickly, I'm going to let you go, Brett, but I am curious about the international footprint. Where do you see growth really happening for the company in a great way?
Well, we're in Mexico. We're very happy with the performance of our wireless business down in Mexico. There's so much investment opportunity here in the U.S. It's really where we're focusing our investment dollars. And so you probably shouldn't expect to see us move beyond the markets that we operate in today.
Yeah. Brett, it's great to chat with you. I think this is our first conversation. Thank you so much for being on with me today here on Live at the New York Stock Exchange. So it's an extra treat to have you on. Brett Feldman, thank you so much. Head of Investor Relations at AT&T. Thank you. Still ahead, we'll take a closer look at some ETFs to consider for your portfolio, including what's behind BlackRock's ETF sudden move of DYNF. Okay, maybe becoming a $2 billion ETF. We'll check that out. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading.
God darn it.
And sharpen your skills with immersive online education.
Stand a commercial. There's a subscription where I can pay to not have commercials. I'm gonna go get me some chips. Come on, 75. So we got earnings this week. Let's see what's coming out this week on earnings. Earning updates. And what is it? '23rd, 24th, 25th, 26th. The 30th, we got CAT, XOM, General Motors, McDonald's, Pfizer, AMD, Microsoft, MDLZ, and AMC. I'm not AMC, but Snap. And that's tomorrow. So we got AMGN. Well, let me watch my call here. I want to make sure I get out of it if we get a pop, so I won't lose as much. AMGN. Let's see how much this thing's running a year. Oh God. 211 to 312. I've never seen anything like it. I just want to short everything. I just want to short everything and walk away. Cat just had a pullback and a breakout with a new high. Now XOM at resistance again. 103.02. Now General Motors increased their dividend. That's why we had the pop. That was the only reason we had the pop. And it's getting ready to squeeze. If it hits resistance, it's going to be 37.65 area for General Motors. Then we got McDonald's. I haven't had my Big Mac yet this year. We definitely pulled back for McDonald's. We got a nice little dragonfly doji working today. So it's definitely at a 1, 2, 3. We got Pfizer. I think this one here is definitely undervalued. Sold off way hard. If anything's worth buying, it'd be this. But they're not getting that COVID money anymore. We have AMD. AMD's a tough one when it comes to earnings. They got cash, that's for sure. And we've had a great run on this one. 72 all the way to 184. And we've got Microsoft. I think all hands on deck with this one. 242 all the way to 408. $160 run in a year. Look at the 3-year. That was a triple top break. That's Microsoft. MDLZ. This one had a steep pullback this year off earnings. And they were better than before and still pulled back. This could probably move up a little bit if they get good. And then snap. One, two, three.
How are we, because there's always money on the sidelines, and sometimes we get nervous as the fund flows are out of the ETF. What are you seeing, or what are the takeaways?
So you mentioned fixed income. So we've seen that in the beginning of 2024, there's been a rotation towards the investment grade.
Always clean this gym.
Fixed
May I help
income
you?
products. So VCIT, which is a Vanguard ETF,
Hello?
has seen strong inflows. LQD, which is an iShares product, and BCSC, which is an Invesco bullet shares product, targeted maturity, intermediate term. We think investors, advisors are more willing to take on interest rate risk in 2024, expecting the Fed to be cutting rates. They're willing to take on a little bit more risk for that reward going forward.
What about tech?
Yeah, so tech has been in favor also. We're encouraging investors to take a closer look at more of the equal-weighted versions of these strategies, because it's been such a concentration in NVIDIA and Microsoft and Apple. These mega cap companies have really climbed higher. So an equal-weighted version of the NASDAQ 100 QQQE is a good way of doing that, or RSPT, which is another one of those Invesco equal-weight ETFs. Those are two good ways to diversify away from some of those Magnificent Seven. Still own them, but in a more risk-managed approach.
Right, and and we've had that with the S&P. The equal-weighted did well, right? Because it basically factors out those big guys. And just TCAF, does that go into that same category?
So that's an actively managed ETF that's going to fit in. That's a T. Rowe Price ETF. I'm glad you brought that up, because it's a relatively new product, but it's been gaining scale. T. Rowe Price brought their mutual fund portfolio management expertise into the ETF marketplace, and it's really resonated with advisors who like T. Rowe's approach.
Todd Rosemuth, Benify, great to see you. Thank you so much, Todd, for all the updates on the world of ETFs. Still ahead, we're going to talk more about the Magnificent Seven, because people want to know what's going on with some of those stocks. What about Tesla? All right, earnings season is on. These big names are in focus. Our panel is ready after a quick break. We'll be right back.
Boom, boom, boom. I'll be right back. Like to see it drop right here, 48.98.50. That's going to be my target. Doo-dah.
Michael, when we think about AI, Microsoft, obviously with OpenAI, but then we had all the others sort of, you know, in this horse race, the arms race of AI. Where do you think, is Microsoft still the leader and the one that you say to folks would be a good position for folks, or there's some of the others that really are impressing you, Michael?
Yeah, Michael.
For the long haul, absolutely, Microsoft's AI adoption is going to have a pervasive impact on it. But, you know, Amazon's involved in AI, obviously Meta's involved in AI. They're all involved in AI to a point. As we talked about before, Apple's got a little bit of AI, but they haven't done a very good job of trumpeting the gains in that one. So I like Microsoft for the long haul with the AI adoption. I think it's a much better value proposition, and I think Satya Nadella's done a fantastic job. I think he was... he saw what was going to be happening with AI. It's going to be like, you know, the digital electricity of the 21st century. It's going to be all-encompassing, impacting every single business. Like today, every business is a tech business. In the next 5 years, every business will be in some way or fashion an AI business. So yes, Microsoft will continue to. In fact, that's what I want to see in the earnings statement. I'm hoping we can get some sort of breakout as to what kind of growth they're getting specifically from AI. We also want to see, of course, what's happening with the cloud service, and it would be awesome if they could say how their cloud offerings are going to integrate AI with some more details, maybe in the investor call.
And just quickly, gentlemen, I mean, Kevin, do you feel like 2024 will be a winning year for tech overall? I mean, I know the videos on here.
It already is, honey.
Do you think that tech is a good investment overall for 2024, quickly?
Yeah. Not only 2024, I think 2025 as well, probably 2026. You know, I think we're at the beginning of a multi-year bull run right here.
Wow.
Wow. Okay, Michael?
She said the same thing.
I agree with Kevin. I think, you know, definitely into the future. You can't, some quarters are going to be better than others. We saw a big sell-off last summer, and they all come back again. But you can't, I mean, we're a tech-centric economy, so how can we get by without Amazon and Microsoft? These have become safety plays in a sense, but they're the fulcrums of the entire United States economy. So for the long haul, you need to have a significant amount of your assets in technology.
All right, leave it right there. Kevin Riley, excellent.
Google's double topping, 153.
Thank you both very much. Great to see you both. I'm Nicole.
We had that last Thursday.
Keep it right there. Oliver Rennick, Market on Close next.
We broke resistance. Or double, we just did. New high for Google. New all-time high for Google. This one's about to have its 100% gain. Lily's held up a tight range all day. Oh, there's 50. They need 70. What the heck? What just happened here? Oh my God. Why is this? Huh. This thing should have dropped to 0. Look at that God. Say goodbye to my money on this one. What the heck? Wow. It didn't drop that much like it should have. Well, there you go. Incredible. Well, that's a statement right there. Somebody got tired of waiting around. How in the hell? What the fuck? Somebody paid the M&Ms real nicely right there. There's no way a stock is going to go up like that with hardly any volume on it. Huh. Very nice. Am I looking at the right thing? Yeah, still at 25. Bond news? Woo! Hit that top line of that megaphone. That one I called out first thing this morning. I did not see that coming at all. I got to get this back to 50. I recommend nobody doing what I'm doing right now because that's just going to save me, hopefully. Them calls are 1490. Ugh. God. Somebody's going to be happy about earnings, I think.
But for the most part, we still need to be thinking about this as lagging stocks, as equities are at all-time highs, Bitcoin is still off its. This is the week it can catch up, but it's probably going to need a little help from a dovish Fed because we know Bitcoin likes the easy money. Looks like ETFs weren't enough to do it. Yeah, Jay Horn, Kevin Hayes, here with me in studio, talk some more about some of the other stories. We talked about these catalysts this week. I didn't even realize, Jay, that the Super Bowl coming up as a catalyst too.
TLT. Chiefs are in the Super Bowl.
Well, I didn't know it was going to be a big market deal, but then you've got FanDuel coming to the market, you've got DraftKings making highs. Pretty big moves, I feel like, that deserve some attention.
Yeah, I mean, especially because Flutter has been
that's crazy.
rumored to actually be going, public in this capacity. It was available on various markets. It was also available on the London Stock Exchange, I believe, but now available on the NYSE. So it debuted today under ticker symbol FLUT, which I like that ticker a lot. And there is the hope that naturally, of course, with its exposure now, that it could see some growth in this highly competitive space. I will say, they do have a lot of brands. The most infamous is, without a doubt, FanDuel, which is sort of a duopoly going on, actually, frankly, in the gaming space, in the sense that there's DraftKings, and then, of course, there's Flutter, and, of course, FanDuel. So I think this is really interesting. You saw Gronk at the stock exchange today, which is pretty cool, but come on, Super Bowl is in 2 weeks, so we have a lot of time before that. A lot of catalysts that could happen prior to the Super Bowl, I guess.
All right, so he's still popular even though he's not going to the Super Bowl.
Yeah, because he's a commentator still.
Travis Kelce's too busy. They couldn't get him.
He's still
by the 90s.
he's playing.
Right. So, Kevin Hicks, what do you think? I mean, does DraftKings, do they even get any access to this market? There's still too many legal divisions.
Is this a new IPO or something?
The problem with all these companies is very flashy when they start.
Flute, F-L-U-T.
The amount of money it's costing them to gain customers. The competition is
insane.
Yes, and it's the competition is really cutthroat, and they're working their way down. So
yeah, they've got some hurdles, guy, but
they've got some hurdles.
Talk about a high-priced IPO.
Exactly.
I'll need another avenue.
So the problem is with most sectors of the economy that seem too good to be true, competition comes in, right? And that will make it more expensive for them to get. I mean, look, you see some of the deals they're offering on commercials, you know, for betting a little bit of money and winning a bunch. So the cost for them to lure customers is enormous.
Okay. It looked like you had last thought there.
I was going to say, the marketing costs, that's such a good point, because they're, between FanDuel and DraftKings, it's like my only commercials. And they're honestly very annoying. They get your attention.
All right, more kind of real talk here, stuff that matters. This bond rally in the second half of the day. I'm kind of joking about Super Bowl bank accounts, by the way. All right.
Stuff that matters. Whoa, whoa, whoa.
This bond rally at the end of the day seems like maybe we're getting a little extra push in the last half hour, Kevin, because that Treasury financing estimate came out. It looks like they cut the Jan to March borrowing estimate, so by about, I don't know, $50 billion. Look, I'm not a person who really thinks anyone should care whether the Treasury is going to issue 760 or 820 billion. But there are people right now, Jim this morning too, that they think this is a really big deal. You think that's a big deal?
I don't think the U.S. government has a ton of debt that they need to go through. I don't think this doesn't feel like a big number that's changing any fundamental process of this. Now, I'm not a bond expert, full disclosure. I don't get into the minutia of bonds, but
sure. Well, they definitely ticked up here for sure. But like, come on. The $50 billion difference, to me, this is like, it's almost something like a meme, like, you know, narrative. But look, if it moves the market, it moves the market. For most of these auctions, whenever there's volatility in auctions, it's generally been volatility fade.
Yeah. I look much more at the whole scope of what's going on today, which is VIX up, dollar up, bonds up, gold up. And there's a risk-off sentiment here.
Bonds come off a lot, though, with that Treasury issuance announcement.
Okay, but I mean, like I said, I look at that as more of a flow than I do one news. Although, you know, bonds move on these afternoons, they move on the auctions.
Yeah.
So it's no longer, you know, a place for lack of volatility. Bonds are extremely volatile now.
Well, to your point last night, it kind of looked like maybe there could be some risk off today. Boy, we've really turned it around. With the gold dollar bond triple bid overnight, to your point, it looked like it could have been a risk offset, but now it's also 1.2%. All of the big caps is up. Even Tesla's bouncing back, almost 4%. There's a small story there, Jenny, give it to us.
Yeah, Tesla expects to spend more than $10 billion in CapEx in its current fiscal year. Expects that figure to decline in the following 2 years. For fiscal 2025 to 2026, it's targeting CapEx around $8 to $10 billion. So still around that $10 billion figure. But in the previous report from the company, they had projected CapEx to fall between around $7 and $9 billion. So the company did caution that there's several factors that is affecting this, including potentially shifting companies its overall priorities and additional new projects, which could affect now its guidance. It also does expect to be able to fund itself and its expansion as long as the macro conditions support the current trends that are favorable to their sales. So that to me is like a huge asterisk, because I mean, how could you possibly predict the various macro conditions that could or could not impact your sales? I mean, we could see anything happen right now, especially like with the way that like crude has reacted to some geopolitical tensions we had over this weekend. I mean, anything could happen in this market, but I think that still nice to see Tesla at least higher today, because every day last week it felt like the pain just would not let up ever since we got those quarterly figures. I know that was Thursday, but it was selling off even prior to that.
Well, I think, look, it might just be bouncing back as the rest of the market is because it got hammered last week, but considering it got sold off because its margins got pinched, this might be the market looking at CapEx going, okay, this is a good thing for them to spend, overspending. But we'll find out. Seems like it could be a bounce after it got hammered last week, so won't read into it too much. Thank you, Norm. Thank you, Kevin Hanks. Appreciate the team. Joining us to kick off conversation this afternoon is John Jerry, co-owner of Market Rebellion and co-author of a new book, It's Not an Option. Hey, John, welcome to the Schwab Network.
Great to be with you today. Thank you very much.
Appreciate that. Tell us about the book. You're an option guy. What is this not an option stuff?
Well, the reason we went with It's Not an Option as a title is that we don't think it's an option to just trade stock, because there is so much more inherent risk in just owning a stock. I could own Apple, but 1,000 shares is a condominium basically. It's $200,000. I could own an option and own Apple basically for a week, 2 weeks, a month, 3 months. Pick a time period for a lot less money. In fact, probably a 20th to a 50th of the price of putting up $200,000 to control 1,000 shares of stock. That's why options are such a great and valuable tool, I think, Oliver.
We've had some pretty interesting development cycles in the options market the last couple of years. All the madness during COVID, and then now it seems like the popular trade a lot of people have been dabbling with are the zero or short-term expiry options. What is kind of your approach in that department? Do you like using those?
I like using them, Oliver, because I've been trading for 42 years. And all of those 42 years I've traded options. I think there's a lot of people who have no business being in the one-day options because they don't understand what a binary bet is, just to be naked long, naked short for a few hours. And there's a lot of evidence that shows that people have been losing money on those bets. Now, the pros love it. Pros like me, pros like many of your listeners, they love one-day options. But I think overall, this is really where experienced traders only should tread on those one-day options. Everybody else needs a little more time to be
Exactly.
Understood.
And I don't do only one. That's the SPX. I don't do any others.
You want to be tied to? What do you want to avoid? Do you think there's potholes this week, or is it just going to be more fuel for the bullish fire?
Thing 4900s went to 1925. The calls that I had.
It's not just the Magnificent Seven, and yeah, I call them Magnificent Seven too, just like most people. But I really do like tech a lot. And
A lot.
For instance, Oliver, we've got options that are expiring. And
Nobody liked them when I liked them.
That stock's up 23% year to date. I mean, that's basically 1% a day for all the trading days in January so far. So I like NVIDIA. They're buying calls all the way up to the February 640 strike. In Western Digital, that one's up about 11% year to date. Again, huge outperformance to the market. And they're buying the 65 strike calls also out in February. And then Google.
WDC.
It's only
There's another big spike.
But that one's getting aggressive buying all the way up to the 162 strike. So what this tells me, Oliver, is
I'm getting rid of that
there's a lot
fucker.
of big money being bet on upside calls and tech. Those three that I named, I have positions in all three. Not trying to pump up my own portfolio. I'm just telling you where my money is and why I went there. I went there because people were buying
$800 run
on this turnaround that you've been talking about throughout the show.
in 5 months.
That is where a lot of money is going very, very quickly into the next stocks.
And transparency is good. Alphabet just broke out to recent highs. It was a little late to join the party, but it got there.
Yeah, it
Western
did.
Digital got a little choppy around earnings. They said today they might still do that deal with Kyosha. Do you think that matters to the trade, or does Western Digital just float in whichever way the big techs do?
I think Western Digital is going to float whichever way big tech goes. I think well said by you. I think that overall, semiconductors, we've seen a lot of them starting to get fast money flowing into those stocks again. For a while, they were shunned. While tech was going up, a lot of the chip stocks, and it certainly didn't help when Intel came out with those numbers last week. But some of those in the semiconductor space were pretty soft. I see that with the NVIDIA move leading the opposite way. And I'd say just keep an eye also on energy, because in an election year, certain stocks do really well in a re-election year. I think energy should be one of the outperformers, and it's certainly setting up to be that way, especially with all the tough rhetoric or tough talk around Iran, the Houthi rebels, and what's going to be happening with transportation of goods as well as some product through the Suez Canal.
All right, so that's some of the stuff you like. What about on the other end, if we flip it around for a second, the healthcare trades? It seems like that's an area where you think the momentum is going to hold in the opposite direction. Tech stocks got the upward momentum. Not all the healthcare. I mean, some of the stuff that's in the right spot, weight loss drugs, cancer fighters, but like Pfizer, health insurance, some of that stuff's gotten wrecked.
Yeah, and truly wrecked. I mean, Pfizer's down 9% year to date. And I'm sorry, in the last 3 months, I was mistaken, I misspoke. In the last 3 months. But that's a big drop for a stock that's just been hammered ever since people started shunning some of those COVID treatments. You know, mRNA was hit, and certainly Pfizer was hit on that. Humana, 28% drop over the last 3 months. And an awful lot of that came last week, Oliver, on those numbers out of Humana that were just terrible in terms of Medicaid Advantage, how much more it's costing for them. And that's one, though, that I would be willing to start putting my toe back into, Humana, that is. I wouldn't even mind grabbing a little Pfizer, but yeah, this is where momentum has been going like this, from the upper left to the lower right.
Yeah, and then I got creamed last week. All right, so maybe worth taking a little stab at Humana. One other area that's been going top, left, bottom, right, fast, China. Last week got a little bit of a bid, giving some of it back this morning and this afternoon. John, how do you approach that group right now?
Chinese ETFs. I really don't like buying a lot of individual stocks in China, but there are 3 great ETFs, you know, given the stimulus that China's likely to throw at the markets, they've already been pumping in money, if you will, back into the system because they stayed locked down for too long. They thought they could just throw a switch and everybody be out spending. That's not what happened, and because of that, I think we could take a look at some of the FXI, which is probably the broadest market for China. That's the ETF. We've also KWEB, which is symbol KWEB. That's the internet stocks in China. And of course, ASHR. I believe that's 300 stock basket of big cap stocks in China.
All pretty ugly right now. Investable though, or is China too unpredictable?
I think just like any place that's getting flush with liquidity, you're going to get that sugar high. You know, a lot of us, I'm sure even you have used that term, Oliver. You get that sugar high. It doesn't last long, but certainly it does boost price over the short term. So that's basically what I'm looking for here. I think China, after not getting as much of a reaction as they expected from the initial stimulus, they're going to apply a lot of stimulus. They're going to do quantitative easing. I believe they're going to flood the system with money again to try to get the situation turned around. And I think at least in the short term, it will do exactly that. It will turn around, and China, anybody in the big cap stocks in China, people in those internet stocks with that same exposure to China, I think they'll be doing very well over the short term. Over the next 3 months, I think this is a great place to be.
All right. John, thanks for the chat. Fun. Appreciate it.
I appreciate you, Oliver. Thank you.
Absolutely. John Jennings, co-owner, market rebellion, co-author of It's Not an Option. All right, with some bullish tech trades, maybe a little taste of a beaten down health insurer like Humana, and ready to take a stab at a sure high in China stocks coming up. Let's talk a few more of those big techs this week. We're joined by Matt Tuttle, who's also going to give us the latest. Jim Cramer might be taking a victory on Mr. Tuttle. We'll got him next.
My dad was a hard worker. He
used to do side jobs installing wind.
God, it's just nuts. $5,000. Tesla double topping. Man, I really thought we wouldn't break that shoulder line. And consolidate until Wednesday, but this is the strongest I've ever seen tech. I've been a tech trader from day one. Out of all the sectors that I've traded, I just wonder. I had $10,000 in a tech fund back in 2007. I was wondering what that'd be worth today. It had to be worth a lot of money. I took it out because it just kept crashing and crashing and crashing and crashing. Went from 12,000 to 6,500, the Dow did. By the time we were at 8,000, I said, I want out of here. I can't take this anymore. And then I bought the dip. This kind of reminds me just the opposite of back then. I mean, the market just tanked and tanked and tanked. Now we're just flying and flying and flying. He said $10 trillion just in 7 stocks. This makes you wonder. I messaged Vegas. I said, I bet we're in a bubble. She said, no. This weekend.
And also, and most investors don't know the right way to use a short fund. Me being a trader, I loved it. I mean, I held it up until the end, but for most people, I don't know that they know the right way to use this stuff.
Gotcha. All right, like the response, appreciate that. You've got the levered funds tied to the stock specifics that we've talked about before. And by the way, I don't know how much you ended up spending on the whole thing, but you got a lot of marketing through it and advertising, so it wasn't a complete loss on that strategy. Okay, let's talk about the leverage stuff. What are you seeing? Where are the flows going into the T-Rex fund right now?
So amazingly, every single day we're getting more and more money into Tesla T.
Fuck, these things went to 2,900.
Even when Tesla was getting crushed last week, we were seeing inflows. So we're up over 150 million right now in that, and more inflows came in today. It's people are buying the dip, buying the dip, buying the dip. I personally own some as well and options on some. I'm buying the dip on Tesla too.
Okay, so people really are scooping in after the earnings route. I guess working a little bit today. Tesla T is the long, Tesla Z is the short. You got it for NVIDIA as well. The Apple, Google, Microsoft, you've got longs. Are you going to do the shorts for those too?
So we filed for the shorts. We'll see. Right now in this market environment, we've been telling people this in my newsletter every day. It's buy dips in the Magnificent Seven. Until I see that landscape changing, I don't know that there's a lot of need for the short side. We're seeing flows also into the short Tesla. We're seeing a little bit into the short NVIDIA. But, the long side is really where investor interest is. And, me being a trader myself, that's where my interest is too.
Okay. Yeah, it makes sense. I mean, no rush to pull out the shorts when, things are breaking out and ripping into highs here. What about for this week? Momentum still favoring bulls? Give me your market take, 60 seconds.
Yeah, momentum is still favoring the bulls. We just had this quarterly refunding announcement. Market's ramping on that. A lot of data, bad stuff could happen, but, for now, I'm still bullish. Bears can't gain any traction, so they need something, out of the blue to be able to gain some traction here.
All right. Appreciate it. Thanks for the comment, Matt. Fun. Thanks for your time.
Sure.
You got Matt Tuttle, CIO, Tuttle Capital Management. All right. The T-Rex funds with the levered single stock exposure coming up. Let's get back into the economy, talk about what we learned from the GDP print last week, how it sets us up for jobs this week. Mark Sandy of Moody's Analytics joins us as we head into the last half hour of trading with a lot of strength in stocks.
I remember when I first started flying, and we would experience turbulence.
We're experiencing it now, baby.
lead into financial markets and cause problems. So that's another risk. And then the final thing I'll say is financial system more broadly, the operating environment for banks, non-banks is still pretty tough. So,
oh, there's AI. I gotta see what that thing's at.
Again, I don't think that's a likely scenario, but that's certainly something to watch for.
Okay. Mark, a few of the things that I hear that sound like reasonable cases for slowness, the weakness in commercial real estate, the loans kicking back in that might stress consumers of a certain generation a little bit more. Do these things worry you at all?
We should watch them, but they're on the margin. I mean, I do think the problems with consumer credit are really modest, and I think we're past the worst. Loan growth, card growth, consumer finance loans, auto loans, the growth rates have slowed very sharply in the wake of the last year's banking crisis. Banks have tightened down. And that now is resulting in better credit quality. We have seen a run up in bank card delinquency, consumer finance delinquency, auto delinquency rates. But they look like they've leveled off, topped out.
Well, Tesla hit the 83, the 63 May
hopefully the Fed,
on the 1 hour.
they do, that makes it easier for folks to pay on their cars.
So I nailed that one.
Commercial real estate also kind of the same thing. We will see more defaults on commercial mortgage loans, but it doesn't feel like it's going to be to the extent that it really upends the banking system. We may see more bank failures, particularly small banks that are up to their eyeballs in CRE debt, but I'd be surprised if we see anything broader than that. The big banks are, their exposure to real estate is really very low, and they're very well capitalized to some very dark scenarios that just aren't going to happen.
Understood. Hey, Mark, lastly, just to realign from your notes, you think that by election day, the Fed will achieve its mandate of full employment economy and inflation at target. So it looks like that's your main call for this year.
Yeah, indeed. So, 4% unemployment, that's full employment, and inflation at target, 2%. And that'll be a green light for the Fed to continue to normalize interest rates as we move into 2025. Yep.
Okay. Great stuff. Good baseline for us to work off, and we'll continue the conversation. Thanks, Mark.
Yep, anytime. Take care now.
All right, absolutely. We'll do. Mark Zane, Chief Economist at Moody's Analytics. Optimistic and realistic, too. Data's been pretty darn good. Let's talk some crude oil. Commodities when we come back. Equities are blasting off, by the way. Bond market rallied big. Dollar gave up a lot of its gains. Risk on. Bitcoin's been up. That was kind of an early tell this morning when it popped. But the commodities being down, that kind of helps too. We'll talk about it when we return. We'll also take a look at hot and short on the street and restaurant biz. It's the new kava. Someone says to sell it. Be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get...
I'll tell you what, I had 5 of them contracts for the SPX calls today at 275. They ran to 2,900. I didn't see that coming at all. I really thought I've been here before FOMAC, but this tech earnings this week, I don't think anybody's worried about this. I really don't. I got to have a different perspective, that's for sure, and get this bareness out of my skin. I've been pretty much right when it comes to the feeling of the market, but not here lately. Not with this big run. I mean, I've been studying that roadmap for many years. I just can't see how many put so much money in just 6 or 7 stocks and have so much sitting on the sidelines.
Institutional Services Managing Director.
I think a lot of people have missed this run.
Past 10 days for crude, though, so maybe this is just a little technical reversion.
Good if you're a bull, right? Not if you're short. And we had a $10 rally, kind of came right back to the D's high. We had a spike in D's to this 79.50. Everybody wanted to see the $80 print. We did not get it. So what turned us around really, I think, was evergreen. At one point, the high we hit today was about a 2-month high, give or take. So up against big resistance. The concern obviously was set over the weekend, what's going on in the Mideast. But I think the China economy trumps everything, and you just saw that. I mean, it just took the wind out of the sails.
that evergreen news, especially early this morning, caught everybody who was long, getting long at the top, looking for follow through. They've all been chased out. Bigger picture, you know, I always like to look at the bigger picture. The October high in the top month for crude was around 86.60. The December low, 68. You take that spread, 77.40. What is so big about that? It's halfway down. And we are sitting right underneath that right now. This morning, if we had taken out that, that 80 level, that would have been a 60% pullback. So very technical. When people don't know what to do, especially when there's headline risk, these technical levels attract a lot of the business. The bulls and the bears line up, and we'll see. It's only Monday. If anything changes, we could be right back at it. So I would expect continuing to see us whip around in this $10 trading range. Most people that do not like trading ranges. They're more like they look for more trending models. So it's that's something to watch out. I think every day you put on, if you put a crude trade on, you're immediately risking $1 or $2, which on a one lot, if you're trading a full contract, is $1,000 to $2,000. So there's a lot of risk out there, and we continue to bounce around these key levels. So we'll see how we trade the rest of the week, but certainly, lots of opportunity out there if you don't get married to one position.
Okay, I like that.
Don't get married. Don't get married to the Magnificent Seven.
Basically, is my takeaway. I mean, it really could still go either way. I've got the long-term kind of pressure on it still, but short-term, a little pickup, but not super encouraging for bulls that as soon as we get a little bit, not even overbought, but just kind of heated up, you get some bad news in China, bam, it gets hit again.
Yes. Yeah, China, and also too, the other thing, people, real quick, we're talking about, are they going to refill the SPR? Apparently, they're doing some program where they can buy, 3 million barrels a day, no matter what. Well, they sold 185 million barrels at the top, around $95. If they only buy 3 million barrels a day, it's going to take them 5 months to fill it. We'll see. But that's the other thing out there too. A lot of bulls are thinking, we would refill the SPR. China also back, a year and a half ago, they were dumping oil out of their SPR, trying to keep their economy going. So at some point, that demand is going to come back. If you're looking for a long-term bull story, that's it. But right now, that demand is on the sidelines because it's not. You haven't seen it step up huge yet.
Yeah, I like that. Natty gas getting smashed. RBOB not so great. Things worsen when you move along the spectrum in energy.
Yeah, it's following crude oil. And natty gas has had a pretty wild trade as of late. I think a lot of people are looking back to those lows. We are going to go back to those. If we take out the contract low, or that would be like a 35-year low, right? It's sub one. I think it's 143. So we did fail pretty brutally after looking like we were going to make a run higher on cold temperatures. I think that the announcement by the current administration that they were going to hold on natural gas, that whole thing, I think, took the wind out of the bullish story for natural gas as well. So until then, I think that the leader is going to be crude oil, and you see that it follows the follower is natural gas, and also, of course, RBOB. Now the good thing is, if you buy gasoline for your car, it's a lot nicer to see it here sub 230. Got everybody remembers back in the June of 2022 when RBOB was at 430. So again, this is glass half full. We'll have to see. We did get a really nice dip in all these markets in December. December we kind of bottomed out. So I think if there are people out there that consider themselves bottom fishers, go back and look at that December low. If you're trying to load up here and catch a falling knife, be a hero, that's your risk, is that December low in all these contracts.
All right, nice. Like the high levels. Thanks, Chris.
Thank you.
Yeah, go to Travel, TTM Institutional Services. Let's get to check in on the developing story in the world of shorts and longs today. It's a little bit of a negative report on copper, but the shares are doing fine. Dion's got a story for us. He wants to respond in the newsroom.
Yeah, the shares are shrugging off the negative parts of this, but
Here's the thing, everyone's calling Cava the next Chipotle, but Lauren Balick says, yeah, it's the next Chipotle. It's the Chipotle of 2015. That was when a string of health violations happened, and a string of health crises, I should say, rather, happened with Chipotle, which had hundreds of people impacted, and it stretched into early 2016. And during
I remember.
that time, Chipotle shares dropped about 40%, and it took more than 3 years for equity valuation to recover. Now, this time for Cava, Balick said that she's betting on a Cava health crisis in 2024. It's because its health sanitation standards in the New York market have been declining. And as of yesterday, Cava's 11 Manhattan locations, of them, 3 have declined to a B or a C health grade, and one of the 2 Brooklyn locations dropped to a C health grade. Now, generally, around 90% of New York City restaurants at any time have held an A rating over the past few years. And also, back in July, the company had to recall a grocery product, its spicy hummus, because it was mislabeled. A retail store said that its packaging did not disclose that sesame was an ingredient when they found sesame in it. Someone had actually put the wrong lids on the wrong product. But Balick says Canva, hey, they're playing with fire when it comes to food safety. They're too focused on new store growth, and it's coming at the cost of in-store operations at the existing Cava locations. Additionally, investors had not taken into account its plans for expansion into those pro-union areas. And those are the areas that may have issues coming up with labor concerns with Cava.
Sounds like, according to the report, it made some pretty big missteps. Getting the rating hit to the restaurant rating never good. The health rating dropping bad news. But I don't know, market seems okay with it. So,
For now,
Chipotle came back.
Chipotle did come back from it, but it took more than 3 years for it to happen. And so this analyst is saying, obviously, this could be happening, but we'll see if the reality actually catches up with the forecast.
Again, thanks for the heads up. Cava's still up 3.5% today. Pretty negative report, though, for sure. All right, when we come back, it's our big picture discussion set up this week. Talk about bonds, talk about the international stuff centered around China. Busy week ahead. Don't miss the Schwab team when we come back. Take you into the bell.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights,
example trades, and stock-specific analysis featuring the smartest minds in the business.
No politics,
no noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day. Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
welcome back to Market on Close. We're less than 10 minutes till the bell right now. Let's bring in our team for the big picture discussion. Michelle Gidley is Director of International Research. Colin Martin, Director of Fixed Income Strategist at Schwab Center for Financial Research. Michelle, get us started and take us back to overnight. Let's talk a little bit more about what happened in China. It seemed to be kind of a market mover this morning. The stocks are down again. What happens next with this Evergrande scenario?
Now, China's property market issues are well known. The liquidation order for China Evergrande Group, once the largest property developer in the country, is just really the latest in a string of negative news. We've had negative news for 2 years now, and China's stock markets and property developer equities were mixed after the news. Now, it's unclear what will happen after this decision by the Hong Kong court, and how it will impact on the mainland and how liquidation will play out. But regardless, it doesn't really help homebuyer confidence, which was low. One measure that could improve confidence would be the creation of an FDIC insurance fund to protect homebuyer deposits on property. Now, moves by the government last week have given hopes for a floor in Chinese stocks. But more decisive measures, that have rumored leading up to the Lunar New Year on February 10th and the National People's Congress
6 more minutes.
on March 5th, really need to be followed through with measures to address the underlying issues in the economy. And that's primarily consumer, homebuyer, and business confidence. So right now, we just need to follow through.
You think they might actually create like a new government entity as a result of this?
Maybe. It would help. There's no
It was this morning.
right now, so, but, if we're looking for new ways of fixing the problem, new stimulus to increase supply without increasing demand, rate cuts, that's not going to help right now.
Here, though, it certainly is being bandied about. Let's talk the schedule this week. Like that wrap on China, Michelle. Thanks, Colin. Let's talk some bonds here. Today we get this rally. It seems around Treasury's funding announcement. I mean, before we get into the Fed, the rate cut stuff, I mean, do people actually care if we issue $750 versus $800 billion? Like, who cares? Like, what difference is that? The grand scheme of things.
Well, in the grand scheme of things, we don't really think it matters too much, but clearly the markets do, because we saw a lot of movement last year over the past 6 to 9 months based on the deficit and expected treasury supply. And then today, following the announcement, we did see treasury yields fall relatively sharply, around 2 to 4 basis points, pretty much across the curve, on concerns that we're not going to see this deluge of treasury supply. Over time, we haven't seen much of a relationship between the deficit and treasury supply and what we use for treasury yields. You might see some volatility here and there, but when we come up with our outlook for where we expect treasury yields going over the next 6 to 12 months, the deficit and quarterly supply of treasuries is not something that we focus too much on.
Okay. So then that brings us to the other stuff this week.
I had no clue we were going to run like this, or I'd have held them suckers.
That you're using going into Jerome Powell's, not so much a decision, but I guess the commentary surrounding it.
Yeah, what we see on Wednesday is really going to be out of the margin, because if we look specifically at this upcoming meeting, we don't get updated projections. So we don't have an idea of how the committee sees growth and inflation evolving, nor do we see any updated projections on the path of Fed policy. So we're going to have to pay attention to the statement itself, where there usually isn't too many changes on a meeting-to-meeting basis, and then of course comments from Powell in his press conference. In the statement itself, we think they'll probably remove the line that suggests that there could be more policy firming down the road, because we pretty much think we're at the peak right now, and I think there's a consensus amongst Fed officials that they don't need to hike anymore. We'll look for hints from Powell about what the timing of a potential cut would be, but we think there'll probably be a little bit of reserve there. Maybe walk back some of the aggressive market reaction we've seen over the past number of months and highlight that the job's not done yet, and they don't want to prematurely cut. And then finally, we're looking for some hints about the balance sheet, because once the Fed does begin to cut rates, it doesn't make sense for them to continue with their pace of quantitative tightening, because it's in the name, it's a tightening of monetary policy. that doesn't balance well when you're easing or cutting rates. We're looking for some clues about what conditions they're looking for to allow them to start tapering their quantitative tightening program, and then some sort of outlook on when it might end altogether.
Okay. I would say that I guess what we learned from the global central banks last week, Michelle, is that even if there isn't like a full-bodied embrace of the market's expectations, the market kind of reads what it wants based on how the market kind of pushed Lagarde and others. Is that fair?
Yeah, I mean, in early January, we had reports of an uptick in inflation globally, and that cooled expectations for rate cuts, but both the ECB and the Bank of Canada meetings were less hawkish than expected last week. The biggest change in market expectations was for the ECB, where a rate cut was pulled forward from June to April. April's meeting is live, and market expectations are a 75% chance of a rate cut in April. Waiting until June could give the ECB more confidence that it doesn't start cuts too soon and have to stop or reverse course later. Stocks could be volatile.
Yep. Well, it's one of them days where I wish I'd have just held the calls and walked away. They went to 2,900. And then stupid thought he called the reversal at a double top, and bam, I got slammed big time. I don't know what to think about that. I got to get this bearishness, I think, out of my lungs. I really thought we were going to pull back this week. I mean, have a good Monday, and then tomorrow probably be the sell-off into Wednesday. Seems like Schwab just says, we already know the storyline. And cut rates. So it was definitely would have been a great one. Then I did do a successful put call. Collected $50 on it. And then I got back in them again thinking we hit a double top, and heck, by the time we were right here, I was at 15 cents. Well, don't know what to think. I don't like to lose. I'm green for the day, that's for sure, but still yet. I did not understand big pop and then bonds come in. That really made a difference. So let's go ahead and do what I got to do and then come back and mope and try again tomorrow. So thank you, everybody.